Good morning, everybody. Good afternoon, good evening, wherever you happen to be. It's good to see you. Welcome to the final day of the Trader Summit. Hope you're doing well. My name is Jeff. I'm going to be running everything again today. I'm glad you made it back. You look amazing. Make sure to say hi on your way in. All right, very good. We'll go ahead and start again, as we always do. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are of the risk inherent in trading. Metastock and its employees shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Metastock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in the presentation today should be construed as an investment advice or the solicitation to buy any security. Patricia, it's so good to see you again. Thanks for coming. Iqbal, welcome. Welcome back. Welcome again. All right, let's go ahead and thank our sponsors. We've talked a lot about stocks and commodities this weekend. I want to say thank you. Great sponsors of the Metastock Traders Conference. They've been supporting us for so long. It's a great magazine. You can find out more about it at traders.com. In addition to that, if you haven't joined yet, you should join the Traders Forum. The Traders Forum is a great community. You can go up there. You can talk about your trading ideas, make friends, learn about the markets. Lots of cool stuff happens up there. You can find out about that at thetradersforum.com. But we are, of course, Metastock. We've been talking about Metastock all week. I might have mentioned maybe once or twice that it's been rated the best software in its price category for 32 years in a row. That can help you scan markets, test trading ideas, do forecasting, all that kind of stuff. May have even mentioned that there's a special that you can get through the end of the conference today, where if you pay for a month of Metastock, we'll give you a second and a third month for free. I'd encourage you to do that. Find out why it's been rated so highly for so long. All of the offers we're doing this week, you can find at metastock.com/conf promo. If you have questions, type them in the chat. Hello, Carvalho. Traders.com is where you can get the Stocks and Commodities magazine. Thank you for the question. Lots of that. If you have questions, we'd love to talk to you. Give us a call, 800-882-3040, metastock.com/sales chat. Also, feel free to ask them right here in the chat. In GoToWebinar, if you click on the questions button, it'll allow you to kind of put in a question. That's all you have to do. If you're watching us on YouTube, hey, make sure to like and subscribe. It helps a great deal. And make sure to say hi. And if you have questions, put them right in the chat. Okay. Fair enough. Our first guest today, kicking us off for day 5 of the conference, is a good friend of Metastock, Zaheer. Zaheer says it's such an organized, balanced approach to looking at the markets. He likes to buy stocks. I like to buy stocks that are going up. So let's go ahead and kind of get him started. Zaheer, let's go.
Hey, Jeff.
Hey, how's it going?
Very good, thank you. Yourself?
I'm doing great. I'm going to make you the presenter right now.
Fantastic.
It's going to ask you if you want to share your screen.
I
think. If not, there should be a big button.
Yeah, absolutely. I'm just trying to figure out whether I should share my screen. If I share my screen, I might. Yeah, I think I'll just share an application instead.
Okay. If you're going to be switching between Metastock and a PowerPoint, I'd recommend the whole screen. If you're just using PowerPoint, the application would be fine.
Okay, well, let me go for the whole screen. I'm just concerned about the icons at the bottom, but if that doesn't cause any issues.
That doesn't bother me too much. Yeah, I think you should be fine there. And I can see your screen. I can hear you well. So is there anything else you need?
No, I think we're good to dive straight in.
Perfect. It's your turn then. Go.
Fantastic. Right. Hi, guys. Yes, as always, thank you to Metastock. We've got a fantastic partnership, and I'm going to dive into the MET, which is really the product of our partnership. And I'm going to be talking about how to consistently identify high-performing stocks and assets. It's a challenge that everyone faces. Go online, and there's a certain methodology. Ultimately, if you outsource your your knowledge and your opinion to the internet, you'll always be underperforming. So we want to move away from that and create a system that's based around what the markets are actually doing, and then creating a portfolio that delivers not just an average performance, but totally outperforms the S&P 500 and the index as a whole. So we're going to be covering how to use MetaStock and a trend following investment strategy to significantly improve your portfolio performance to 30% a year every year. This is on average 30% a year every year. Now, just a little bit of warning, guys. Upgrade ahead. You can't unlearn this. I'm a strong believer that all endeavors have best practices. You look at your careers, they're best practices. You look at learning an instrument, there's best practices. Being good at sports, going to the gym, dieting, best practices. Bringing up a pet, if you've got a dog or a cat or a bird, you'll know that they're best practices. Investing is no different, particularly with the technology that's available today, like MetaStock, which is completely game changing. There are best practices. So at the end of this, you will have a choice whether you will continue using the practices that you're currently employing that have you underperforming, which I assume most people are, hence why they're on here, or you're going to push forward and start adopting some of the tools and the techniques that I'm going to be sharing with you today, which is grounded in truth, it's grounded in proven principles, and ultimately it's a very simple and straightforward process as well. So just a bit about my background. I have a degree in software engineering, which is where my love for all the trading technology comes into play. I worked for Oracle, Larry Ellison's Oracle, for a year. And if I'm honest with you, having a 9-to-5 working in IT back when I was 22, 23, when I graduated from university, was really of no interest to me. I loved software engineering, but I didn't like working in it. So I became a TEFL teacher, which is teaching English as a foreign language. I lived in Taiwan teaching English. I did a bit in Japan, a bit in the Philippines. Absolutely loved it. But growing up in London, money was a big part of my future and my goals. And, there's no money in teaching, not the kind of money that I wanted. So I came back to the UK, came back to London, which is where I'm from. And I got into advertising photography, which is, photography was always a passion of mine. Ended up working with a collective. There were 3 of us. And we ended up having some really interesting clients: Coca-Cola, Barcelona Football Club, Harper's Bazaar, Vogue. I mean, we did some fantastic work, and that's really where the money started coming in for me. And when the money started coming in, that's when I started looking at how to invest it. Like most people, started day trading, quickly learned the pitfalls of day trading, moved to trend following, and fast forward to today. I'm in a very privileged position. I started trend following in 2007. That's when everything really changed for me. Co-found Sublime Trading in 2018, which is our education platform. And then we had our hedge fund, the Reversy Fund, incorporated in 2023. So that's basically my journey. Something I'd like you guys to take away from this is that I'm just one of you guys, in the sense that I've never worked for a hedge fund. I've never worked for an institution or a bank. Ultimately, I started investing and trading my own money, started making it work for me, built a reputation around that. And that has ultimately led to now me having my own hedge fund incorporated in Luxembourg. Currently, we have 8 figures under management. So, we're doing extremely well. These are all the lovely publications that I've had the opportunity to speak and present for. I took to social media back when Twitter first started, 2012, 2013. That's when I started documenting my journey, and these platforms started picking up my messages, and they gave me a platform to ultimately put trend following back on the map. You can see MetaStock is a long-standing partnership of ours. Our goal was to put trend following back in the limelight, as it became a forgotten art form with lesser strategies taking center stage. If you look at performance tables going back over the decades, you will always find trend followers at the top. Mid-table, value investors. Day traders hardly ever feature on these performance tables. So you have to ask yourself, why is it that these lesser strategies get so much attention, yet trend following doesn't really get a look in? And that didn't sit well with me. So when I understood the strength of trend following, my goal was to get it back out there for everyday people to learn and use. And part of that goal of putting it back on the map is where my partnership with MetaStock has come in. Now, we've achieved this in two ways. First is through the education platform, and the other is the fund Rebacy. Now, Rebacy is a portmanteau. If you know what a portmanteau is, it's two words that you combine together to create a new word. So revolution and legacy, beginning of revolution, end of legacy. That's how the name Rebacy came about. Revolution and legacy are really the two things that we stand for. Revolution in terms of we're creating a change in the way people learn to invest, because ultimately, guys, financial illiteracy is low. We've had to, as adults, learn about it once we started earning money, going on the internet, doing our own thing, finding ways to invest our money. It's not part of the schooling system. And because we end up on the internet, as I said, most people end up underperforming because of the information, a lot of misinformation that is out there. There's some good information, but there's a lot of misinformation. So based on that, people end up underperforming. Our goal is to get people really firing on all cylinders, and then ultimately passing that information down to their kids and their loved ones. So you break that financial illiteracy loop that the system keeps us in. And that's where the legacy part of it comes in. And we've got two ways of doing that, either through the education, through Sublime Trading, or for those who want a fund management that they can rely on, that's where the Rebacy fund comes in. And instrumental to all of that is the market edge technology, is the add-on that we have created for Metastock. I mean, Jeff said at the beginning that Metastock has been voted the best software in its category for 32 years. I can tell you guys that I've tried lots and lots and lots of different software, and there's some good bits of software out there, but there's nothing as complete as Metastock and the functionality that it allows for us as traders and investors. So the market edge technology is fundamental to the success that we have achieved over the years. Now, as I said, the MET, it works, and it's the perfect legacy toolkit. What we want to do is keep the principle. This is a big believer, something I'm a big believer in, is don't reinvent the wheel. If something works, take it and make it work for you. We've done all the hard work figuring it out and decoding the market and creating the technology. All you guys need to do now is adopt this and get it working for you. You don't need to waste your time trying to figure this all out. We don't have time for that. Time is short. You want to make the money that you want to leave behind for your kids and loved ones, have a good retirement as well, and then ultimately move on from this world in peace, knowing that you've left something really powerful behind. Here are some of the testimonials and things that people have to say about Sublime Trading, Metastock, the MET add-on, and some of the results that we've achieved since last year. In careful position taking, my account is in near 100% profit. This is Yasmin. I'm reviewing it again, and I've now achieved returns of over 100%. I've had consecutive periods of 30% plus annual returns, sometimes more, while following Sublime's methodology. So you can see, based on what I said at the beginning, that we average around 30% a year, over 30% a year. We're achieving our members are getting those same returns as well. Since joining Sublime, my returns are in excess of 100%, up 40% in 2024 versus the S&P 500's 25%. So I'm going to show you guys exactly how to do this. As mentioned, if you invest in the index, you're investing in the average. What we want to do is perform better than the average, and there's a particular way of doing this. The clarity of the rules combined with high probability setups helped me hit over 100% in profit growth, something I struggled with. So you can see that this information is transferable. It's not something that is for the elite. It's not something that is hocus pocus or hidden. It's something that is very simple and straightforward. It's a brain dump from my brain into your brain. Learn it, run away with it, and start getting the returns for yourself. Let's just do a comparative, guys, just to show you the reasons as to why you want to give this a chance. Let's say you have two accounts running side by side. One is in a tracker fund and the other one is in stocks that I'm going to show you how to invest in. These are stocks that are outperforming the index. Let's say you have $20,000, £20,000, 20,000 euros, wherever you are in each of those broker accounts. You have a 20-year time horizon. Let's say you add $100 a month additional to the pot. With a tracker fund, let's be generous. Let's say you get 11% a year. We know that's generous. Typically, it's 8-9%, but let's say it's 11% a year. And let's say in the stocks that outperform the index, you're making 30% a year. With a tracker fund, you're going to end up with around $250,000 after 20 years. Which, if you look at it in isolation, 20,000 to $250,000 with a sort of very straightforward set and forget style of investing, is a pretty decent return. But don't forget, you've got inflation to take care of, there's fees to take care of. So not going to walk away with just, that amount of money. It'll be a lot less than that. But if you boost your performance to 30% a year, you're looking at $4.5 million. Now, that is true wealth creation. Even if you have to give a chunk of that away in fees, you're going to be left with large seven figures. And this is why I recommend you give this a chance, because not only are the returns game changing, but you'll be learning a set of skills that you can pass on to your kids and loved ones to continue managing and growing your wealth, ultimately having your own family office. So once you're dealing with these sums of money, guys, first of all, the confidence that comes with this is second to none. The peace of mind is second to none. Everyone is looking for a more secure future, and most people aren't anywhere on top of their goals. This will get you on top of your goals. Next, the money is all under your control. It's not locked away in schemes and then drip fed to you later on in life. With the right broker account, this is all under your control. Retirement is in your own hands. 65, 70, you may want to retire well before then. You may want to start your own businesses. Like myself, when I went down the route of software engineering, you often end up on a career path that is not really one. It's more of a path of, it's not a path of creation. It's one that's been dictated to you. So when you start dealing with these sums of money, maybe you want to go back to that business of yours that's been forgotten about. If you're a contractor, you can certainly work the hours that you want to work. Now, I believe deep down everyone's good. So the more money you have, the more charitable you can be. Often people are struggling to give away money because, people are struggling to live their own lives. But if we're all generous with more money, ultimately there's more money in circulation to give out. Then, of course, we all want the finer things in life. And why not? People who know me know I love my bespoke suits, because for me, that's just a representation of what I love about life, the bespoke life. Having my tailor come to me with all his materials, I can pick what I want, having it made for me. It's just a lovely experience, rather than going to a high street shop and getting something off the shelf. Of course, you may want to upgrade your abode. You've got a bigger family. Again, when you're dealing with large sums of money, that's all in your control. And then finally, the most important part, guys, which is that legacy element. Learning these skills and then passing on to your kids and loved ones to make sure that they are financially secure. Because be very aware, guys, the schooling system is not going to do this for you at all. It's down to you to learn this, master it, and then pass it on to your kids. Okay, so here's just a screenshot of our portfolio performance. We have a copy service. That copy service is a direct replica of our portfolio. It's based on a £20,000, $20,000 account. We started in 2023. That account has now got a running P&L of over £55,000. So it's a growth of 278% since 2023. So you can see how we, if you divide that over a 3-year period, you can see how we average those large returns. And I'm going to show you exactly how we do this. Out of those returns, 58% are winners, 20% are losers, and 22% are break even. Note how we have a nice mix of winners, losers, and break evens. What we don't want to focus on is that day trading mentality of just win, 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 win. What you want to do is focus on taking good positions, cutting out of the losers, holding and compounding the winners. It's a timeless approach. It's not about how many winners you have, but how large your winning positions are. If I told someone I had a 50% win rate, they'd consider me a bad trader or a bad investor, but the 58% win rate has returned me 280% profit. So good investors think in profit versus loss. We don't think in winning versus losing. And if you go down that winning versus losing mentality, you will lose. Everyone knows that day trading and scalping and short-term trading has a brutal failure rate. So if you want to go down that route, by all means, figure that out yourself. But for those guys who are tired of that and want a more sensible, simple, straightforward approach that does deliver long term, then this is for you. Nice mixture of stocks. Our process is to always look for the strongest stocks in the strongest sectors. If you go online, all you ever hear about is big tech, but people tend to forget that there's 10 other sectors. So the process is to have good technology that's consistently finding the best stocks, the strongest stocks from the strongest sectors. And that's really where Metastock comes into its own. So you can see that industrials really is where the bulk of our money has been. But then we've got a nice mixture of financial, commodities, consumers, IT, healthcare, consumer staples, materials. We've even got some Forex pairs in our portfolio as well. Stocks always make up the bulk of our portfolio, and that is even US stocks. I'm based in the UK, but US stocks make up the bulk of our portfolio, and that's because of the size, the maturity, and the opportunities that the US market offers every year. You simply cannot beat the US market. But then commodities, when they start moving, as metals have been moving since 2024, gold has been in our portfolio, silver's been in our portfolio. We recently cut out of those positions. Gold around just over $5,000, silver just over $100. We've been holding those positions for about 2 years, took excellent profit, and we're now waiting for the next boom in those metals and then add them into the portfolio. But we've also got aluminium, we've got palladium, we've got platinum, all in the portfolio. Forex, we've got, as if you guys are keeping an eye on the currency pairs, we've got some yen pairs in our portfolios, we've got a couple of dollar pairs in our portfolio, but stocks will always make up the heartbeat of our portfolio, and that's simply because of the size and the maturity of the markets and how well they trend each year. Just a sort of example of how the portfolio will look. We've got over 100 positions in our portfolio, but we've only got something like 20, 25 individual positions in our portfolio. And that's because we take positions, small positions, and then as those positions start returning a profit, we keep buying more. So if you look at an amateur's portfolio, an amateur may have 20 individual stocks. But if you look at our portfolio, we may have 4 individual stocks, but 5 positions running on each. That's because we've got 4 very good stocks in our portfolio, and as they return a profit, we just keep on buying more and more. Compounding is the true secret source to wealth creation. So focus on quality rather than quantity. Cut out the losers, hold and compound the winners. Guys, you know the expressions. Cut your losers short, let your winners run. But the part that people often miss is compound those winners. Stay true to the proven principles of long-term investing. If you fall into the trap of short-term trading and day trading, you're going to end up regretting it down the line. You've got to learn quickly that the proven principles always hold strong. But with technology now, it's completely chromed up. You can do so much better than what our grandfathers and fathers were able to do. Metastock has completely changed the game for us. So here's some of the stocks that Metastock has found for us through the add-on, the MET that we have created, some of the filters that we have created for Metastock. Note the names of these companies. Being here in the UK, some of the stocks, there's 11,000 companies in the US stock market. So some of these companies that get found by Metastock and by our scanning process, I've never heard of. Being here in the UK. For US guys, you may have heard of these companies. But when you look at these companies and you go back and look at their charts, these companies have been around for 30, 40, 50, 60, 70 years. These are real behemoth companies that have got an excellent performance history of delivering for their investors. Amphenol, for example, has been in our portfolio since 2023. It's up over 200%. BWX Technologies, there was a lot of talk about the energy behind running AI. BWX Technologies is one of those companies. It's up 146% since 2023. Cencora, which is a healthcare stock, is up over 200%. Nvidia is up, of course, 1,600% since the low of 2022. It's going sideways. It's going through a bit of a correction, but a massive boom. We want to be able to turn these hype companies like Nvidia into a part of your portfolio when the time is right, not just because everyone is talking about it. If you had bought big tech over the last year, you'd be underperforming because big tech hasn't done much apart from Google, which has performed fairly well. Big tech in general has underperformed. So it's not about buying into the narrative about big tech and trillion-dollar market caps. It's about investing in companies that are trending and that are the strongest stocks in the strongest sectors. And that doesn't have to be big tech. McKesson, another healthcare stock, up 250%. So what do these stocks have in common? They are trending stocks that are outperforming the S&P 500. So what does that mean? Well, the S&P 500, since the 2022 low when the recovery came in, has moved up over 90%. I think it peaked at just 100% and it's going through a bit of a correction at the moment because of that 7,000 round number acting as a resistance level. But it's moved up over 90% since 2022. If you look at all the stocks that I've just shown, Amphenol 200%, BWXT 146%, Cencora 202%, Nvidia 1600%, McKesson 247%. These are all stocks that have outperformed the index. The index has only moved up over 90% in the time that all of these stocks have moved up triple digits. In fact, Nvidia has moved up 1600%. What do these stocks have in common? What is it that makes them so powerful? Well, I've broken it down. One thing that I learned in my early days, like most people, I fell into the trap of thinking that value investing was the way forward because Warren Buffett, great man, you know, he put value investing on the map. But when you go down the route of value investing, unless you have the funds of Warren Buffett, you're not going to grow your account to the rate that Warren Buffett has grown his account. Because what tends to happen is that when you buy a stock that is going at a discount, another word for value investing is to catch a falling knife. And I'm sure you guys have all experienced this. You bought a stock thinking it's at a discount and it just keeps on dropping. It keeps on dropping. It keeps on dropping. Just getting back to break even is a challenge. So that didn't make sense to me. So when I came across trend following made absolute sense to me. Trend following is about finding stocks that continuously move up like a flight of steps. They move up, they flatten out. They move up, they flatten out. They move up, they flatten out. A stock that has a history of moving up like a flight of steps. We want to identify all of those stocks at any moment in time that are always moving up. They're breaking out from that flat period and they're starting their next uptrend. So all stocks, all trending stocks move in the same way. They all follow what I call the 4-phase sequence method. 4-phase sequence method. Phase 1 is a proven performance history. If a stock has moved up 100, 200, 300% in the past, then it's very likely going to do that again in the future. So that's one of the filters that we look for, stocks with proven performance history. Then we want a consolidation base, stocks that have gone sideways for 3 to 6 months at a minimum. The longer the consolidation, the bigger the breakout. Again, you will have heard this, yet most people seem to be able to regurgitate it. They don't really know how to execute it. So we want to move away from just parroting these expressions and we want to learn how to execute them. So we want a base of at least 3 to 6 months. The longer the consolidation, the bigger the breakout. We then want that consolidation breakout. Now, we don't want to jump in on that first breakout because that first breakout can be a fake breakout. So we want to have a bullish flag formation. A bullish flag formation is when it moves up, it moves back, and then it moves up again. This is called a bullish flag formation. If it moves up and then moves down and moves back into consolidation, then that's a fake breakout. Once that uptrend is confirmed, phase 4 is the new trend, and this is where we want to get in. So all the stocks that are in my portfolio, all the stocks that have accumulated to 280% profit since 2023, those stocks are all in phase 4. And my typical holding period is 12 to 18 months, often much, much longer, before I then consider tightening stop losses, rebalancing the portfolio. So here's an example, McKesson Corporation, phase 1. It moved up from 2009 to 2015. There was a massive boom in McKesson's performance. Then there was a sideways period, 2015 to 2022. That's a 7-year sideways period. Phase 3, it broke out in January 2023. And since then, it's been up trending. Phase 4 up until today, February 23 up until the present moment in time. And that's one of the stocks that's moved up, I believe, 250%, 300% in that period. So we want to be able to apply this logic across the board. Now, to do this manually across thousands of stocks, thousands of commodities, it's an impossible task. So we want technology to help us do that. So how do we find these stocks? Well, we use a 2-tier process. Good investing is simple but not easy. You've heard that expression, guys, right? Good investing is simple but not easy. The best techniques are simple to learn and execute, but it's being consistent with those techniques that people fall short, because ultimately people fall for that shiny penny syndrome. They don't have the patience to allow the investments to come good. They don't allow the compounding effect to kick in. They get impatient, they want money, and they move away and they start chasing money through other processes. You have to be consistent. It's consistency of doing the right things that is rewarded. The best techniques are simple to learn and execute. Following the process without deviation is where people fail. Simplicity is the ultimate sophistication. You know this expression, Leonardo da Vinci. So here's the two-tier process. First of all, we use a professional grade scanner. We use Metastock to go through 20,000 assets. That's stocks, UK stocks, US stocks, commodities, currencies. And we do this on a daily basis. We click a button. We have a set of filters that we created. We click a button. The scanner goes to work. Within 5-10 minutes, it will give us a much more manageable list of 50 to 500 assets. Now, you're looking at that going, yeah, 500, that sounds quite big. There is a way of how we quickly narrow that down to a much more manageable list. Here's the thing, though. On average, we will get somewhere between 100 to 200. That is an average day. On a particularly bullish day, for example, when Donald Trump was re-elected, we had a big gap up in the market, a big bullish day. I believe there was something like 650 breakouts on that particular day. On a quiet day, it will be less than 100. On average, we get 100 to 200 stocks to analyze on a daily basis. Now, you may not want to do this on a daily basis. You may want to do it once a week, in which case you want to do this at the weekend when the markets are closed, where you can settle down for a couple of hours, do your analysis, manage your portfolio, and then because you've done that, Monday to Friday will literally take you minutes a day because you know exactly what you're looking for. Now, the scanner, or what Metastock call the explorers, are programmed with what we call our blueprint. These are our parameters that we look for these high probability stocks. Now, one of the parameters is that Metastock will be scanning for all the stocks that are moving from phase 2 to phase 3. So a very useful scan, because you don't want to sit there, as I said, manually going through thousands of stocks. It's an impossible task every day, trying to find all the stocks that are going from phase 2 to phase 3. What we've got is a scanner, explorers, that will do that for you, and it will give you a much more manageable list. And what the scanner is doing, it's finding the strongest stocks in the strongest sectors. Remember, technology is just one sector. There's all these other sectors that have excellent opportunities every year. And that's because, as I mentioned at the very beginning, money flows between sectors. It could be in communication services, real estate, technology for 12, 18 months. Then the money leaves and it goes into healthcare and energy. Then for 12 to 18 months. Then the money leaves and it goes into materials, consumer discretionary, financials, 12 to 18 months. Then the money leaves and it goes into consumer staples and utilities, and round and round and round you go. This is the art of good investing. Everything stays constant. Once you understand about entry points and stop losses and compounding and risk management, they all stay constant. What changes is the stocks that you're applying to. And again, that doesn't change every day. That will change over a period of time. So you have to stay consistent with the process and let the stocks play out. And that is how you then outperform the index and achieve significantly better returns over 10 to 20 years. Our job as investors is to find the strongest trending stocks from the strongest sectors. So let's switch to Metastock. Now, for those of you guys who are unfamiliar with Metastock, this is what you are presented with. At first, it may seem quite unassuming, but don't be fooled, because in the top left corner, Metastock have recently upgraded their interface. It looks really nice now. You see a number of tabs on the left-hand side. If you start with the Explorer here, which is the third tab, this is where the magic happens. So we'll just let that open. And I have favorited our, if you ignore the top two, and if we focus on these 4 explorers here. So you'll notice that we've got explorers for long setups, for large cap markets, so US stocks, for example. And then we've got a long explorer for medium to small cap markets, so UK and Indian stocks. We have a growing community in India, so they will use the appropriate scanner for their market. And then we've also got scanners for shorting positions. So we've got scanners that will be continuously pumping out all the best buying opportunities for small, medium, and large cap markets. And we've got scanners that will continuously be pumping out the opportunities, those phase 2 to phase 3 stocks for shorting opportunities for small, medium, and large cap markets. So we've got everything covered. Now, in terms of the actual markets, if we go down to the US market, these are the markets that we like to scan. And you can see that NASDAQ has 5,299 stocks. The NYSE has 2,436 stocks, and the Amex has 274 stocks. So if you add that up, you're looking at 10,000, 11,000 stocks. A phenomenal amount of stocks to go through, and this is really how you want to start, guys. An analogy I like to use is like a falcon. A falcon will soar looking down, and then when it sees its feed, it will come down and feed, and then go back up again. It will soar, it will scan, it will come down, and it will feed. The reason why people often underperform is because they have a very small initial list. You're often encouraged to just focus on the euro dollar, which is a crazy bit of advice. You're often told to get familiar or fall in love with one asset like Apple or Tesla. Again, it's a nuts bit of advice. What you want as an investor is to have a global list that covers all the stocks, commodities, and currencies. You then want to be soaring, looking down. You then want your scanners and your analysis telling you, well, look, that's where the money is. You then want to come down, you want to feed, and then once you've had your fill, go back up, go back to your global list, and then come back down and move to where the next set of money is. And that is the true hallmark of a good investor, having a good global list of assets and then continuously coming down to where the money is, and then rebalancing, feeding, rebalancing as and when is needed. So we choose our lists. We then choose the appropriate explorer. So right now the market is very much bullish. So if you are in the US, when we're scanning the US market, we use the large cap explorer. And for small to medium, which is the Indian and the UK market, excuse me, that's the wrong one. That's that one. We use the buying scanners. We then click the start exploration. Let Metastock do its thing. I won't do it on here right now because it needs about 5-10 minutes. Once the scanner has gone to work, it will then give us a list and say, right, these 100 stocks meet your criteria. And then what I do is I save those lists depending on the market that I am looking at. So you can see here, NSE, these are all the Indian scans that I have done recently. If you look at the UK market, these are all the recent scans, and then the US market as well. If you have a look at the US market, 144, 216, 152, 244, 52. So out of over almost 11,000 stocks, you can see the list size that is being found on a daily basis. Now, remember, February is one of the weakest months of the year, typically. And so a much smaller list of stocks will be being produced. But note that stocks are still pushing up and breaking out. So what does that tell you? When everyone else is screaming market top and the market's coming to a crash, there are still stocks that are pushing up and pushing ahead. And those stocks, if you get in them early, will absolutely boom when the market as a whole starts pushing up and the S&P breaks out and big tech starts following. So this is the real art form. Start taking small positions now. Some of them will fail, no problem. If you're risking 1%, which is what we do, you cut out of losers. When they start returning a profit, start holding, start compounding. Very, very simple and straightforward. Okay, I'm just going to switch back to Metastock. Now, once we have scanned the market, we then compound and maximize profit from winning stocks and assets. So what we do is we use bespoke charting tools. We take those 50 to 500 stocks and assets, typically around 100 to 200, and we want to find the best 5, 10, 15, 20 stocks for the portfolio. We want to focus on quality. We don't want quantity. And we do this through manual analysis using bespoke charting tools and a blueprint checklist system that we have created. Now, the typical time commitment is 1 to 3 hours every day. The market is in flux. It's moving daily. So if you have the time, you want to do this on a daily basis. If you don't have the time, you want to do it at least once a week. And the best time to do that is at the weekend. This is what our charting system looks like. We have 6 monthly indicators, we have 4 weekly indicators, we have 6 daily indicators, and once those indicators are met, we have an execution time frame. So every single asset, every single stock that makes it into our portfolio has to meet a 16-point checklist system across the 3 time frames: the monthly, the weekly, and the daily. Notice I'm using the higher time frames. I'm not going down to intraday time frames, because intraday time frames enters day trading territory, and day trading territory, as we know, is very difficult. It has a brutal failure rate. Trend following tops performance tables. So what do we gravitate towards? We gravitate towards what works, what's got a proven history of working, and we want to adopt those principles. So the scanner, step 1, tier 1, the scanner will be scanning for part of the 16 points checklist system. The manual analysis will go through the remaining elements of the 16-point checklist system. So the 2 tiers, the tier 1 and the tier 2, go through that 16-point checklist system together. Note that it's a combination of technology and human discretion. Relying purely on tech, relying purely on AI, again, will have you underperforming. The most powerful muscle on the planet right now is the human brain. And it's being given away to AI because people haven't developed their own skills, their own understanding, and they're outsourcing it to first the internet and now AI. And that's a dangerous position to be. You want to learn this, and you want to learn how technology can aid your decision rather than give up your power and your control to technology. The sweet spot is in the middle where AI and human discretion meet. So once again, guys, every asset that makes it into our portfolio goes through a 16-point checklist system. This is what it looks like. This is our edge. If you cannot define your edge, you don't have one. And if you don't have an edge, you will get eaten by someone who does. I'm going to say that again. If you cannot define your edge, you don't have one. And if you don't have an edge, you will get eaten by someone who does. So if you're underperforming, if you're consistently losing money, it's because you have no edge. And there's someone out there who does have an edge who's taking money from you. So we need to reverse that. So this is our edge. As I said, we have 6 indicators on the monthly, 4 on the weekly, 6 on the daily. That is our edge. When that edge is met, we take a position. If the edge isn't met, we stand aside. Very simple, very straightforward. The checklist defines our edge. Edge equals high probability stocks and assets. If you cannot define your edge, you don't have one. If you don't have an edge, you will get eaten by someone who does. Guys, let's not allow this to happen anymore. We've got to reverse this. The MET is our edge, and it must be yours too. As I said, everything that we have done up to now in terms of the education, in terms of the fund, the MET is fundamental to the results that we've achieved. So let's switch to Metastock again. Excuse me. Right. So once we have gone through our scans, we then save the list. And we can then, let's say this is the list that we have saved from yesterday's scans. I've just got some examples here. And we're going to start with the SPY. So what we do is we select the chart and then we click open chart. When you click open chart, it will open up into this 4-screen setup. Just like I showed you earlier with the 16 points, we have the monthly in the top left, we have the weekly in the top right, we've got the daily in the bottom left, and we've got the daily in the bottom right. Those 16 points are built into the scanning and the charting system that we have developed. So let's start with the monthly time frame. What I like to do is start with the monthly and work my way to the weekly and then to the daily, because the monthly is the bigger picture. If the weekly is matching the monthly, all good. If the daily is matching the weekly, all good. We have what is known as trend alignment. If there's no trend alignment, we stand aside. Now, I don't invest in the S&P 500, but I use the S&P 500 as an indicator of what the market is doing. So I always look at the monthly time frame. And we know that the S&P has been bullish since that 2002 low. overall is moving to the upside. This green line is the highest point of last year. Right now, we are waiting for the S&P 500 to move through the highest point of last year. You can see that it's been struggling, which is perfectly acceptable, for a number of months to break through the high of last year. What we're looking for is these big green bars that we had post the Trump tariffs recovery. May, June, July, August, September, October, massive run. Of course, after every run, it consolidates, it breeds, and we're now looking for that continuation to the upside. So while everyone here is screaming market top because they've got nothing else to do, we're waiting for the market to break out and continue to the upside. What we have are our indicators. When the market is bullish, it will tell you here, based on the indicators built into the system, that the market is bullish. With the MET, you will get a very well put together manual, and it will explain everything to you. This isn't a black box system. All our indicators, all 16 points, are explained in the manual, so you'll know precisely how to use this rather than just blindly follow along. What else I like about the MetaStock functionality is that if you go to view and you go to expert commentary, we have built in the commentary to be your voice that guides you along. So you can see here that there is an inbuilt commentary that's telling you exactly what is happening bar by bar. So right now you can see that the commentary is on the current bar. There's a upside down triangle. If I move to the previous bar, the commentary changes. You can see it's a green triangle, upside down triangle. The commentary changes. So we've built the commentary to guide you with what is happening bar by bar, which is absolutely phenomenal. It's a great bit of kit. So once the S&P 500 starts continuing to the upside, the ribbon here at the bottom will say bullish, and that's what we are currently waiting for. It's currently flat at the moment, and I'll show you why else it's flat in a second. Looks like this has gone off a little bit. Yeah, it's gone off a little bit. Let me just open up the weekly time frame. So you can see that our trend filter is green. We've got periods of green, gray, and red. The weekly time frame has been green. So we are very much in a bullish trend, and you can see right here that the weekly time frame overall remains bullish. So our ribbon, based on the indicators, the 4 indicators built into this system, is telling you that the S&P 500 is bullish. And if we come down to the daily time frame, you can see that the daily time frame, the ribbon doesn't say bullish. So that's because if you look at the trend filter, red, gray, green, you can see how at the moment the trend filter is gray. That's because the daily has flattened out. So what we're waiting for is that trend filter to turn green, for the S&P 500 to break out above its all-time high and start continuing to the upside. And that is when the market has continued its bullish phase. Right now it's flat. So you can see how by understanding how to read the S&P 500, we no longer get caught up in all the noise around market crashes on the internet, and we have a very straightforward approach to aligning with the market. If you align with the market, you make better decisions. Also, a very useful feature in the daily in the bottom right is the bars turn blue. When the monthly, the weekly, and the daily are all aligned, the bars will turn blue. You can see that the bars aren't blue at the moment, and that's because the S&P 500 has flattened out. And that's perfectly acceptable. It's February, one of the weakest months of the year. It's going through a period of consolidation. What we're waiting for is post-February, March, April, May, June. That's when we have a run up until summer. And then the summer periods, the markets go quiet again. And then post-summer, September is a weak month. And then October, November, December, we tend to see a rally. There's that seasonal movement to the stock market that people tend to very much overlook. So let's have a look at a stock that is leading the pack. When I say that we want stocks that are outperforming the index, one of the stocks that has been in my portfolio for 2 years now is Deere & Co. And Deere & Co has now broken out from its sideways phase. It's setting record highs and is outperforming the index. So this is a stock that you absolutely want to consider. So if you look at what it's doing right now, it's above last year's high. You remember the S&P was below last year's high. Deere & Co is above last year's high. It's leading the index. We have the green ribbon telling us that the monthly time frame with all its inbuilt indicators confirm that this time frame is bullish. If we go to the weekly time frame and open that up, based on the 4 indicators in the weekly time frame, you can see that the ribbon is bullish, the trend filter is green, the trend has been confirmed on the weekly time frame. If we go to the daily in the bottom left, and if I open that up, you can see that the ribbon is bullish. We have a bullish trend in phase. And if we go to the, if we go to the daily in the bottom right, the execution page. Now the daily in the bottom right, the bars are blue. So the monthly, the weekly, and daily are aligned. The bars have turned blue, telling us that there is a trend in play. And the trend has been in play since the 3rd of February. This is the daily time frame. Now, what we have on this time frame are our entry points. If you look at the green diamonds, these are high probability entry points. We also have circles here. These are low probability entry points. So the software is producing signals and saying, hey, look, this is the start of a trend, but we don't know if it's a real trend as yet. This could be a fake out, but these are potential low probability entry points. But once the trend has been confirmed, the bars will turn blue and the entries turn from circles to diamonds. And these diamonds are telling you buy. So if you buy here, then you can buy more here. You can buy more here. So these are compounding opportunities. And then with each diamond, each entry point, you get an entry point, you get a stop loss, and you get a compound level. So all you now need to do is understand, based in the manual, why is the entry point here? There's a formula. Why is the stop loss here? There's a formula. Why is the target level here? The compound level here? There's a formula. That's all explained in the manual. All you then need to do is transfer these values into your broker account. Once you've transferred this into your broker account with a 1% risk, and you've done this across 5, 10, 15, 20 stocks, you let it play out. Hold the strongest, cut out the weaker, and then keep on compounding the strongest performers. There's other indicators here that help you identify entry points. Green histogram is a strong entry point. Gray is a neutral entry point. Red is a weak entry point in a bull trend. So we have everything covered here, from the analysis all the way through to the execution. Because if you're just focusing on analysis, guys, which is if you're just using what I've shown on the monthly, the weekly, and the daily in the bottom left, that's just analysis. You don't want to be an analyst. You don't want to be on the news talking about, right, S&P is here, it's going to be here next year. That's analysis. What you want to do is take your analysis and translate that into profit. So you need a strategy, and that's where the daily in the bottom right comes in. This is our strategy time frame that has all the criteria that you need to turn your analysis into profit. And then the one final element, and I'll move, because DE is a new stock, I'm going to move to STX, which is Seagate Technology. This is a stock that has performed exceptionally well. And again, it's a tech stock, but how many of you guys have heard of Seagate Technology? Hardly. Probably not many of you, and that includes me, until I discovered it because of the analysis and the scanning that we do. Seagate Technology has been trending since May 2025. It broke out at around $117 and it's now trading at over $400. Massive move to the upside. And if we go to the daily in the bottom right, you can, and if I just compress the chart, look at the trend, guys. Look at the bar. The bars have remained blue all the way through the trend, apart from certain periods where it's flattened out, gone sideways. The red line underneath, that is the trailing stop loss. So you can see that the trailing stop loss has not been broken since we entered in May, June of last year. You can see how well our trailing stop loss, our exit management is doing. And that, again, removes one of the most important questions which people struggle with, which is, well, how do I exit? All of that is covered for you, from the analysis all the way through to the exit management. Okay, I'm just conscious of time, so I'm just going to quickly switch back to meta stock. So in short, the MET finds trending stocks that are outperforming the S&P 500. So this should all make sense to you now. The S&P has climbed over 90%, but you can see now why we have invested in these stocks that have performed better than the index. And we've done that using our 3-step blueprint. First, making sure that we're investing in the right market conditions. That's where the S&P 500 comes in. If the S&P 500 is bullish, the stock market is bullish. We then identify the top assets to invest in. That's where the explorers and the analysis comes in. And then we have clarity on how to invest. And that is where the strategy comes in, which is that daily time frame in the bottom right. And that will remove your portfolio from looking like this, which is a day trading portfolio, which is really all over the place. I mean, even just looking at an image like this makes you feel funny because it's just a mess. It's red, it's green, it's orange. There's no simplicity or clarity to it. And instead, what you have is a portfolio like this, where you focus on quality. You cut out of the losers, which are the red ones, break evens as well. You cut out, which is the orange one, and you just focus on the winners and you keep buying the winning positions. And this is the true hallmark of good investing. Day traders focus on winning versus losing. We, trend followers, investors, we focus on profit versus loss. So this should now make sense to you. I've explained the whole process of how we focus on winners, even if we have losers and break even, how we return 278% profit, even though we only have a 58% win rate. This should make sense to you now on how we diversify across the strongest stocks and the strongest sectors, why the US stock market always makes up the bulk of our portfolio, but commodities and Forex, we then take advantage of to diversify when necessary. Why we focus on quality rather than quantity and then compound just the quality positions. This should all make sense to you now in terms of how we push our performance from the average to outperform the average. And again, all of those goals and the visions that we have for our future, that all becomes a reality. They become dates. They become goals with deadlines, ultimately. They're no longer just fantasy. I'm going to just leave this on here. If you guys want to recap, it's ultimately a breakdown of everything that I have gone through today. Ultimately, the most important part is train your loved ones to carry on your good work, a legacy to be proud of. With the MET, you get 4 explorers, 16 expert advisors, 11 bespoke indicators, 1 template, that 4-screen setup, detailed manual explaining everything, and a support structure from ourselves here at Sublime Trading and Metastock. And when I say Metastock has an excellent support structure, I absolutely mean it. It's one of the reasons I love working with Metastock is how quickly issues and problems get resolved. The MET is a one-time offer of $1,497. It's yours for that amount. We have some bonuses, a one-to-one onboarding call with myself. I love to know who has bought our MET. We have a private community to discuss the setups and a live bootcamp recording and future live training, all included in the bonuses. On top of that, guys, bonuses you, of course, don't pay for. The 1497, we have a one-time offer of $997. All of that one-time offer, $997. Now, what the MET actually does is 30 plus years of combined experience between the co-founders, so you don't have to waste time figuring this out yourself. You'll save thousands in trying to create your own system. You'll save endless hours trying to create this yourself. You've got a proven system which we use for our hedge fund. You have peace of mind, your future is in your hands. And as I keep on saying, you have a system to pass on to your loved ones, which is your legacy. The MET is the edge that you have been seeking. So the truth is, the tried and the tested and the safe and simple will make a bigger long-term impact on your financial success and stability than anything else. And that may sound boring, but here's the thing. The reality is there's nothing boring about the wealth you create through compounding gains. So there you have it, guys. That's me for today. The MET, $997, everything included, one-time offer. Jeff, over to you.
Oh, okay. I'm not sure where. Oh, there's Jeff. All right.
Yeah.
Well, there's Adrian. Hello, Adrian.
We can't see
your
you.
camera's on. You may not know. We'll introduce you in just a minute.
All right. Can you hear me okay, Greg?
Yes.
Okay. Let me go ahead and share my screen. Thank you, Zaheer. I really appreciate that.
You're welcome.
I'm going to go ahead and do this, share this, and just we'll talk a little bit about what's included in the MET package. So, Adrian, we can see your camera. You might want to turn it off for a minute until we're ready for you. But you're welcome to hang out too. That's cool. All right. So in MET, there's quite a few templates there's quite a few things that are included. I love the piece of kit, as Zaheer would say it, that he's put together for this. And just the organization that goes into it, the fact that it's trend following, the reasons that it's trend following, all that kind of stuff. So he did a really good job of talking about the strategy, kind of how it looks on the chart. Of course, it has all the indicators that are required to run it, all the several different expert advisors to kind of help you put everything and pull everything together. And then, of course, scans to help you find those stocks that are kind of in those good trends that are going to last and last and last. So all of that's included. The other thing that he actually put together as part of this is a 2.5-hour boot camp where he walks you through using the and taking advantage of the MET product. It's a fantastic product. People really, really love this one. So normally, if you just you can call up and you can order this anytime you want to, and the retail cost on it's going to be $14.95. Here, as part of the conference, you're going to get a special price of $9.97. That's going to include a boot camp that we were talking about. If you need a copy of Metastock, you can get it. And of course, we're going to back it with our money-back guarantee of 30 days. So you can try it out, you can make sure it's going to work well for you. If you don't like it, you can get a refund. This has been a very popular, very well-accepted add-on. So go to metastock.com/sales chat. You can also go to metastock.com/sublimemet. I knew there was a web address there somewhere. You can give us a call, 800-882-3040 if you want to as well. Be happy to answer any questions you've got about it. So the web address for this, I'm sure Greg is getting into the chat, is metastock.com/sublimemet. So thank you very much, Zaheer, for that. I really appreciate your kind of coming, all the work you've put into putting this together. A great job.
Thanks for having me, Jeff. Thank you.
Of course. Thanks again. All right. As we move on to the next slide, I want to say thank you, or the next speaker. I want to say thank you for the Stocks and Commodities magazine for sponsoring the event. It's a great magazine. They've been great partners over the years. They've been publishing since 1982. Technical analysis articles on how to use technical analysis, different techniques, all that kind of stuff. If you get a membership, traders.com, you get a physical magazine delivered to your door if you're in the US, digital anywhere else. You also get the digital no matter what. You have access to their entire archive, all 17,000 articles. So pretty cool there. All of the offers, including Sublime MET, that we've been talking about here at the conference are available if you go to metastock.com/conf promo. You can also go to metastock.com/sales chat, and you can call 800-882-3040. Mr. Greg Lewis, should we do a prize?
Yes, Mr. Jeff Gibby. Let's do that.
All right. I'm kind of feeling extra generous today. What do you think about that?
Really?
Yeah, I mean, I don't know what it is. Maybe I had a good, healthy breakfast. I don't know. Maybe I spent some extra time on the cycle. I don't know. We're going to give them both Steve Bigelow books right now. So Steve Bigelow is a big friend of Metastock, great trader, probably one of the most prolific traders on candlestick patterns and candlestick analysis, and understanding the psychology of trading through the use of candlestick patterns. We are going to give away 2 of his books, High Profit Candlestick Patterns and Eliminating Emotions. So, and, are you ready for this?
Yeah, sure.
I'm running out of these. I haven't been giving away too many of these. But since we're on the last day of the conference, we're going to go out in style. I'm going to throw in a mouse pad. The Steve Bigelow.
That is a limited run. Those will not be reproduced.
No.
Once they're gone, they're gone.
It's kind of cool. I'm trying to keep them because they're white, and like anything that's white that you have your mouse on.
Yeah.
And if you spill coffee, I don't know if you spill coffee, but I
little
spill
critters.
coffee.
Yeah, they definitely are.
So all 3 of those. And I'll probably do that again next time. So, Greg, what I need from you.
Yes, sir.
1, I just need a number. The number today is anywhere between 2 and 6,952.
All righty. According to Google Random Number Generator, that is 2,772. 2772.
Okay. That's Jack T. Jack didn't put an email address or a country when he registered, so I don't have his country, but he does have a Gmail address, so I'm sure that narrows it down a little.
Sure. I should mention before you get back to Adrian, and I appreciate Adrian's patience, I am having a problem accessing our YouTube live stream. We appear to still be streaming, but I've lost access to it. So if somebody's having problems with the YouTube stream, I'm working on it, and otherwise we're fine on GoToWebinar. Jeff,
It appears
and
to
Adrian,
be
take it away.
okay to me.
Yeah, I don't know what's going on, but
Okay.
it's shut down. It just says not available right now.
Oh, maybe it's related to those YouTube problems they were having earlier. But
The other day they were having some big YouTube problems. Yeah, so we'll see.
Yeah. All of
sure
YouTube went down.
I
heard you had to get a book out.
Google just runs the internet. It's not a big deal.
All right, let's move on to our next speaker. Thank you, Greg. I appreciate the assist.
Mm-hmm.
And I will let you get back to the business of figuring out why YouTube's not working. Our next presenter is another good friend of Metastock. I love his patterns. The patterns that he looks at are all named after baseball analogies. Adrian is such a great guy, though. He's a great technician. And I don't know really how to say it more than that. He's very straightforward. It's got, and I love having him on here. So, Adrian, let's go ahead and get you started. How are you doing today?
I'm good.
I am glad.
I'm counting on the brand new interface. So every time I log into anything, it's recent updates have changed everything you've ever seen in your life. So
right.
Here I am.
When you had some problems getting in too, which made it a little bit more tricky. Let me go ahead and make you the presenter. That'll ensure that you should get a message that says share my screen. I can see. Oh wow. I like the image. Adrian, I can see your screen. I can see you. You look amazing as usual. I'm going to get out of the way. You're going to go. Let's go.
All right, folks. So today I'm going to do something a little different. So I love doing these Metastock events. And the cool thing is there's this library of them now. And I try to do something a little bit different every time. And this time I want to focus on some of the more discretionary stuff and the psychology behind it, because we really find that the psychology is the thing that gets people the most. It trips you up, and you can not even be aware of what's going on, and boom, it's in your face, and it messes you up. Right, messes up your trades, and especially when you're doing discretionary trading. So a lot of what we do is based on very concrete plans, things that are laid out ahead of time. Jeff will talk about the plugin for Metastock for the around the horn patterns. And as he said, those are based on a baseball analogy, and really everything about those goes back to research that we did years ago on the New York Stock Exchange. So Julie and I are both psychologists. We both have PhDs in psychology, organizational psychology, behavioral finance. And the research that we did was all about behavior of stocks in terms of how the people associated with them behave, right? So it was down on the floor of the New York Stock Exchange. It was at that time entirely a specialist system. And the gist of the research that we were doing when we were working on our PhDs was, okay, there's somebody on the other side of every trade. That person has a psychology. And at that time it was one person. So one person was the one making the market in any given stock on the NYSE. Now, of course, we've got ECNs and lots of liquidity, lots of market makers bringing liquidity to the markets in the NASDAQ on the NYSE, but it's still pretty much the same. You'll find stocks have personalities, especially the ones I'm going to talk about today. We decided back then that we were going to develop this model, and the model is all about market cyclicality. And the around the horn is literally, it's a baseball analogy, but it's also a cyclical thing of how the market moves around the horn and the different patterns that emerge over time. And what is let's say the psychology of the market when you've got a fastball set. Fastball is an expansion of range, expansion of volume. It's when an institution is trying to get a big order done, and they can't get it done on day one, and on day two, how are you going to capitalize it? Infield fly is a big reversal pattern. So when a market exhausts, usually after that fastball setup, how does the last guy in respond when the market starts ticking back through his buy level? And these things were important factors in influencing how markets behaved back when we started, and they're still big boys now. So I've written a lot of things over the years about trading, about trader psychology, about what makes markets do the things they do. And over the last 30 years that Julie and I have been trading, I'm going to say not much has changed. You've got different venues. So, we're not focused anymore on, we have to know exactly how to route our order every single time we put an order out there. When we started trading, it was, do we want to go through the small order execution, or through SOs it was called, or do we want to go through Instinet? Do we want to route to ARCA? Do we want to route to the island? And, back then, that was the popular topic, was how do you sort of spoof the system? Now, most things are smart orders for people. People don't really fool too much with trying to direct their orders. But there's other things that trip you up now, right? There's other things that are going to affect the efficiency of how you get the order off, how you get the order out to market, and then ultimately how you're going to feel about the order after it's out there. So a lot of this right now is we work with a lot of traders, and what we found pretty much universally is it ranges from you're super confident and you love the approach that you have to the market, to whether you made money or lost money today, you're going to need a hug. That it just puts you in this weird position of lots and lots of decision making that you're uncomfortable with, versus trying to figure out a way to get into this that puts you in front of the opportunities and just lets things play out. And that's very much where we are. So our thing is all about just letting things play out. So everything that I've done over the years, around the horn, that's still out of print. I promise it'll be back probably this summer. New version with a heavier emphasis on psychology. And everything that we do to this day is based on that stuff, and being able to go and put together a trading plan. And the trading plans that we put out there are very much about set it and forget it, and try to be able to. So if you're using the Metastock scanner, you already know it gives you a list every night of, you have 20 or 30 stocks to look at. You go through, you set up the trades, you figure out which ones are the best ones, I guess, the ones that have the best reward to risk ratio, the ones that have the best sort of probability for success as you're looking at the patterns. And you put together a trading plan, and that trading plan is then sort of bulletproof the next day. It's going to get you in, and it's either going to get you out at a target, at a stop, or at one of the money management rules in between. So it's very straightforward stuff. It's always been the easiest thing that we do. We also do a lot of trades that are based on opens and pre-market activity and what's going on with the big liquidity names. So with Microsoft, Oracle, Apple, Nvidia, Tesla, Amazon, right? Google, the Magnificent Seven, Meta, anything that's out there and just really, really liquid, we're trading off the open. Well, that's a different animal. And it's something I've never really talked about at one of these Metastock events, so I thought it's a good time to do that here. You can go and look up all the how to construct a trading plan videos in the Metastock archives, and you'll see that there's just a litany of stuff on all sort of 7 of the strategies that Julie and I employ. Now they all work for us because they fit our psychology. They fit our psychology, even though they're very different trading styles. because we developed them, right? So they came from our psychology, so they fit our psychology. And what we try to tell our guys is, you know, it's not true. You can't pound a square peg into a round hole, no matter what anybody tells you. You've got some great strategy, and you know, I can show you that over the past year. So we've got a trading room, right? Our war room that is mostly our alumni, mostly the boot camp alumni. So we've been doing this boot camp for about 18 years now. We've been around a long time, doing some trader education stuff that's great. And people come to us and universally they'll say, you know what, okay, so the war room, the trading room last year, 2025 booked 1,150 points per share traded. So you could have made $1,150 per share that you traded. That's amazing. But that's not enough to say there's $1,150 per share to be had. Says you had to get in front of all those opportunities. Well, nobody will, not even Julie and me, because some of those things they're gonna mess with your psychology. You're gonna be looking at them and saying, well, you know, for instance, this morning, one of the strategies that I'm going to show you in a second here, you know, on a Tesla trade, ran the bands. It went, you know, $4 per share, and I didn't take the trade because there was the news about the tariffs being struck down by the Supreme Court, and I just thought, holy smokes, you know, what's going to happen here with the market? It got into my head, it got into my psychology. Other people are, you know, looking at the same trades and, you know, oh my God, the volatility is too much. The volatility isn't enough. You know, they want to trade low floats because they move fast, and then they get into low floats or something, which I don't trade really. And then, you know, all of a sudden the volatility gets them because the spreads eat them up, and it gets into your head. And it's not, if what you think is that any strategy that makes money is a strategy that's going to work for you, I've got news for you. It's, I tell people that story's got a beginning and an end and a bunch of stuff in the middle you are going to hate, because what's universal to all these are boot camps that we've done over the years. And what's universal in that room is every single person at the table brings a different psychology to the game. And, you know, people, so what we do is there's a 60-hour program of home study that has to be completed. And then there's 4 days of live trading that we do down in Miami Beach. We used to do it out here on the West Coast. And then we found out after the first 2 boot camps, and that was 18 years ago, I guess, that, you know, people don't like getting up at 5 o'clock in the morning to go to a conference and trade the market. So we moved it to Miami Beach. We love Miami Beach. And, you know, as you go around the table there, you know, like that guy in the red shirt in the back, I always pick on him. He was a food photographer from Chicago. So he's sort of a control freak. You know, he's got a very precise way of doing things. And he's very good trader, he was a talented guy. Brought his psychology to it. The guy next to him with the crew cut, you know, surprise, is a cop, and you know, he's got a very definite set of expectations about how things work. The guy in front of him is an entrepreneur, owns a bunch of like limo services and you know, everything from limo services to laundromats, and you know, his thing was he knows how to get the ball across the goal line, but he also takes a lot of risks. He's also a gambler, and that has been very destructive to his trade. We work with all these guys for years, so we know all of them personally. You know, the original program is a year long, and the reason it's a year long is we try to dig into your psychology. Your psychology is the thing that is most pervasive in every single thing that you do, and it is definitely the thing that is going to make or break you in trading, because nothing is more frustrating. I'll tell you, nothing's more frustrating for sure than you've got a trading plan laying on your desk in front of you. You know exactly what it is that you're supposed to do, and then you don't do it because something got into your head, and then you look at the results and you're like, oh, you know, 1,150 points per share traded and I got nothing, or I lost money, or I right? And those are all common scenarios that we run across with people, and people come to us all the time, and right when they tell us, well, my psychology is not going to impact my trading, and as long as it makes money, I can make money, then I'll just always respond with, well, are you making money? Have you been making money in the markets? And then you come around to it, and you talk to people, and you find out, boy, they've been trading for 5 years or 10 years and really nothing to show for their effort because it doesn't fit their psychology. So that's just something to keep in mind, right? As we're talking today, I tried to pick the most uncomfortable trades to show you because they generate profits every single morning, and they are the hardest trades for people to get into, and for people to sort of shake off whether they were profitable over the course of the session or resulted in a loss. So what I'm going to look at first here is how you trade opening volatility in the Mag 7 stocks. And I'm going to pick a couple stocks that we trade every day and sort of show you the scenario, and then try to put yourself in the position of what's my comfort level doing this trade, knowing that in any given month, 3 days out of 5 minimum, these things book their full profitability objective, but I'm going to be uncomfortable while it's going on, right? So let's just take a look at these. So what I've done here is I don't have the pre-market data. The pre-market data is kind of noisy, and you want to narrow it down and sort of edit the stray ticks and get things to where you can see just a sort of a tight pre-market range. But this was the pre-market range. So this is on Tesla yesterday, and you can look at it again today. Today was another one where if you want to pull up a 5-minute charts of Tesla this morning, include your pre-market data, go through and filter out the stray ticks, you'll see you can go and develop these bands that give you an idea of where the liquidity is, especially just before the opening bell. And then I use other tools as well as just looking at the charts. So I'll look at Bookmap, for example. I don't know if you can see the top screen behind me is just a Bookmap liquidity quote. And I like it because it shows me where all the liquidity is coming from. So I can see where 40,000 shares are up here, or 10,000 shares right below that, and then where all the little orders are down below that. How is the pre-market trading reacting to those larger orders, the block orders that are sitting there? What's the smaller trader doing? What are the institutions doing sort of before the opening bell? And my goal is, so I'll start in our room with our guys. I'll start before, just before 6 o'clock in the morning here. So just before 9 a.m. Eastern time, I'm going through and I'm bounding these things up. And what I see in the pre-market range then is yesterday we had liquidity just before the opening bell that was heavily concentrated between 408.39 on top and 407.02 on the bottom. So this is where just you're really, basic charting on this one. I've got bar charts. I trade bars. Julie trades candles, and I'm going to tell you, they show you the same thing. I don't care what anybody says. I see the data the same way. So I see it better on a bar chart. Julie sees it better on a candlestick chart. And I say, again, don't try to pound a square peg into a round hole. Figure out what works for you. Wherever it is you see things the easiest is where you should be looking at things. In this case, so 407.02 in the pre-market was a heavy buyer. So there was a lot of buy side, resting buy orders, passive orders that were sitting on the bid. Stock was being bid just below 407.02, so the market was holding steady there. 408.39 yesterday was where there were passive sell orders. When the market got up to 408.39, there were limit orders sitting there to sell. So you've got limit orders to buy at 407.02, limit orders to sell at 408.39. And, in the pre-market, what you're watching then is the general trend lower. So yesterday, the general trend of Tesla in the pre-market was down. So it was primarily pushing to the downside. You can look at the earlier pre-market for this and say, what happened in sort of the 24-hour session, what happened in the 2 hours leading up to the opening bell, and what's happening in the final half hour. And you want to get this heuristic that you're framing this whole thing in is just to say, I want to see going into an open where I think the pressure point is. And if I hit one of these pressure points, what do I think is going to happen? So for me, I know that if I set up a bracket order on Tesla and I put it on both sides of the market, I put one at 407.02 to sell it short, and I put one at 408.39 to buy it, and I'm put that order out there, and I say trade it on the open if it does this. So if it breaks 407.02 lower, I want to be short. I want a $1 stop, and I want a minimum of a $1 target. So I call that a 1-by-1 bracket, right? Dollar profit, dollar loss has a very high probability of success. So in most days, I'm walking away with at least $1. Really on something like Tesla, I know it's got the range to do $2, $3, sometimes $5, $10, $15 on an open. And you get a stock that can move like that, you can use a structured order. And the structured order goes and says, all right, get me out of half of my position for $1, get me out of another quarter for another $1, another quarter, or you can take half and half off, whatever it is. But you got to be able to accept the psychology of, but if it turns around, I have my first $1, my second $1 might never come, and if I can't move my stops fast enough, if I can't move the orders around on the chart fast enough, it'll wipe out my game, right? It's gonna go to hit a full stop. And these are the things that mess people up, right? So you got the opening bracket long, opening bracket short, everything looks great before the open, and now, ding, 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 opening bell rings, and I've run across traders who hyperventilate. And it's down to the point that Julie and I'll tell people you should almost be monitoring your vitals around the opening bell. You got an Apple Watch, it's good data to collect and look at later. What was my heart rate at the open? Count your breathing. You want to get an Oura ring or get an Oura ring on. Take a look at all these metrics and figure out, is something getting into your head? Because you need to make quick decisions once the market opens to move orders around. You need to figure out, are you trying to get more out of the trade than you initially thought? So here, here's a bracket order. So in this case, this is what I was talking about. So in this case, we're going to sell short 407.02, and I've got a limit price of 407. And pretty much anybody who's ever traded Tesla is going to say, well, come on, a 2-cent slip, how can that be? It's it moves so fast, and it's going to jump you, and it is going to jump you. It's going to jump over that. It's going to jump over that limit probably, but it's probably going to come back to it. So now you've got all this psychological stuff going on. I've got the order out there. The order's sitting on the book. The order's sitting on my chart. I've got a 407.02 stop, 407 limit. You can make it wider. You can make it a 406.90 limit. You're going to get filled at 406.90, I guarantee it. So wherever you put that limit price is where you're going to get filled eventually. But as it's swinging through you, what are you thinking? So now it goes, hits your stop is your activation price, right? You're live. Now it goes and it trades down to 406.80, 406.50. Now it has to come back to your price. So now it's going to go in the wrong direction to fill you. It has to come back to your price. Well, that's what you wanted before the bell rang. But now price has moved away from your 50 cents, even though it's totally normal for this thing to swing $1, $2 in a single bar. As soon as it gets away, are you canceling the order? Because now, well, wait a minute. If it starts, well, I'll put the order back in after the fact. If it comes back up and trades back, then I'll put the order back in. But I don't want to get filled if it's going in the wrong direction. Those are the things that mess people up. So I'll say all the time, that Tesla trade this on this particular morning, that's a $750 trade. It took out the first short for a profit at $1. It took out the second short at the $2 mark. You can see there it's set up in percentages. You want to buy all of it for a loss. It's 100% quantity will get you out at the stop loss. 50% gets you out at the first target. Another 50% out at the second target. And yesterday you could have pulled a lot more than the $2 from your second target, but you had to go and grab that line on the chart and pull it down. And now you've got to have the courage of your convictions to say, well, I think it's going to a wider target, and here's the logic of why I think it's going to a wider target. Not just I want to make more money if I can. Again, right? There's no relationship between how much money you want to make and what the market's going to give you. It's all about support and resistance. So did you do your homework? Did you see where prior order flow was sitting? Is there a real probability it's going to keep moving? And if it does keep moving, can you get your line to where that objective is? And then if it starts moving against you, are you going to be kicking yourself? Are you going to be feeling like a failure because it didn't hit your target? And if you would have just left it at the first target, you would have walked away with $750, and now you're walking away with $2, right, or whatever. So these are the things that'll go and just be really emotionally challenging over the course of the day. And, I can tell you, like, for instance, yesterday, you weren't able to move the line fast enough. So if you went and you tried to drag that line down to that bigger profitability objective, you're trying to go and get a $3 move, a $4 move, whatever, and it just shot right down there. And now you didn't move the price. That gives you a lot of room to go and start second guessing yourself and saying, oh, I should have done this to begin with. Well, next time I'm going to set this up differently. Now, all of a sudden, all the research you did in how to set this thing up to begin with goes right out the window, right? You spent 60 hours and 40 hours, you spent 100 hours doing the boot camp stuff, and you know exactly what you're supposed to do. And now all of a sudden, well, I don't know. I maybe I ought to change this thing a little bit because, yesterday it did something different. Everything, this recency effect really can get into your head. In psychology, the recency effect is recency and dissonance are the two things that are really going to start messing with you, especially in stocks that have big whipsaws. So again, these are trades that are pre-planned, but they're not planned the way those around the horn trades are. These are planned right before the market open, and your anticipation is it going to be a fast open. Then we also, on the opening bell, will trade Apple. And Apple, this morning, again, this trade booked a big profit in the room. So, there's another one to look at and just say, what are my thoughts going to be as this trade is coming together? So you can see here, this is one of the pages from the Volatility Band trading plan. And this goes out the night before. And what's happening here is I've identified all the different levels in Apple over the last month that have been big pockets of liquidity, big places that things happen, big orders tend to rest at certain areas all the time. And what we're doing when we look at this trading plan is just saying, if Apple in the pre-market is coming into one of these levels, then what we're looking for is the opportunity to capitalize on a delta hedge. Delta hedge is options market makers are out there and they're kind of bookies. So options market makers trying to stay neutral, right? It's the same way that a Las Vegas bookie wants to be neutral on things. He wants to be in a position that if market goes up, market goes down, doesn't affect him. He's earning premium. He's looking for the bet that you're making on the option, the premium that you're paying for that option is where he's making money. And as soon as it starts going in your favor, he's losing money, so he's got a hedge. And that's what this trade's about. So this one, again, I don't have the pre-market data here because it was just skewing things so badly you couldn't even read the chart really. But in the pre-market, what we're looking for is right there before before the break on the chart. So you're coming down into the morning's trading, and at 262.34 in the pre-market, what we saw was a bounce. So you saw an inflection move from that level. You saw a lot of buying. So every time price came down into this level right here in pre-market trading, we saw a hard inflection, and that would pop price back up into the pre-market trading range. What we're betting is that since that threshold level overlaps with one of those thresholds that we had on our research table there on the historical support and resistance levels, the historical pockets of liquidity for Apple, what we're betting is if price gets there, that's a zone that we know market makers are going to defend. They're going to try to anticipate buyers there, and if the price gets back down there again, what the market maker is going to do is take in stock to hedge against that move higher in the morning. So it's just all about where they're going to take in shares so that they stay neutral, and then where would we expect the shares to liquidate if they move higher into support and resistance. And the next level is right up top there, that green dashed and dotted line. So we've got this 262.34 level that we're looking for an inflection at. And when we open and price comes down to that line and bounces, we're in. So we're picking up. So in the morning, we've got a couple guys who really specialize in just this trade. They want to be done in the first 5 minutes. A lot of our guys, primarily our room is full of people who are looking to do first hour trading. They want to be in for an hour and done for the day. These are not people who are looking to be pinned to their computer for 12, 15 hours figuring out what's going to happen next. They're looking for this kind of an opportunity. Boom, market comes down, hits 262.34, inflects, we get the pop. Where are we going to look to get out? What's our target? So we're just looking at the prior day. That's the support and resistance. You have the green candle, red candle, green candle, and then you've got this belly underneath, and you can see there's that really hard support level, support and resistance. And if we go back to the prior screen where we had the volatility band levels, you'll see that also is a level where there was significant overlap. And then you're like, bam, this is it. That's the target. So 262.34, you're in. 264.50, you're looking to close the trade back out again, or whatever that level is there. We can look at that in a second too. This is also set up as a bracket order. So you set up your bracket, and in this case, it's just a single in and 100% at each level to get you out. So, if you're trading 500, it depends on what level of shares you trade. You don't have to trade 500 shares, and you don't have to trade Apple. You can trade the holder, right? You can trade the ETF on Apple. All of these things. You can trade TSLL. You can trade METU. You can trade all the levered things. You can trade Tesla for $30. It's $30 a share. You can effectively do what would be about 700 shares of the 2x holder, right? So you get 2 times the volatility on that $30 instrument on Tesla, and you can do 700 shares. You can actually make more on the move in the $30 stock than you can make on the 100 shares that you would get for the same price in the $400 stock. So it's all about, all of these things have these, all the Magnificent Seven have those ETFs that do 2x volatility. So if you're interested, you can shoot me an email, just Adrian@traderinsight.com, and I can send you over a list of what those are. But I just trade the raw stocks. I'm trading Apple. 262.35 is a limit buy, right? Because price is coming from above down to the price. So it's not a stop limit. Stop limit would fill you up in the middle somewhere because the stop criteria is already set. In this case, price is coming to you, so you want it to be a limit order. 262 spot 35 is going to get you long, and then you're going to exit 100% at 264 and a quarter. That's a profit of $945 on 500 shares, or you're going to be out for a $225 loss at an offset of about 45 cents. We've got a price threshold on these based on prior trading where we go through now, and we're just doing this based on, we've got a support and resistance level above, we've got a support level below. We know if it violates the support below, we want to be out, don't want to be part of whatever's coming next. And if it goes up and hits a target, we want to get out because we think that's going to be a hard inflection because that's where it inflected before. So, you know, you're playing a game of predicting order flow. This is very much like making markets. Market makers in stocks are non-directional, and you know, we've trained a lot of guys who are former market makers, have come to the boot camps to learn to be a little bit more directional, to learn how to trade where you've at least got to be right about the direction the market's going to go in for a little bit, because you're not actively making this constant market on both sides. You're looking to get in, you know, down here and out up here, and you have to be at least right about the move that's coming your way. And support and resistance, really the best way to find those levels. You just want to go look at the trend of the stock, look at you know, where things have had a hiccup before, look at where the order flow is, figure all that stuff out, and that puts you then in position for a profit. So before we look at sort of the more structured trades, the open is all about fast markets. It's all about seeing structure in fast markets. And like I said, it's about state control. State control, that's you. That's, you know, am I sitting here flushed? Do I have a rapid heart rate? Am I having a hard time controlling my breathing? Am I even breathing? I've got, you know, I've sat there looking at guys at the boot camp, and, you know, they want to do these opening trades, and I'll say, breathe. You know, what's going on? I see you're holding your breath. Well, you know, if that's where you are with anything you're doing, forget just the opens. If you know, you're not even breathing, you're holding your breath because you're getting into a trade, then the psychology of what's going on in front of you is getting the better of you. So, you know, the big thing about the pre-market is it's compressed. So whereas the night before trades, right, where we're putting together the trading plan for the following day, and, you know, we've got all the time in the world to think through things. We're figuring out what's likely to happen on the open, what's likely to happen half an hour into the market, where are things going to, you don't have that kind of time. So pre-market, you got to identify liquidity. You need to align with what the opening range direction is going to be. Doesn't matter, you know, we've got two guys who are unique examples here. Now they're not that unique. They're just nice people who do kind of the same things that everybody does. One of them only wants to go long ever, and one of them only ever wants to be short. The guy who wants to be short says it's because they fall faster than they climb. That's true, because there's a psychology of that too, right? Last guy in does not want to be explaining to his family why, you know, he bought the high tick. But the guy who doesn't want to be short is looking at things saying, well, you know, if I get into something and there's a short squeeze, you know, what happens when a market's moving higher after there's a bunch of people who are short? Well, it's going to cascade higher. It's going to move higher very quickly, because as markets are moving up, people don't want to sell. Right? People are going to put their sell orders way up out of the market. Those are two different psychologies. Those are two things that are happening to these two guys. Both of them know how to book a profit. Both of them book big profits first thing in the morning. Both could go and trade either side of the market, but neither one of them does, because it messes with their psychology, right? But the bottom line is, what you want is, just like with the fully planned trades, I don't want to have to put a lot of thought into what I'm doing after 9:30. So when the opening bell rings, I just really want to be on autopilot. As soon as I'm going to involve a lot of what I'm doing in sort of tinkering with decisions, I know I've got a risk. I've got a very strong risk that my psychology might be affecting the process, might be affecting my thoughts, and, you know, I've got to get a grip on that. Once it rings, once you're in, you're in a high velocity situation at that opening bell. So a lot of people over the years have said, well, amateurs open the market, pros close the market. It's not really true. It's the pros are there all day long, believe me. And what you're doing in the market is you're just trying to capitalize on the order flow at the moment. The opening bell is going to be a fast market. The closing bell, you're looking at order imbalances going into the close. You're looking at, where are institutions going to go and put their orders to get, to get the correct percentages of different holdings in there. Tesla goes up 20 points today. Somebody's got to make an adjustment. They've got to get it back down. They got to get the value back down to the percentage of what's supposed to be in their fund. All those things affect the closing bell. I don't like the close. So I don't like the psychology of the last 30 minutes of the market. I like the open. I like the fact that as long as I keep my own sort of state in control, I just have to go put my stuff out there, let my orders do their thing. And, I don't have to be firing off trades. I've got another guy who does 40, 50, 70 trades sometimes in the first 10 minutes of the trading day. And then will complain that, he can't make heads or tails out of his blotter. They must be messing this up. And I don't even know how you get that many trades off. How can you click the mouse that many times? But my psychology, it's no good for that. His psychology, that's where he's comfortable. But what you have to be careful about is that it doesn't turn into a psychological trap. So win, lose, or draw, those early trades can really affect what happens to you over the rest of the day. So you come in the morning, and this is a benefit to us of working with these guys, we love our guys, right? We love everybody who's in our room, and they're all great. And we know them all personally, right? So we get to be friends. We keep things kind of smaller because this is a perk for us. This is we thought we were going to be college professors at some point. This is as close as we got. And I definitely don't want to be a therapist, but I do enjoy working with people and seeing what happens. The guys who win first thing in the morning, my biggest challenge is to tell them, you just made $2,000, $3,000, turn off your computer. Why? I'm having a good day. And I'll say, well, because I know you, and you get overconfident because you had a big win, and now you want to win more, and you like that rush, you like that adrenaline, you like what it's doing, the endorphins, and everything that's going on in your brain is like the psychology of addiction now, because man, that was a good feeling, and I want more of those good feelings. So the fast wins lead to these really just hyper confident, overconfident traders who then turn around and wind up digging out of a hole later in the day, because now they'll say crazy things to me like, oh, it's house money. And, now I'm playing with house money. So I'm not worried about, I've got some trades I want to set up here. And I'm like, it's only going to be house money till you start losing it. I guarantee you. Once you start losing it, I want my money back. And as soon as somebody says, I want it back, what I know is they're going to lose more. Like, I want it back is all about revenge trading. And revenge trading that's a whole other topic, right? I can write a whole chapter in the next book about the psychology of revenge trading and why it leads to losing an awful lot of money. Fast losses in the morning will lead people to a sense of urgency. And urgency is probably the worst emotion you can have in the markets. Urgency is going to torpedo your trading. Your P&L is a goner. As soon as you feel like, I've got to make that money back, right? I lost money on the open. I've got to get that money back. I have to get it back. I have to get in front of an opportunity. There has to be some way here for me to make that money. That urgency will lead you to lose money too. So both of these things give you this distortion in your decision making. You're going to have a hard time making good decisions because of a fast win or a fast loss. So really, what we do is take a walk. So, we live on an island down here in off Newport Beach. And what we do is after the first 45 minutes or so of trading, maybe, it's usually an hour probably that we sort of tell everybody in the room, we're taking the break, we're going to be gone for an hour, because it's important to go and reset, because emotions are going to have a compounding effect on you faster than profits, faster than losses. Like the emotional stuff is poison. And if you can get out there and just clear your head, it's so beneficial to walk away. And I tell people constantly, you don't have to be there. Just because the market's open 6.5 hours, this is not like another profession. This is not like doing anything else in the world. This is not about putting the time in translates into earning more. This very much benefits from get up, walk away, take an hour to refresh, reset, get a different perspective on things. Because trading after the first hour, very different, right? It's a very different environment. Things are going to be slower paced, and now you can have boredom creeping in, and boredom has this other effect, right? Boredom is totally different than all the endorphins and all the adrenaline and all that stuff. So for us, for Julie and me, and for a lot of our members in the room and the guys at the boot camp, one of the things we focus on is trading these super cap volatility bands. And the volatility band trading plan, again, I'm going to choose here to show you examples from Tesla and the Mag 7 stuff. If you look, this is the plan that's set up for yesterday. So this is the day before yesterday now that we're looking at. And you go through and you look at, okay, well, where is the volume by price stacked up, and how does that relate to levels of support and resistance? And then again, I'll go look at order flow. I pick apart order flow. I look at the order book. I look at the time of sales. I've got an algo that goes through and crunches time of sales data and figures out where did things happen, where are the bodies buried, right? The footprints of institutional money are all over everything, and you just have to go look for it. So just look at the way that distribution lies in the data there, and then look at the way that overlapped with natural support and resistance, just the way that you would go through and draw those natural support and resistance lines. It's just important to pick the pockets of liquidity that had strong representation in terms of volume by price. And you want to see things like those threshold levels break at the levels that you identified. So you went through, you identified support and resistance on a 5-minute chart, and then you said, oh, look, that order flow lines up really, really nicely with the support and resistance that I picked. I'm confident putting together a trading plan now based on that data. So for the next day, I go through and I create a plan. And my plan is unambiguous. It's step by step. I know the logic. I know the rules. I know exactly how to get in and out so that I can set these things up on bracket orders. I can just set them up to automate. Here's the example. This is for yesterday as well. So this is yesterday's plan. I can tell you today's plan, again, ran the bands, ran right through those bands for us. If you want to pull up a chart of Tesla, you can see the trade that happened just before I got on and did this. 413.94 yesterday, though, was the entry for a short sale. The other levels that were identified on that chart, the support and resistance levels that were identified on that chart, all there. We were looking for a move 413.94 down to 412.56. That might be the first target, peel off a piece of the trade. 412.56 down to 411.66, another target. Either peel off a piece of the trade or you're staying in for the rest of the move, trying to get it down to 410.13. That's the logic of the trade. You're always going to book a profit somewhere in the middle there. Somewhere in the middle is going to peel off a portion of your position. You're going to book something, and then the rest of it is going to go and be able to benefit from the move down through. So here's how it played out. You have this big trending move higher. Now ask yourself, what's your psychology when you see this thing moved above where I thought it was going to go short, and now if I do go short, I'm going to have to enter my position from the high of the day so far. And Tesla has been straight up. But yesterday, when I put this plan together, I know there's a lot of liquidity on the sell side from that level if it starts moving down. And sure enough, right, we get this move down to our first target. And now ask yourself again, now what's your psychology say when it moves back up? So you took off 50% and you moved your stop to break even on the balance. So you got half your position off for a target, and now the other half comes back up and takes you out at your entry price. And now you see this. Oh, it got back up above the line, and now it's coming back down through. What happens as it's making this move? Now it gunned straight through all those levels. That's a $4 move right there. So you got $4 per share traded on Tesla. Did you get the whole move? Or when it got to that first profit objective, I've seen this before, right? Recency effect. I've seen this before. I'm going to take this trade off because the last time it got here, it bounced, and I don't want to get caught in a bounce. And then when it gets down to the bottom there, what are you saying? Oh my God, I'm the worst ever. I'm lousy at this. I'm no good. Look at that. It went all the way without me. That's the thing that happens inside people's head, right? They second guess things. The impact of what just happened is so hard to get over. You've got to figure out a way to do some self-talk and figure out, how am I going to guide myself through and just say it's okay to make decisions as long as they're based on the plan that I had, right? There's no reason that I have to get out 100% at that first target. I should be letting it mature. I should be letting it make the move. The same day, Microsoft was long. 399.35 was the bottom band here, 401.72 the top. There's another one of these things, right? You're looking through, when you're putting the plan together, everything makes sense. So the night before you're looking at this, there's no reason to second guess any one of those levels. Look at the way things lined up. The volume by price, right? Metastock's got a great volume by price distribution. They show you buy side volume, sell side volume, and you're looking at those levels and you're saying, you know what, those thresholds, they overlap really nicely with this support and resistance that I'm finding, with this natural support and resistance. So where I'm spotting order flow is very much in tune and in sync with where the heaviest order flow was during the session. There was order flow other places, but do I really think that those other places are as important as these things where price just really is in tune with the heaviest of the activity that's happening over the course of the day? And it's not happening right around the opening bell. It's happening in the middle of the session, right? What's all this tell me? What am I seeing going on here that tells me that that's the most significant place to draw those lines and then to put together the trading plan? And then, right, the next day comes along and you've got that move, right? And, you know, as you were looking at this stuff and you are seeing these levels play out, and remember, we had a trading plan here that was going long at 399.35, and our big target is going to be 401.72. So, you know, as you see this thing playing out, what goes on in your head? So, you know, when it happens, right around an opening bell, are you panicked? Are you, convinced that, well, I don't want to be caught in the volatility. I don't want, well, what did your plan tell you to do? Were you able to go through and execute things according to your plan, or did you let your psychology get the better of you? So these are all, right, the questions that you have to ask yourself about anything that you're doing. Is what's the level of psychological comfort? What's the level of psychological discomfort that I'm going to experience? And, how do I go then and navigate these waters, right? What do I do when I start seeing, if I'm looking at this thing now and I'm thinking, I see a big picture reversal setting up. Oh, I see this blip right here, right? Is that telling me that I can expect a big reversal? Well, I can tell you, when you see this move, that thing on top there is an infield fly setup, and the infield fly setup would target this level right here. So if you've got the Metastock scanner and you're going through and you're looking at the daily charts, that pattern from the daily charts, that infield fly setup, is one of the best patterns that we have on an intraday chart as well. So it indicates a big picture reversal. It indicates you've had a big extension and there's a reversal. Well, are you comfortable doing that kind of trade, or is that the kind of thing that has you breathing in a paper bag again, right? Because you're not going to make money if you're role as a trader is passive psychological disaster. You need to be in a position of courage of your convictions, understanding why you're doing things, and when that's the case, then these kind of things play out for you perfectly because you're ready for them, you're in front of the opportunity, and you're comfortable setting up the position, you're comfortable setting up the trade. So that's my take on the psychology of this thing, right? And it's not about, do I capture all of this, or, did I capture all of the planned move to the upside? It's about, am I able to put myself in position to profit? Am I able to put myself in front of these opportunities and not feel like every day of my life is this, I just hate getting out of bed in the morning because I'm going to get in front of the computer and it's going to turn my day into a nightmare. It's about, can I get in front of the opportunities and feel like I know what I'm supposed to do and I'm confident about what I'm doing. Okay, so we do have you can join our room. So it's a live community. Up until now, it has been only people who attended the boot camp. So it was only an alumni room. We had it that way for years. We are opening it up to more people at this point. I think it's straightforward enough that it's understandable at this point. We're not really just going over boot camp stuff anymore. It's all the live trades that Julie and I are doing. So I give you the same offer that we give to the guys at the live conferences. It's normally $2.99 a month. You can get it for $1.99 a month for the life of your membership. All you have to do is visit traderinsight.com/member. It's right there. And then when you check out, you use the word SAVE without the quotes, SAVE, and you can join us live. We trade Tuesday through Friday. As I said, it's primarily first hour. It gets pretty quiet later on. There's going to be alerts, live alerts over the course of the day if we run across something. Mondays are statistically not a good day. If you look at the Stock Traders Almanac, my buddy Jeff Hirsch, his dad actually published that thing way back when, and it'll show you, Mondays are not a great day to trade, and they're still not a great day for the stuff that we're focused on. The volatility over the weekend, the news over the weekend, all that can really be a problem for Monday volatility. And it's really all about earning a living in the first hour, and it's about then we just trade the highest liquidity super caps. If you're looking for a penny stock room or a low float room, this is not it. We are looking for things that don't get halted. We're looking for things that are on the move pretty much most of the session, and we're looking for things that are able to get our traders and ourselves in front of opportunity. Okay, so if anybody has any questions, I've got, I think, about 4 minutes left according to my clock. I'd be happy to answer them, and if not, then hopefully I'll see you in the room.
Thank you, Adrian. Appreciate that. Great job.
Thank you.
All right, let me go ahead and kind of do this. We've got the links in there for the membership, I think in the cool. Chat. Great. Thank you very much, Greg, for doing that. Adrian, thanks a bunch, man. Good to see you.
Hope I'll see you soon. We're thinking about coming your way to do some skiing. So.
Oh, in that case, you must come to lunch. We'll take you to lunch.
Absolutely.
All right. We know the best spots.
Okay. All right. Thanks, Jeff. Say hi to everybody.
Will do. All right. Let me go ahead and do this real quick. I'm going to share my screen here. We did. Somebody that asked in the chat, and I forgot to ask Adrian this, but I know the title of the book. The exact title of the book is Around the Horn Pattern Scans. And I know that because we put all of those scans, all those explorations into Metastock. So the complete book for you, Ty, is Around the Horn Pattern Scans. So in terms of, actually, let me do this. In terms of what's in there, it's got his fastball, his line drive, his backdoor slider, the double hitter, the infield fly, the 3-2 pitch. It's a fully built Metastock add-on. That means you can scan for the opportunities, you can find them. You can. It has expert advisors. It explains everything to you. It's a great companion to this book, but also you don't need the book necessarily, and that's a good thing because the book's getting reproduced right now. So it's only $300. It's a one-time cost. You can get it here at the conference for $249. If you need Metastock and you want to try it with Metastock, you can get a free trial. I want to reiterate that $249 is a one-time cost. We'll back it with a full 30-day money-back guarantee like we do with all of our products. To get it, go to metastock.com/conf promo. Give us a call, 800-882-3040, or metastock.com/salespchat. So while we're kind of transitioning to the next speaker, I want to give you an invitation to join the Traders Forum. You can join the Traders Forum at www.thetradersforum.com. It's a great group of people. You can chat with other traders. You can talk about the markets. Right now, we're talking about the impact of tariffs and the lack of them. If you haven't heard, the Supreme Court did a ruling, and they did away with tariffs for now. So anyway, come in. You can chat with us. You can talk to us. We do guest speakers. We talk about indicators. We talk about technical analysis all the time. TheTradersForum.com. All right, very cool. Greg.
Yes, sir. I'm here. I
Right.
gotta have a microsecond to hit the button.
I know. I think that's actually, it always takes me the longest time to hit the button. So
Yeah.
let me go ahead and do this. We had promised to give away, I'm going to give away 3 more books, actually 2 more books and a mouse pad. So we're going to give away Steve Bigelow's Candlestick Profits, Eliminating Emotions, and Candlestick Patterns. Steve was a great partner in Metastock. We love him dearly, and we miss him. But we're going to give away some of his knowledge right now. Here, we've also got the mouse pad. You get a slightly cleaner one. This one has a few marks on it, but I'll send you a brand
limited edition. Won't be redone. When they're gone, they're gone. Mouse pad.
Right.
That's
same with the books too, though. But in any case, what I need from you, Mr. Lewis, is a number between 2 and 6,952.
That number, according to where'd it go? Just a second. That number, according to Google Random Number Generator, is 1551.
Okay. That is Peter H. with an MSN address.
Congratulations, Peter H.
Very cool. Okay. Peter, I just sent you a message. I had it all ready to go. It was queued up. I just sent you a message. So if you want, look for your email. I just need to confirm your address. If it's coming from me and it's asking for your address because you want a prize, that one isn't spam. In any case, thank you very much for the assist, Greg.
You're welcome. I want to welcome back Ed Downs. It seems like it's been a minute since I've heard Ed speak. So I'm glad he's here.
It's good to have him. We were trying to work out an issue with his webcam. Actually, I might still be on a phone call with him. I am.
Well, I do see him. He's here.
Yeah.
I'll show his camera.
Hey, Ed. Hopefully he can share his microphone. Hey, there he is.
Are you there, Ed?
Yep.
Hey, welcome.
I'll get out of the way.
The fact your camera's not showing that we didn't get it worked out.
Yeah, I did try to revive it, and it just looks like it's. I mean, everything on this end looks right, but so let me go one more spot here.
Yeah. Sometimes I know when we were in the hallway, we were trying to press on that down button or that arrow next to the camera. You might be able to get to it now.
Yeah. Wow. It's just like it's selected. Everything looks right. It's just not. I see it on my side, on my screen. I see it's up in another window, but it looks like it's not going to come up. You have to just not see me today.
Oh, well, if it's helpful. Yeah. At least we can see you, right? But here, I can put up your high school.
There you go. I like that picture.
Photo.
Yeah. There you go. See, because if you saw me, you'd be able to tell I've aged a little bit since last time. So we don't want that.
Yeah, okay. It's kind of funny. I updated my photo because people were telling me I was catfishing. So I hear you, man. All right, Ed, I'm going to formally introduce you, and we'll just go with audio only.
I need to go 1 second to my machine to make sure it's okay because your guy was on it. But go ahead, introduce away.
Yeah.
Ed
Downs is somebody that's been at Metastock or been working with us for as long as I've been here. One of the first products we sold was a bunch of indicators that he designed. Ed is a prolific and one of the original programmers. source for Metastock formulas and codes. He's released some really cool stuff, like AI stuff that does kind of full-on algorithmic genetic system testing. I was looking for the right word. Algorithm was the wrong word. Genetic was the right word. He's created a number of different products for Metastock under the brand name of Fulgent. The one that he's going to talk about today, and kind of what he's going to talk about today, is something I absolutely love, which is Fulgent Chart Pattern Engine. I love chart patterns. One of the things about chart patterns is they're very kind of difficult to kind of see. They're more objective, and he's done a really good job of taking something that's somewhat objective, making it, or subjective, and making it very objective, which means you can scan for it, you can find them, you can identify them on charts, and he's made a beautiful engine around that. So, Ed, are you ready?
I'm like real close.
Okay.
Like
all right.
We're like seconds away here.
All right.
I
Okay.
got that
No problem.
Get your. This interface is new, so.
It is a little bit. Yeah.
Yeah, but I see how to do it. Okay. I think we're pretty good here.
I'm going to make you the presenter then.
All right.
And then it should ask you to share your screen.
Yeah. I think I'm good.
I know you're good, and I can see your screen. So I'm going to go ahead and turn off my camera, and I'm going to let you go. If you need anything, I'm right here for you.
Thank you. It's so good to see you again. Just doing one little thing here with all these things, with computers. You just got to keep doing stuff. All right. There we go. I think. There we go. Okay. Awesome. All right. Well, I didn't hear the introduction because I was with the other computer, but gosh, you and I have been together for a really long time. It goes back to the 90s, early 90s. You probably said that dates us, unfortunately, but it's always been a pleasure to go on these webinars with you, and really was great working on these products for Metastock. We've done lots of software, different things, applications out there. But Metastock was one of the very first programs that I was using, and so I came after we built these things like chart pattern recognition. I got with you and said, "Hey, do you want this in Metastock?" And you said, "Yeah, let's do it." So I have to tell you, this particular version of our chart pattern stuff is the best that we've ever built. I'm not just saying that. It really is good. You're going to see why when I show it. But on these webinars, what I really like to do is educate people about the topic. Because whether you get the module or not, there's a lot of things about chart patterns that you need to know that you may not know. They are the quintessential measurement of emotions in a market, and markets are emotional. We've talked about we use AI, and we have an AI plugin for Metastock that's available there. It's really good, but using AI on the markets is really tough because they're so emotional and just they're variable. They're always changing. So if you try to just train a neural network to them or something, it just fails because the stuff changes all the time. So chart patterns, however, show emotion. They show what the market is thinking and doing and acting on those emotions. And so they will never go out of style. They will always work. So you need to know them, and you'll be looking for them in your charts. That's all I got to say about that. Okay, so let's go ahead and dive in here. There is a book we have on our Fulgent website. And just to explain about that, so we're Nirvana Systems is the company that built all this stuff. Fulgent is something we launched to provide our software in other platforms, like just here there's a plugin for it, whatever. And so Metastock was the first and best, of course, of all those. And so this page is for our Metastock plugins that you can see them all on there. But if you go to the right side, there's the Fulgent chart pattern for Metastock, so you just download that. And it's very long because this presentation normally has a lot of examples. I go through them, like one by one, chart screenshots. Today, we're not going to do that. We're going to look at the actual software and look at patterns that way. But this ebook has lots and lots and lots of examples of all this stuff that I'm going to show. So very worthwhile getting if you're interested in the topic and want to kind of see the psychology at work. All right. Oh, that's the download button. Yep. Thank you. Okay, so what is a quote pattern? Just start with the basics, and it does two things. It reflects or shows the psychology of a market. It also determines the behavior of the market. It does both things at the same time. And so what happens is, like in that little picture of a consolidation. This is going sideways. As soon as we break out of that, everybody who's looking at this stock sees that happening, and they act on it. They go, well, it's going higher because they've seen it go higher before. So, got battle between buyers and sellers, and then, we're above the consolidation. That usually means, like 60% of the time, at least 65%, that you're going to go higher. So it's very nice. You put a trade there. If it goes back into the consolidation, you get out. So, but it does both things. Shows that the market is fighting between buyers and sellers. And then when it breaks out, it causes the buying to ensue. This is a chart of an index that I marked up, the SP that I marked up a while ago. I just sat here and said, if you just look at a chart, you can find all kinds of stuff. And so most of these are consolidations. There's a triangle right there. Here's a regular, like a horizontal consolidation that failed. Usually they go in this direction. It didn't. So that's a good signal. We have, a volume climax pattern right here, which is very good for reversal. We're breaking through support. So there's stuff all through here, and we're going to look at examples of these, of course, today. But if you just pick up any chart, you can mark trend line breaks and gaps and all these things very, very quickly once you get used to it. So there's 7 patterns we're going to talk about, and I maintain, I know there's books that have like 200 patterns in them, but these are the 7 from which others are derived, pretty much. I'll explain that in a second. But I actually wrote a book. Oh gosh, do I date myself? Yeah, it's dated on there. Okay, in '98, I wrote this book for Trader's Library, and it's really short. It's like 35 pages, but it just talks. It's the same content that's in this webinar, and talks to these different 7 patterns that the app implements. There are others down here, tops and bottoms. Cup and handle, head and shoulders, but a top or a bottom is really just support resistance. A cup and a handle is a saucer followed by a consolidation. So these are just variants of these guys up here. The module does recognize these, by the way, in addition to the other stuff. All right, so we'll start here with the first one, and we're going to talk about each pattern and sort of what it entails. Trend line break and reversal. And so these are just generic pictures that sort of show the way it works rather than actual charts. We'll see those in a second. So you have trend line here formed across the pivots. Usually you want to see 3, but 2 is okay. And when the stock breaks through that, the market sees it. So again, the more obvious it is, the better. So you want to be thinking, does the market care about this or not? And that's the main designation as to whether it's going to work or continue in that direction. So trend line break, you have one established, you break through it. Often you'll come back and touch it like this, but it hasn't gone below the trend line, so you're still good. And then it takes off again. That's a really good place to buy right there. So reversals are the other side of it. So you have a trend line being formed by these pivots. And so if you have at least 2 and you come to that invisible, or that not invisible, but imaginary line, and you start to reverse off of it, that's a really good place to buy. You put a stop right below the line. So these are pretty easy to see in the market. And if you break a very obvious trend line with force, like there's also a gap, there's also volume, that's even better. Those things are just killer. Okay, so speaking of killer, let's go over here to Metastock. And you see all this stuff on here. Normally, before I start these webinars, I will go in here. So pay no attention to that man behind the curtain as he goes in here and turns them all off. There they go. And I'm just going to look at this one right now. These 2 guys. Okay, and let's refresh the chart. All right. Yay. Okay, and I was looking at this is Apple. I was looking at it earlier. I think a much more interesting chart is maybe NVIDIA. So there's lots of good stuff going on in here, but I'm going to bring that up real quick. So I go to my chart. I love the new version, by the way, Jeff. This is fantastic software. You guys keep making it just better and better and better. So it's exciting to see that. All right. So here we are. Okay. So here's NVIDIA. So the way this is the chart pattern module finding these things all through here. And the way it works is it's looking for the pattern, of course, going back, but you will see these colored zones, and they indicate the range where the most recent pattern was identified. So if I go over to this first one over here and just kind of zoom in on her a little bit there. No, that's the wrong way. Sorry. All right. So you see this purple. So that means that there is a line imaginary line right there, and you break it. So that color is showing you that. Okay, so, and we can just look at other cases here. Here's one right here, and I could mark all of them, but you get the idea. And they're pretty good. Now this one is real obvious, right? It's got a nice big swing here. Another one, 2 points, comes up. You're going to get, at least half this distance when you leave that. So it's really good. Now they're not perfect. There are some that don't work out. But, and here's trend line reversal right here, looking at this trend line going across here. But so what the module is designed to do is to show every single pattern that it thinks it sees. So your job as the trader is to look at them and say, is it obvious? Okay. I would say this one here is pretty obvious. Wouldn't you? I mean, that one, not so much. It's kind of looking at this little bit of pivots right here. There's a trend line break, but it's not obvious. This trend line reversal doesn't have big swings to it. It's not sloped or anything. So you can very easily tell which ones are good. The module, oh, nice one there. The module also lets you identify the best ones, and we're going to do that at the end. Right now, I'm just letting it show all of them, so we just kind of can talk about these patterns and what they do. But so trend line break across these pivots right there, and so on. All right. Okay, and let's see. There's something also I want to bring up here. If I can do this, expert advisor, and bring on the commentary here. And again, I like what you guys did with this. It's really, really cool. And there is a way. You see, actually, I think it's from the menu. How do you dock it over here? There's a way to do that, Jeff. Can you tell me?
No, I can. Go ahead and open it up again. Go expert advisor.
Okay. So yeah.
Commentary. And then if you just if you take the top of that window and drag it to the left, you'll see a docking menu. See?
Oh, where?
In the middle.
In the middle.
Just down below. Okay. See, down below, there's a little icon. It's I wish I could just point to your screen.
I know.
So just kind of point.
Well, it's okay. It's okay. This is fine, but we'll find out. New installation.
I feel like I'm just not telling you well where it is, but when you're dragging that window around, about halfway down the screen, there's a little bit of an icon that opens up.
I see that coming up there, but
yeah, just point to that. Point to the middle one. Right there. Yeah.
Hey, we did it. Good teamwork.
I think that was. I'm going to take responsibility for that. I don't have a great ability to communicate right now because I've been talking for 50 hours.
I can imagine. So let's see here. I think I can grab this one of these, the expert commentary. Okay. Yeah, I mentioned your guy was with me. There's something about my machine where this is not quite syncing. I don't know what it is, but he got it, going good. So I don't know why it's not picking up. But normally it will show some commentary on the signal, which I clicked over here on the right. Maybe I'm not close enough to the edge of it. Let's see, maybe it needs to be like looking at the last one or something. I don't know, but we'll try a little mess around here a little bit and see if I can get it to show it. So far, no. Okay. So again, it's something on my machine. Like I said, your wonderful support person was on me with this for a while.
Weird.
So
that is weird. Yeah, that is weird.
It's weird.
Click on the symbol again and try hitting the refresh. Click on any of the symbols and hit the refresh.
Refresh?
Button.
Okay.
Well, not necessarily on the chart, but let's see what happens. Okay, now click on a signal.
Here, over here, yeah.
Yeah, sure. And then on the commentary itself, there is a little bit of a refresh thing next to the back and forward buttons. Maybe try that.
Yeah.
I think it's something that we'd have to get tech support involved with.
Yeah. Sorry, excuse me.
Because the days are moving. Something's going on with it. Yeah.
There is. It's okay. Well, normally I know it works because I've been using it for years since we did the plugin, so it's great. But I'll go ahead and shut it down for now. But normally it'll talk about that pattern, the significance of it, and show an example image like what I'm showing in the webinar. So, but I'm sure yours will function. Mine just was fresh install and there's just something going on. Anyway, it's okay. But it's a cool feature. I like it. Okay, so that's trend line break and reversal, and it's just a very basic chart pattern. But let me go ahead and go back to the Fulgent application. So this is actually running in the background in the system tray. And it talks to Metastock. That's how it works. one thing, if you're looking at this, you're wondering probably what CT Trader and FT Stocks. These are other plugins that we have. So I'm using patterns today, but the others have, little configurations as well. So this one has all those patterns. What I'm going to do is turn off trendline breaks and reversals, and let's see what we have next in store here. Okay, next will be support, resistance, breaks, and reversals. Same kind of thing. A support level is almost like a horizontal trend line, really, except there can be just one point. So you go through a very serious, resistance in this case, and you break it, especially with force, the market goes, okay, we're going higher. Or, to the downside, right here, we're going lower. So very important. And then reversal is like a trend line reversal. You come down to a support level. They're very good because people like to buy at support. Again, it's all about emotions. And, so you'll see all these moves happening right off those very clear levels. I'm sorry, I have allergies today that are really getting me, so I'm going to try not to do this too much. 1 second. Okay, I think I got it. All right, so let's go back to the software and check it out. So I'm going to turn on support, resistance, breaks, and reversals here. And let's say okay, and refresh the chart. And bada bing, bada bang, here they come. Doop. So same thing. It's looking, so if you look at, this green here, so it's seeing this over here. So that's a support reversal. It's a very nice entry point. It could just pull back a little bit, just like trend lines. And then goes higher. This is a very nice resistance break right here. The gold shows where it is, the data it's looking at to get this, but you got a gap as well right there. So that's a really good place to buy. It's fantastic. And there's some good reversals over here too on this stock. So a reversal there. The reversals look like they're actually very, very profitable, most of them. So again, you want to look at it. The job of this thing is to bring them to you automatically, and then you just say, oh yeah. Plus you can scan for them with the Explorer. All right, so we'll talk about that at the end of the webinar. Okay, so support resistance reversals. Let's go ahead and go now back to our webinar and look at the next pattern. Saucers. Oh man, these things are just awesome, especially in this product we have. But just if you look for a very smooth change of hands, from the sellers to the buyers, right? Most of them are to the upside, but you see quite a few that go the other way. I don't have one in this picture drawn like that, but the typical move you'll get is at least half of the prior move. So you come down, if you break above these little pivots right here, you'll get typically about half that full distance. So they're dynamite. I can't wait to show these to you in our tool because you'll see. Here, let me just get back to Fulgent, the app here, bring up patterns, and let's turn those off. And the saucers are actually down here. Okay. And let's refresh. Here we go. And this is one I might go through a few more charts. Now just look across this chart at where these things are, where they're firing. They're identifying really good places where the market is changing hands to go one way or the other. This is a very nice, that's actually a trend line reversal right there. And it's also a reverse saucer. So we have one here, and this maybe, I think this thing, let's see, in order to go through, let me do this. I'm going to go to the chart again because some stocks are really good with this pattern. So let me bring this up and bring up Apple. And I'm just going to, this way I can just kind of go through some symbols. So, but you can see, just generally speaking, where you have that smooth turn, you typically get a move after it. And so if I just go through a couple more stocks in the Dow here, you'll see it. Like this is really good here. Really good reverse one here. So, and again, what you're looking for is like, this is so clear that you're coming down, it's bottoming out, it's going through pivots right there. So that is, a nice place to buy this stock because it's just clear to the market. It's going to do every one it sees. So some of them, that's not really a saucer. It just sees the turn. This one is, but, and this one is, but, so its job is to look for that geometry and then flag the pattern. Okay, so next we have 7 to do. So we're getting there. All right. Next one would be Fibonacci retracements. These are great. no one really understands why this happens, but in markets and of course in nature, you have these geometries formed by a move inside of a move. So you have this drop here, and if you go up about 38% of that move and you start to turn around, that's a Fibonacci retracement. It's probably going to go that way. And so each of these I've marked. Here's a 62% retracement. This one is a 50% retracement. That's the most common one you see. 62 is like the next most common. But so they're very good. And like I say, nobody really knows why this works, but it just does. Let's go back to our software here and bring that up. And so obviously you can configure this, for any, you just want 2 or 3 patterns that you really like. You can just say, okay, I'm going to watch these 2, and I'll explain what this stuff is out here in a minute. That's more configuration you can do if you want to. All right, so let's go ahead and refresh this chart and see if we have any. Now, this is one where I may need to go through a few charts to see it, but so here, this is like a 38% retracement of this range. This one is a 62% retracement that did not work out. It did not follow through. So you would know right away it's not going to work. This is a 38% retracement of this range right here. Here's a 50%. That's dynamite. Look at that. 50% retracement of that range. Another of the same range went up. Here's a 62% retracement of this range, or maybe it's 50. I guess 50 of the entire range. It did go down some, but it's, oh my God, my Teams is going off here. We're gonna ditch Teams because I don't want it interrupting me anymore. All right, just kill it. Thank you. Okay, my team is out there teaming right now. Okay, so let's see. Let's go to another couple charts here just to see a few examples of this. Okay, and let's see. It should have brought it up right away, but maybe there's none on this chart. Let me go to the next one. So it's a little picky. There you go. Yeah, just there's weren't any. All right. So here's of this range here, 38%. But you can see how good they are. I mean, they're very predictive on moves. So Fibonacci retracements are just awesome. I'll do one more for fun. All right. So here's like 62%. 50%. This is of this move. Looks like 50%, which did not work out. Short term, this is good. But yeah. So again, you want the clearest ones you can find, the ones that where the prior move is real obvious. Like in this case, it's really not. Let me see. Let me go one more symbol and see if I can find one that's just real obvious, where the range itself is sort of showing you, and still not so much on this one. Okay, well, I'm gonna try one more and then I'm looking for a very clear descent where everything is just very, very sharp and clear in the move. And these are all kind of, it is good there and good here, but it's looking at this whole range up to here, which has gaps and stuff in it. I'm looking for one that is just very obvious. And this is the closest one I have. That's 32% of this range. So it's good. Moving right along. We're almost at the end, actually. We're getting there. Okay. Fib retracements, very useful. Gaps are important. There's 3 basic kinds. If you read any technical analysis book, the breakaway gap, the measure gap, which is typically halfway in the move, and then the exhaustion gap, where a move has gone really, really, really far, and then it does a gap there. So that's and they each have psychological meaning. This is the start of a move from a low. A lot of buyers come in. Here, where you've fallen all this, you have the last gasp of the sellers right there. The last people that go, oh my God, I was in Tesla, it's down 30%, I'm out of here. And they sell. And they go, oh no, why'd I do that? It turns around. So those are the 2 psychologies. And this is just interesting. When you get a smooth move, it can't be like lots of gaps in here. It's got to be a nice move with an unusual gap right there. And so you don't know if that gap is one of these or one of these. You just don't know. So you got to let it go a little bit. If it doesn't turn around, then it's probably a measure gap and you know where it's going. This is one of the first patterns that has a really good target. I talked about saucers having a 50% move target, but this if you see that is going to hold, like it's not going to go back into that gap, it's moving away from it, you can look back here at this low and go, yeah, it's probably going to there. So that's why it's called a measure gap. It measures the halfway move. And we go back into our, the drill by now. So go back into here, Do this, and we're going to find gaps over here. They're right there. Okay, very good. And refresh, please. All right. Okay, so it is looking for, solid indication of gaps. So we see breakaway gaps on here. We see exhaustion gaps. Had a big move down. We're going to go the other way now. Here's a measure gap, perfect measure gap right there on the side of that chart. We're coming down. We go boom. Well, it keeps going. So it is going. If I were to measure from here to the center of that to there, that distance is the same as this distance. So, and this is another one. So we had a gap here, a big one. It started to kind of pull back into the gap, but it didn't do it. It kept going. So this is likely to go from that distance to here, and it went further. But that's how that works out. And I'll go and get back a couple more symbols here. That's Salesforce. Here's Caterpillar. And so it's looking for every significant gap in the chart and marking them for you. So breakaway, exhaustion, breakaway. This one just isn't anything really. It's just a consolidation that had a gap in it. And this one's measure move. So from here to here, we kind of came back, but then we took off again. So right about here, it's going, let's see, from there to there is about to there. It's at least going there, very likely, because a significant gap after a smooth move. Okay. And we're almost there. Volume, climax, and trend. This is one of my favorite patterns. The thing about this one, if you scan for the really good ones, which means they're very obvious, they're just killer. So we're going to see a bunch of them in the chart here, but what essentially happens is the market is selling off, and right at the bottom of that move, like at the point where it ends, you don't know that yet, of course, because you're in the market looking at it, but you have this volume rising, almost like a stair step. The next bar, it backs off. That you just buy it right there. You just buy it and put a stop right below that point. Because most of the time, if this is really obvious, it's going to go up. It is. The same for this up here. Boom, boom, boom. Stair step up, backs off. This backs off. Oh yeah, short that sucker right there, and put your cover right above that point. So let's look at some examples. Right here. Okay, refresh. All right. So let's see. How do I add volume? I think I can do it. Add indicator. It's up in here, isn't it? Let me see. Indicator.
It is. See where it says ACC swing index?
Yeah.
Click on that. And you can actually just type in volume, or you can scroll down if you want.
I'm a scroller. I'll just do it. There it is. I saw it. Okay, volume. There you go. Thank you.
And then you want to drag it or drop it.
Okay, so we're going to put it, drag from here.
Yep.
There it is. Thank you. And we're fine with all that. So good. Okay. So if I just look at this guy right here. Look at this. Straight up on the volume, and it backs off right there, right where it detects the pattern. And it's just killer. But you can see how many of these work. I mean, so this one here, if I get the little crosshairs and just go to it, it's looking at that volume increase and where it starts backing off. That's where it fires the signal. But you can see how powerful this is. And if you look for the ones like this one that are really unusually big, or this one, look at this, very smooth, straight up, and then it backs off. 1 bar is all you need. It backs off. Okay, what's that? That's good for, gosh, a good little move there. Looks like maybe 3 or 4% right there. So, yeah, it's really, really good pattern. And just because we've been doing this, I'll go and do a few more charts here. Here's Boeing. So you can find, look at this one. It's down, it's dead, it's going, and here's the volume right there. It comes up, backs off. Oh yeah, baby, we're going. So, and some of these, I want to make a note on these. Some of these are like opposites, like it says, so it's using the prior move as direction, but the other way to interpret this pattern is as a volume trend. So this is a nuance of this that I want to share with you. You see this VT right here? That's like you have a move, you get the stuff for volume climax, and it keeps going. So typically those happen about halfway in the move. That's a volume trend, not a volume climax. You don't know until you get just a couple bars, but you can tell pretty quick. That means that the market is either selling or buying into this move. It's not going to reverse. So, that's what, but it doesn't know, right? So you have this happen. It's got to make a signal one way or the other. So it's always going to do it in the opposite direction of the move. But, you get to this bar, and with that big volume, event down there, it's going to keep going.
Hello?
Same
Yeah.
here. Are we okay? What? Hello?
Oh, great.
Oh, Sunny, I'm sorry. This is Greg. Yeah, she okay. Apparently, she didn't realize that her camera and mic were on.
That's
Sorry.
okay.
Please continue, Ed.
Yeah, we're almost there, but I love Sunny. She's great. Can't wait to see her come on here. It's awesome. Okay. So anyway, that's on that pattern. And like I say, we're kind of in the home stretch here. I think there's one more, I believe. Yep. So these things are fascinating. Consolidations are a battle between buyers and sellers, and you'll get a break one way or the other. They almost always break in the direction of the prior move. So prior move here, you go to the consolidation, and the distance that you go is very, very often twice that distance. So A, B, if I go up about that same distance up here, that's where it's going, C. So AB equals BC. So when you see a consolidation happen, it starts to break through, you just look at where the last clear higher low was, and that it's going that far probably. There's all kinds of them. Again, this is something where you want to see it has to be sorry, one second. It has to be a very clear battle between buyers and sellers going back and forth. It can't be some mushy thing. The software will flag anything that's going back and forth. So you'll see mushy ones in there, but you can just quickly tell when you're looking at them, which ones are the good ones. So let's go ahead and do that. All right, consolidations. And all right, very good. And our IT department's here. Okay, thanks for closing that. Appreciate it. All right. They're doing something on the servers. I don't know. We'll see. So, and again, it's going to flag anything it sees. So most of these, this one looks really good here. Most of these are kind of like, it's got a sideways motion, but the point is it will flag all of them so you can look at them. So I quickly can see that one was good, just looking at it. This one's really good, back and forth sideways, very clear. So is this one. This one is pretty good, but it failed. So sometimes they'll do that, obviously. But looking for, nice one here. Look at this. Nice pennant pattern, breaks through, starts going up. So where are you going to go? From here, last major low to there, twice the distance, baby cakes. That's what they do. So very, very commonly from here to here, twice the distance. Do a couple more charts. Caterpillar or Boeing. See what we got in Boeing today. So kind of mushy sideways movement. Not really any good ones in Boeing that are very clear consolidations. Let's go back one more. So imagine you're using Explorer, you're finding these things, and which ones would you trade? This one's pretty good. I don't see any really just nice, back and forth motion in here in any of these charts, but you do see them. They happen enough that you can scan for them and pick them out. I'll do one more here. So let's go to Amazon. And yeah. So this is pretty good back and forth. It's a consolidation failure. Those are really strong to trade where it doesn't go in this direction, it goes the other way. And other than that, so pretty good one there, pretty good one here, but what I'm talking about, the really clear, like those pictures showed. That's what you're looking for. All right, so that is pretty much an overview of all the patterns in the book I wrote, and also, of course, in the software. So what I'll talk about is other things about this product. And I hope I've given you some insights into these patterns, the different things that happen with them, and how you can predict how far they're going to go. I really hope that I've helped with that. But the software, this plugin, is, like I said, the best chart pattern thing we've done because it's so flexible. You can, turn on and off any patterns. This is the old advisor, and I think we'll get that all worked out so it looks like this again, or I'm sure it will for you. It's just my machine, so don't worry about that. But it'll show you, click on any signal out here, it'll tell you what it is, commentary about it. And so this is what I want to talk about now, the configurability of it, because it is intense and easy at the same time, which is unusual when you find that. So if I go into patterns here, what I can do is I can say, you know what, let's just turn on all those suckers. All right. So if I do that and I say refresh, you're just going to see patterns everywhere in this. Like they're everywhere. So you can scan, like here's a nice volume climax right there, a couple days ago on Amazon. That's a good buy point for sure. No recommendations though in this webinar. This is strictly educational, but that looks pretty good as an example. And so they're all here. Okay, so what you can do with the module, rather than look at all this stuff, let me try to get a better chart. This chart just doesn't have much movement up and down in it. It's yeah. We'll go one more. See if I hit it. Oh, that's pretty good. Okay. So, and you can just look in here and see all the great signals that are coming from these patterns. Support resistance break right there. So it's fantastic. If it finds them for you and then you decide that's a good one, I'm going to trade it. But what you can do with this, we actually built this engine looking at, like, I think it was millions of historical bars and classifying the patterns as to this is really strong, it's probably not as strong, or it's kind of a weak pattern. And so that's down here. This is the strength rating. And we use it for most of the modules in here that you can set the strength rating for the kind of signal you want to get out of it. Let's just say you have to have it, 65 rating at least. So if I close this and refresh and see, actually it looks like about the same. Let me try it again. We do it again with another higher rating. And I'm hoping this is where my installation doesn't mess with us here. Something about it, but okay, let's try to refresh that with a 70 rating. Oh yeah, there's less. So if you generally look across those signals, you'll see they're better. They're generally, boom, boom. Here's one here. So you can just say, I only want to see like better signals, than just everything, or I want to see everything. And so as you continue to take that scale to the right, you'll get fewer and fewer and fewer. And so wherever you've set that when you run an exploration is what it's going to find for you. Okay. So very, very great feature. The other thing, let me see here. Go back to my slide. So it's very configurable. And then there's the strength rating that I mentioned. And of course, you can use the Explorer to find things. Let me say a few more things about this dialog box, because there's more you can do with it besides just give me the better signals. So that's this. So in here, you notice how it says short term, medium term, long term. So every pattern, it's based on bars. Short term is like across 15 or 16 to 32 bars, medium term 32 to 64, and long term longer than that. And so you can say, I only want really, really short term stuff. So you can go down here and say, give me the short term guys, turn off the medium terms, and turn off the long terms. Okay, and you say, all right, good, refresh. And now it's looking for very, very short term signals, very short term. Same thing, I can do long term, I can just do all of them if I want to. There is a set of defaults that I selected when I made this plugin, which is right here, restore defaults, and it will set them back to what they are. You can also say, I don't want to do any short signals, I only want to do buy signals. Yeah, I want that. So I could say turn off the shorts, and I may have to do it this way. So right like that. There isn't a button down here I can do that with, but let's go and do it. It doesn't take long. So do that. Now we're only doing upward signals. Yeah, should be like only up arrows. Yeah. So if you kind of just want to trade the long side, you're never going to short anything, that you should set that way. Okay. All right. So I think I've covered. I'll have one last couple things to tell you about here, and we're good. I'll turn it back over to Jeff. Okay. So let's see. There is the Explorer, which I could run it, but this screenshot shows you what it does. You can say, the cool thing is we separated out the patterns so you can explore for just consolidations or just saucers. Those things are killer, or any of them or all of them. And so when you do that, it'll tell you, okay, we had, on whatever the date is, this the right edge, I guess. So there's this ID over here. The ID is the ID of the pattern. You may have noticed those numbers to the left of each pattern. So that's what that is. So it'll tell you there's quite a few different collections here. And of course, as you know from the Explorer, it's very easy. You just double click one of these and it shows you the chart. And then if you have our expert turned on, it'll show you the signal that it picked up. So very easy to use. I don't need to give you an Explorer lesson because it's just, you just turn it on and say, go do it, on these symbols. This was run on the S&P 500, obviously, but it tells you how many it found and everything. So it's a great thing that's been in Metastock for a long time, and it's really, really useful. That's how I would use this every day. Let me go find all the really good saucers, the trend line breaks, the resistance breaks. Look at the market. What's the market doing? Right now, it's going back and forth. So, I'd probably want support reversals because it's going back and forth a lot, that kind of thing. So just kind of go with the market to get your best patterns, or look for all of them and just look at them and go, is that psychology intact for the market to do something with it? My last little bit here is 3 tips for trading chart patterns. And the first one is, I've already talked about saucers being killer. I really like the support resistance stuff, and obviously volume climaxes. We saw a lot of those that were really, really good. So, those are kind of the ones that I focus on when I'm trading. Also, when you're looking at charts, you don't want to trade charts like this. Just say no. You want to trade things that the market sees psychology to them. There is a reason to buy or sell based on what the chart's doing. It's here too. There's a kind of a trend line. There's a one here, but it's just too volatile. It's not good. So try to trade, and you can use ATR scans to get tamer charts. There's some things in Metastock that do this that Jeffrey or another person can kind of get into and tell you about. But so tend to go towards those. And the last thing together is you can just turn on the chart patterns with anything. You've got some plugin from whoever, and it's generating signals. Well, turn on the chart pattern module and look for coincidence. Like this would be like an RSI reversal system going below 30 and reversing back through it. It's a very common, good system to use. And you can just see, I've got a Fibonacci retracement right there. So that is a very powerful way to have this just help anything you're trading, because it's going to show you where those are happening. So like I say, this is the most powerful version of this that we have, bar none. Our other software, and I really enjoyed working with the guys at Metastock to make it. They were so much fun. They helped us, my programmer and me, all the way getting it done, and I'm just very proud of it. So Jeff, with that, I'll pass it back over to you. Oh, let me see. There's this thing. Yeah, we already talked about the free book. Okay, so we're good. All right, Jeff.
All right, couple comments that are coming in the chats that I want to read off to you before I let you go.
Okay.
Michael B says, I bought Ed Scanner many years ago. It's ahead of its time.
Thank you. Appreciate that.
Rick said, I obviously missed how nuanced the scanner is and how good the charts are.
Thank you.
And Michael also said, I bought Ed's book, 7 Chart Patterns That Consistently Make Money from 2000. Did you write another book?
No, it was written 98, and that's it. Just one edition.
Okay.
Yep.
Very cool.
But I did make the presentation that you can download. That's much longer and more examples. So, yeah.
Very cool. Okay. Let me go. Oh, I was going to check real quick to see if we have anything in the YouTube. Nothing in the YouTube. No, it's been a quiet YouTube today. I don't know.
Huh.
In any case, great job. I wanted this. You had said you enjoyed making it with us. It's always been a pleasure to work with you. I always have fun when we're working on stuff.
Me too, Jeff.
All right. Very cool. I'm going to kind of come in here and talk. Oh yeah. And my Lucian actually sent me a message, and he said, in order for you to get the commentary to work, all you had to do is detach the expert and reattach it.
Oh, so, I'll go try that.
I figured I wouldn't bug you right in the middle of the presentation, but that's.
Thanks for telling me. Yeah.
Alistair wants to know if your scanner works with other platforms or just Metastock. I'll let you answer that one.
Well, we have software we've done, desktop software. Actually, we sold our software together at one point, OmniTrader. So it's in there, but really Metastock is the only, platform that we've done this add-on for. That's it. I mean,
cool.
Yeah.
Good. And I think the scanner, I love the scanner in Metastock. I love how it can go through everything and kind of write it, that kind of stuff. So if you're primarily looking for scanning, Alistair, we'll give you a free trial. You can try it out with the chart pattern edition. Yep. I'll talk about that in just a second here. Thank you, Ed. I appreciate your time. Sorry we didn't get your camera working, but I'm glad we were able to see you. And I'll show your picture again just for fun.
Great. I can dream.
All right. Very good.
Thank you, Jeff. Enjoyed it.
All right. Let me go ahead and do this. We had an accidental shutdown yesterday, so I'm going to go ahead and dismiss Ed real quick, just so that doesn't happen on accident again. Ed wasn't here. It wasn't him that did it, but a little bit nervous is all. A great chart pattern. I love obviously with chart patterns, they've been used for a long time now, very, very popular in the markets. Since they're a little bit more subjective than, other things, like is your stochastic at the right level, they can be a little bit harder to find. But I love the way that Ed has put this together. The 13 different scans, the way you can kind of give them confidence ratings as well, the statistics that he uses. Ed's just such a smart guy, and I really appreciate him. When he initially released his first product, I was pushing him. Let's do the chart pattern. Let's get the chart pattern. Your technology around chart patterns are so cool. Let's get it going. And so here it is. It's available for Metastock. You get 13 explorations, your expert advisor, your comprehensive manual, and a 64-minute, that's a very precise number, a 64-minute boot camp that we put together to kind of push, to help out, make sure you understood how to use it right out of the gate. So here is a picture of the working commentary. I love how it kind of draws out the consolidation pattern for you. It shows you exactly what it's looking for. It has all these kind of notes that were under it. Very, very cool. And a great job. And and there's what it looks like. So in terms of the patterns that it identifies, consolidations, cup and handles, Fibonacci retracements, gaps, head and shoulders, saucers, support and resistance, breaks and reversals, tops, bottoms, trendline breaks, trendline reversals, and then of course the volume climax, which you spent a lot of time talking about today. You're welcome, Alistair. Thanks for the question. Today we are offering this on a discount, of course. Normally it's $14.95, and it's worth it. Every penny of that. Actually, it's probably worth twice that. Today at the conference, we're going to give it to you for $9.95. We're going to back it with a 30-day money-back guarantee, so you can try it, see how it works for you, make sure everything is cool, that it's working well, and we'll even, if you need it, give you a free trial to Metastock, which I've stated before. Metastock has been rated the best software in its price category for like 32 years in a row. It's probably one of the best scanners. In my opinion, it's the best scanner I've seen. But the reason it's been rated so highly for so long is how useful it is. It is because it helps people with what they're doing. So that's why we have customers that have been with us for decades. So get the free trial. If it doesn't work for you, you have a pretty good risk reward. 800-882-3040, metastock.com/saleschat, or metastock.com/fulgentcpe. I'm getting a few messages. I think it's kind of funny. I think Alex, hello. I see you. Greg, welcome back.
Welcome. Can you hear me?
Sorry.
I can hear you. Yeah, Alex. Perfect. We're going to do a little bit of a prize drawing, and we'll be right with you. Greg,
sure.
Are you still having?
I am here. Sorry. Yeah. For some reason, I decided it was a good time to update the software on my Wi-Fi, and that just took me all down. Seemed like a good idea at the time.
Yeah, you're back. That's all good.
I'm back.
Metastock.com/fulgentcpe. You can any of the specials at metastock.com/comp promo. You should join our community. We have a lot of fun up there. We have market experts come in, and we talk to them about what they see in the market. We'll talk about indicators and how they work, how they function. We'll chat about the markets all day long during the markets. There's tons of classes we do. We just finished up a fairly long options course that we did. So all of that is free. You can go to thetradersforum.com, and you can make friends with us. You can hang out with us. It's a really good community of people, and the whole design of it is to be traders kind of sharing ideas, helping other traders, looking at what's going on. So much better than so much more grown up than a lot of those other forums out there too. Thetradersforum.com. Except for when Greg comes.
What now?
All right. Let's do a prize. I'm going to...
Let's do it.
Let's see. I need to actually give me a second.
Sure.
I need to open up the prize list because we're going to give away a prize from the prize bag, the virtual prize bag, if you would.
We may want to take a second to acknowledge that we're using a new interface that is a different experience to when the presenters are logging in, and they don't know a lot of times when they're logging in that their camera's on. So in the middle of a presentation, another presenter turns their camera on. We have no way of turning that off. We just have to interrupt and tell them, hey, your camera's on. So
Yeah,
that's going on.
If that happens, and to you while you're speaking to Alex, just know that you're fine. We don't want a big, huge distraction. So anyway, let's give away. I have one more of McMillan's 14-topic home study course. If we go to Larry McMillan spoke, I believe on Monday. I'm sure it was Monday, but you can go to his website. He sells a 14 seminar home study course. It's normally $500. He has novice lessons on here, intermediate and advanced, and you can go buy this if you want. And if you registered for the event today, you might win it if Greg makes you lucky. So in order to win the prize, what you want to do, if you're watching this and go to a webinar, that's perfect. You don't need to do anything. You're already registered. You don't need to register more than once. You don't need to register every day. You don't even need to be here necessarily. You can, but if you're watching this on YouTube, there is a pinned comment at the top. It'll say register now to be eligible to win for prizes. Click on that, fill out the form. That'll enter you to win the prize. So how did I do, Greg? Was that pretty good? Did I explain that well?
Fantastic. And I'm even going to go ahead and paste right now in the chat the link that we're talking about.
All right. And then when you have a second, I will have you give me a number between.
I have that second, and I have that number. Well, I had it a second ago. It's
right.
50. It's 5,301. 5301.
Okay, that is a Mr. Actually, I'm not sure if it's a Mr. or Mrs. Wilson with a Gmail address in the Philippines. So congratulations. If your first name is Wilson and you have a last name of C, and you are in the Philippines, you just won a prize. So I will get that information over to our friends at McMillan Analysis Corp and ask them to set that up for you. Greg, thank you for the assist. Do you have anything you want to say on your way out?
No, just thanks to Alex for his patience and break a leg.
All right, very good.
Absolutely. Thank you so much.
Let me introduce you, though. We do these things the professional way, Mr. Spiroglou. All right, Alex, I'm really excited about Alex's presentation. Alex is the winner of the Dow Award. Which year did you win that?
2022.
2022. Very prestigious award. I'm going to let him talk more about kind of what his thought process is about re-engineering Gerald Appel's MACD-V. But one of the things that I really like is it allows you to make an apples to apples comparison across different instruments. Alex has created what he calls the MACD-V, or the MACD-V, and he's put a lot of thought into kind of how he can improve one of the most popular indicators there, and he's done a good job with it. Alex, that's how I'm going to introduce you.
Perfect. Thank you so much for the quick introduction. Just a couple of notes. First of all, my share button seems to be deactivated, so I'm not sure I can.
You can now.
All right. All right. So let me put F5 to do the presentation. Go to webinar, Chrome, select window tab. I think that's the one. Now, can you see my screen?
I can. That's very nice.
All right.
Yeah.
Okay.
So I'll get out of the way. Your turn.
All right. So I'll start the presentation as quickly as possible. The problem is I have too many slides, so I'll have to go very, very, very quickly. Now, this is the first of all, a big thank you to Jeff and the wonderful people at Metastock for having invited me at this prestigious conference. I'm sure you've heard a lot of good stuff from a lot of knowledgeable speakers, so I'll try to add my 2 cents worth. This is this is part 1 of the webinars I'll be doing on MACD-V. There will be shortly another coming up, which will be more advanced. So if you like this, make sure that make sure note that this is introductory. I will be doing a lot more in depth in an upcoming webinar we'll arrange with Metastock. All right, so today's presentation is about momentum. This actually indicator, these two indicators, the MACD right here at the bottom, the histogram we see in the middle panel, and the top is the S&P 500, which is color coded based on the MACD readings. So today's is about ultimately momentum. It's about a paper I wrote in 2022. I will outline the underlying logic. The paper was quite lengthy, so today's presentation is just a small part of it, and it managed to win 2 awards. First of all, the CMT Association Charlotte Star Award in 2022 for outstanding research in technical analysis, and also the National Association of Active Investment Managers, the Founders Award, again in 2022, for advances in active investment management. So let's begin the presentation. The 4 biggest mistakes when using momentum indicators, because I'm sure you've seen a lot of indicators being presented today by esteemed presenters. So this is what I'll be talking about, and the 4 biggest mistakes when using momentum indicators, which led to the innovation. So what are these mistakes? The first one is what I call indicatoritis, basically having Christmas tree charts. When you see a chart and then you have another, 4 or 5 technical analysis indicators at the bottom, RSI, stochastics, percent B, and so forth, all for confirmation. So indicatoritis, using 5 indicators or 4 momentum indicators, and I stress momentum because someone may use one for momentum, one for volume, one for volatility. That's different, but talking about momentum. So indicatoritis or Christmas tree charts is a very, very big problem. So the second mistake I'll be covering, and of course I'll be giving you the solutions, is having an all-weather approach to using momentum indicators, because we know that markets go for trending phases and range-bound phases, but some indicators and momentum indicators are best for trending environments and best for chop environments. So people try to use the indicators for both environments, while some are suited best for one and some for the other. The third mistake we'll be talking about is a very simplistic use of indicators, seeing basically from 2 perspectives. One is overbought and oversold. Usually, for example, things like RSI or stochastics, it's above 80, overbought, below 20, oversold, or using something like a divergence, when you use MACD or any other momentum indicators. So basically, people use this in a very simplistic way. These 2 ways, overbought, oversold, and divergences. So this is what I call the 2-pattern problem. And the 4th mistake we'll be talking about is having a silver bullet mentality, and in whichever indicator you're using, and think that this is the be all and all of technical analysis. We'll plot a moving average on top of it, and then there you go. We'll have an oversimplified view of how and why markets move. So yes, of course, momentum is very important. Indicators are very useful, including my own, but it will address how to place everything in context and not misrepresent. Although it is an awarded indicator, I don't want to be misrepresenting as the be all and all of technical analysis. So these are the 4 main problems we will be talking about, which gave the need to create the MACD. So and the consequences of this, of course, these problems are usually burning money, losing a lot of money. So let's begin with a risk warning. This is the legalese talk. I'll let you look at it at your own time. 3 main points I would like to make. First of all, this presentation is FEPO, for educational purposes only. If you're looking for a get-rich-quick scheme, I'm not your guy. And there is only one guarantee I give for traders, is that you will have 100% guarantee you will have losses in trading. So what will you learn? My promise to you, I will show you how to overcome the limitations of classic momentum indicators, the 4 problems I mentioned before, and identify the 7 core momentum patterns of the market. The methodology will be simple and systematic, works across all time frames, across all markets, all time frames, and you can combine it with existing methodologies. That's the benefit of the MacDV. Now, this is how usually my presentations end. So I have some bonuses for those that do manage to stay awake. I'll send them the paper, the instructions how to install on Metastock the MacDV histogram indicators, and also the MacDV momentum model. A webinar will be organizing with later with Metastock. And all you have to do with this is just stay awake and send me an email at alex@alexspiroglou.com. So, okay, let's start. See these 4 problems that led to the creation of the MacDV and also how we can solve this. So, indicatoritis, again, these Christmas tree charts. What is the solution? First of all, we need to go back to first principles, understand what momentum is. And this is a map of England because this is where I live, although I come from Greece, but I've been living for the past 22 years in England. So supposing someone is traveling from London, okay, north, that's direction. In trading terms, this is the trend. So is this a bullish trend, uptrend, or bearish trend, a downtrend? Okay, so direction from London to Sheffield or London to Portsmouth, down in the south, it's close where I live, is basically your trend. Momentum is the speed. So for example, you could be going north from London to Sheffield or Lincoln or any other area at 20 miles, 40 miles, 60 miles, or 80 miles. So that is momentum. Momentum measures speed. It also measures both the speed and also acceleration. So your speed may be 60 miles coming down from 80, or it may be 60 miles climbing up from 40. So that's acceleration. So basically, that's what you're seeing momentum. And it's extremely important because it helps you pick the right strategy for entries and exits. And so again, if the trend is your friend, momentum tells you how close of a friend he or she is. Is it a close buddy of yours? Is it an acquaintance? So this is how momentum tells you the strength of the trend. And as my friend Ralph Campora said, always listen to mom. So now that we've taken the first step to understand what momentum is, which indicator do you use? Now, if you go to Metastock or, of course, or any other technical analysis platform, but especially, since we are talking about Metastock, you've got literally hundreds and hundreds of momentum indicators there. And I think it would be fair to say that we probably have more indicators than traders. So let's try to build the momentum indicator taxonomy in order to try to understand, where these hundreds of momentum indicators how can be organized. First of all, there are 2 types of momentum indicators can be classified in 2 types. The first one is range bound and normalized. Examples: the RSI, the CCI, stochastics, %R, range bound and normalized. And the second type is unbound and non-normalized. For example, the MACD, rate of change, and so on and so forth. So these are the 2 broad categories. So no matter which indicator of these hundreds of indicators, momentum indicators there are there, basically they will fit into one of these 2 categories. So now that we have momentum indicator taxonomy understood, so let's try to go to the next step. Which indicator to use? This is where the problem of indicatoritis comes in. People get understandably confused, so they start plotting indicators, the RSI, the stochastics, or whatever. But basically, they don't understand that they all sing the same song. It's basically what statisticians call multicollinearity, and that's a big problem because they plot this for confirmation, but all they're doing is just getting the same signal from 2 correlated, like 80% correlated indicators. Now that's a big problem. So both indicators are right or both indicators are wrong. So what's the solution for this? Use one indicator. Use one speedometer. So in your car, we all have one speedometer. Use one indicator. Don't use 3 or 4 indicators. That's a classic rookie mistake. So the next question, of course, the next problem is, okay, so which indicator do I use? I have to admit that I've used and being in technical analysis, my first actually uh, um, uh, encounter with technical analysis was back in 1995 in my university, in City University, and I've been using studying technical analysis, being a student of technical analysis since then. And during these, during these decades, basically, I've used both types of indicators, and I can't say that I'm 100% pleased. And the reason is because I found that some indicators, some momentum indicators, one type is best for trending environments, one is best for range bound environments. So in order to show you this, and this is where actually where the MacTV started getting my desire to create a better indicator was uh, let's create an indicator valuation scorecard. So what I'll do is we'll create range bound indicators and unbound indicators, and we'll use this criteria to examine them so you can get a better understanding of why and actually what are the pros and cons of each category. So let's first of all look at range bound and normalized indicators. Range bound and normalized indicators, they have the advantage that they're, as the name says, normalized, which means, and again, I'm here using the stochastic oscillator. We can use the RSI, whatever other normalized and range bound indicator you wish. The same principles apply. There is normalized scaling 0 to 100 usually, although not all the times, but you can use any other scaling of has a minimum and a maximum. It's on usually this is on a percentage scale. And the advantage is that it is comparable across securities and across time. So what you have here in the S&P 500, the stochastic is, say, in this particular example, 85, and you can see previous instances where it was 85, or you can compare it versus another market. So it is comparable across time, securities, and it can also have some kind of a signal filtering, basically saying, okay, if it's overbought or oversold, and so the market is above a 200 bar moving average, the indicators below 20 take buy signals, the classic sort of oversold signal in an uptrend. So you can definitely do all of these, compare across time, securities, and filters, create filters with the setups with range bound indicators. So let's look what the problems are. The basically thing is, because there are range bound, the values cannot adapt to trend. So in this particular example, the S&P 500 rose about 16%, but the max value of the indicator was 100. So the market was rising, but the indicator could not rise with it. So whether it was at 4,000 about 4,100 when the rally started, and then it ended up in 5,800, the max value was still 100 for the stochastic indicator. It could not adapt. It could not say grow 100 and 110, 120, and increase because as the market speed was going up, the speedometer could not adapt. Just it's like having a speedometer that has a maximum value of 100 miles. So the problem is also it gives you prolonged extreme readings. Because of that, it gives you a false reading of that's overbought, but it's not actually overbought. Just the function, it cannot grow any more than this. So it gives you prolonged overbought and oversold readings, which actually they're not truly overbought or oversold. So the trend influence is quite damaging for range bound indicators. They do not adapt to trend. They have problem with extreme readings, and they also have problems with divergences in the sense that someone may misinterpret. Let's go back to this chart and say, okay, this is a divergence because the market is going up, but the indicator is not making higher momentum highs. So these are all the problems that the range bound indicator have, the advantage and the disadvantage. So let's go to the unbound indicators, unbound and non-normalized. And in this example, I will use the typical the MACD. the MACD indicator, as we know, created with Gerald Appel. He in the 1970s, he won 2019 the CMT Association annual award. It's an award for his contribution to the field. And I'm sure everyone knows the formula. The MACD line is basically the short-term moving average minus a long-term moving average. The default values are 12 and 26. Again, not written in stone. Then you've got the signal line, which is basically moving average of the MACD line. And then later on, a gentleman called Asprey in an article he wrote for Technical Analysis, Stocks and Commodities, created the histogram, which is basically the difference between the signal line and the MACD line. So basically, the short-term moving average and the long-term moving average is the first derivative of price. The MACD line is the second derivative of price. The signal line is the third derivative of price, and the histogram is the fourth derivative of price. There are a lot of basic use explanations of the MACD on YouTube. I won't go into details. You can look it up. So we'll go into a bit more interesting topics. So values adapt to trend. Do values adapt to trend? Again, trying to examine this through the criteria we used before. This is a chart of the S&P 500 during the crash, during the COVID era, the period. And as you can see, the market was falling and falling and falling from February up until April. And the indicator was falling as well. It wasn't getting pegged at low levels like the stochastic or the RSI. It was because it was unbounded, it was able to adjust to trend. So that was a very good example of the unbound indicator. Likewise, because of the unbound nature on the way up, it didn't give you prolonged extreme readings. So you can see that as the market was the rally was increasing, getting stronger and stronger, so the indicator was making new momentum highs, while the stochastic indicator was just getting pegged at high levels. It couldn't adjust with the readings couldn't adjust and reflect the increased strength of the market. So again, you had better divergent signals. In this particular example, there weren't any divergent signals because the market was making new price highs, MACD was making new momentum highs, and the RSI was flatlining, not because there was a divergence, i.e. a slowing down of momentum. It was just the function that it was, it couldn't get higher. So the trend influence is a positive for unbound indicators, where the Achilles heel for range-bound indicators is the unbound indicators shine. So someone may be tempted to say, okay, let's use unbound indicators because they're better than range-bound. Let's look at the last criteria we used. Now, the scaling for the MACD indicator is, in a word, useless because it's not normalized, and it's not normalized because it is basically an absolute price indicator. If you recall from the formula of the MACD, which is basically the MACD line is short-term moving average minus a long-term moving average, the spread, these two moving averages, the numerical values, is very much dependent upon the absolute numerical value of the underlying security. So the S&P 500 in this particular example, in this chart, it was 3,700. So the short-term moving average could have been say 3,600. The long-term moving average would have been there a bit lower. So you calculated the spread as of two absolute price indicators. So it would have measured it not in percentage, but in absolute points. So that means that it's not comparable across time or securities. So whether the indicator is at 50, 100, minus 200 is absolutely useless because it's an absolute indicator. And as you can see, it has no stability across time. Here's a chart of the mini S&P 500, and you can see how the oscillations of the MACD from 2020 onwards were much bigger. That wasn't because it had more momentum. It was just because the indicator had increased and gone from 2,000 to 6,000 points. So the absolute price was higher. Again, this study I did from the in the paper. From 1957 to 1971, the MACD maximum value was 156. The minimum was minus 3.3. This is for the S&P 500 the cash from 1957 1971. From 2019 to 2021, and the study stops at 2021 because that was, and I submitted the paper in 2022. The maximum was 86 and the minimum was minus 225. Again, the differences between minus 3.3 and minus 225 wasn't because of bigger momentum. It was just the price was, the indicator was higher, was making bigger oscillations. So the MACD is not stable across time. And it doesn't take too much to understand that there is no stability even across securities. If you take a high priced item like the S&P 500, the MACD will be, in this particular example, 23. If it was another example, this one have cattle, the MACD here was 5 because the underlying security now is 287. So lower price security, a lower price of the MACD. Again, it doesn't mean it has more momentum, less momentum. It's a function of the price of the market is being calculated on. Likewise here, if you go, so the MACD is not stable across securities. So you cannot, it's not comparable. So for these two reasons, you cannot create a life cycle model. Basically, an overbought, oversold level. This is when it's low, when it's high. The value it has is absolutely useless. Again, you can see this very clearly here. You cannot say, if it's above 10 is overbought, below 20, say for example, it's oversold. It's completely useless for filtering. So it's not doable. And two extra problems that the MACD has. It has before I give you the problem is it's a trend following tool. It's an excellent trend following tool, but as all trend following tools, it gives a lot of false signals because markets spend time oscillating a lot more than they do trending. They have a lot of false starts, a lot of false signals, and unfortunately, these cannot be filtered out. So signal accuracy is a big problem here. So the last limitation that the MACD has is because of the lagging nature of the, obviously the moving averages. Whenever there is a very volatile and strong move, it takes a lot of time for the indicator, the MACD, to catch up with the signal line. So the signal line is not a tool I would use for signals. I think it's a bit of a misnomer to call it a signal line. I would call it probably like the momentum trend line to distinguish it if it's bullish or bearish. So in this particular example, you can see that the market, when it bottomed out, you can see the difference between the price when it actually signaled with the signal line. That was a huge rally, about, if memory serves, that was about 12%. So in terms of strong reversals, it is a bit late. So signal line, the timing is the problem. To recap, bounded indicators get stuck. So this is like having a speedometer that goes from 0 to 100 fitted on a car that can go 200 miles. So your speedometer is good only if you have a speed up to 100. On the unbounded indicator side of things, the needle can move indefinitely, but there are no readings on it. Obviously, actually there are readings up for absolute value, but they're useless. So these are the two problems. So the indicator evaluation scorecard shows, the different pros and cons of each type of indicator. So in 2014, my goal started to find some to create a best of two worlds. Basically, what I wanted to do is take the range from the range band and normalized indicators, take the normalized feature, and from the unbound and non-normalized, take the unbound feature. So to create a hybrid normalized and unbound indicator, which would literally be the best of two worlds. So let's see how we can create an unbound and normalized indicator. Is this possible? Right. Okay. So the first attempt was to use the PPO, percent price oscillator, the MACD percent. Well, I thought I had discovered it, but obviously someone else had done it before me. So the first attempt was to normalize by price. So what's the formula? The PPO is the 12 minus 26, and then you can divide by the 26 period moving average, or the close, if you will, and multiply it by 100, put on percentage basis. So what you're trying to do here is take the spread of the MACD and put it in relation of the absolute price. So if it's 50 points, the MACD of the S&P 500, okay, what is the underlying value? 50 over what? 50 over, say, X points, where either the 226 period moving average is, or the close. So you can multiply it by 100. So these 50 points suddenly become 2 or 3, 4%. So let's examine this. This is a chart from the paper. Please do email me if you can give you the paper and the indicators on Metastock. This is a chart of the S&P 500 going back to the 1960s, and the PPO seems to be normalized, to be stable across time. It has spikes to the downside and to the upside, but that's good because it's an unbounded indicator. We want this actually to happen. But by and large, you seem to be contained in a range of values. So what I did in the paper, I decided to find where 95% of the values are. So, and treat the rest as my definition, a statistical definition of overbought and oversold. So what I found is that for the S&P 500, the PPO, the MACD percent, 95% of the values, actually 94.3, were between 2 and -2. So if it was above 2, I would treat it as overbought. Below -2 as oversold. So it was 2.2% of the time overbought, 3.5% of the time oversold. So it does the trick, huh? It does the trick. So it seems to be stable across time. So normalizing cross prime was, fix the issue. So let's look at the second limitation. So this is a chart of the Bund, the German fixed income market. Again, the PPO seems to be normalized. Now you can see it's stable across a mean. Likewise, for a really wild market, natural gas, again, also seems to be normalized across time. So we seem to have solved the problem, or have we? Let's put some numbers. The PPO for the Bund, again, going through the 95% of the values exercise, is between 0.7 and -0.7. So that's the overbought and oversold level for the Bund. But for the natural gas, it's 7 and -7%. So although they are normalized across time, they're not normalized across securities. And here's a table that shows everything. So natural gas is 7%, S&P 2%, and Bund -7%, which practically means that it can be normalized across time, but not across securities. So if you're trading, say, if you're monitoring the constituents of the S&P 500, you have to do this exercise 500 times. So PPO is not stable across securities, and as such, it is an improvement, but not a solution. So which means, of course, you cannot create a uniform life cycle model, a uniform definition of overbought and oversold. So that was my quest around 2014, because I got a bit fed up with switching indicators or having to deal with the limitations of each type. So around 2015, I had my eureka moment, and I created the MACDV. And the paper I wrote later on at 2022, because I was using the indicator for 7 years. I hadn't disclosed it, and then I decided to say, okay, I'll write a paper around it. disclose a few parts of it, and then we'll see what happens. And it managed to win 2 awards. So what was the formula? My question was initially, why doesn't percentage calculations work? It seems counterintuitive because percentage calculations seem to normalize or make things comparable. In everyday life, when we say, okay, this is 2%, this is 5%, a 3% increase, and 7% decrease, they seem to be normalized. I mean, they seem to be comparable when we put things on a percentage basis. So why wouldn't this work on markets? And then I thought to myself, wait a minute, the Bund is a very, very low volatility market, and natural gas is a really, really crazy market. So there is an underlying difference between these in their volatility. So maybe we should normalize by volatility. And this is exactly what I did. So instead of doing the 26 period EMA of price, I did the 26 period EMA of volatility. And for my gauge for tool for volatility was average true range. So the signal line became the 9 period EMA of the MACD-V. V for volatility. I decided to keep the original name to honor the inventor, Gerald Appel. I didn't create the Spiroglou indicator. And then that's the histogram of that. So let's try to see it. Examine it. Again, the same exercise where 95% of the values are, above it are overbought and oversold. So look at that. So above 150 and below minus 150 are overbought and oversold. 95% of the values actually exactly is between 150 and minus 150. So basically, when momentum is 1.5 times its volatility, that's overbought and that's oversold. And you can see both statistically and also visually how it works between 150 and minus 150. Now, because there is a huge upward bias to the S&P 500, the overbought and oversold amounts of time is not equally spread. So it is stable across time. So volatility seems to be working. Let's go to and this is how it would look like comparing the MACD versus the MACD-V. Huge improvement. So let's go to the Bund. Will this work for the Bund? Again, chart on Metastock. The bottom part is the MACD-V. I plotted 150 and minus 150. It does work. Let's look at the stats. So inside the range between 150 and minus 150 was 95.9% of the time. And it did work above 150 to be overbought and below minus 150 to be oversold. And also please notice that the max value is 295. The minimum is minus 193, which means that the unbound feature advantage of the MACD-V of the MACD is kept intact with the MACD-V, and this is the period where range band indicators would really have a struggle. When the max value was 295, this is which means the MACD-V would be increasing and increasing and increasing. This is where the range band indicators would be getting pegged at high levels for a prolonged period of time. So let's try it with natural gas. Now really put it to the test with a market that has completely different trend structure and volatility, momentum. Again, the visually speaking, it seems to be does the trick. How about putting some numbers on it? Again, likewise, inside the range between 150 and minus 150, 95% of the time, 95.5 exact. Above 150, 2.8% of the time. Below minus 150, 1.7% of the time. And max value 298, minimum value minus 362. What a beautiful feature that one. That it can be to the upside and to the downside completely unbounded. So benefit 2, stable across securities. So that was the eureka moment found in 2015, that it is stable across securities. It can be comparable now, both be unbound and comparable and normalized. So my next step was, okay, now that we have the extreme values, are there any other ranges we can find? So for example, can we just say not just overbought and oversold, but other ranges we can find? And can we use these ranges in conjunction with the signal line? So basically, the MACDV ranges. What I try to do is, okay, so if 150 is the overbought and minus 150 is the oversold, then how much? There must be a point in time when the MACDV is deviated from the zero line, indicating strength. So I try to find the point where there is enough strength to say that's a market that is really strong and there is rallying, and that either to the upside or to the downside. There is a run up or a run down. So 50 was the magic number, if you will. So 50 and minus 50. So when the MACD is above 150, it's overbought or oversold, to put it in common momentum indicator language, and above 50 is rallying strongly. So we have 50 and 150, but we also have the signal line and the MACD line. So let's try to see the combinations. And this is how the MACDV looks like on your Metastock charts. It's freely available. Now we will be creating a more advanced, I have a more advanced version, but that's the point of we'll be doing for the next webinar. So let's look at the ranges. Again, some stats for those that really like numbers, between 50 and minus 50. Again, this is all presented in the paper. Send me an email, I will send you the paper so you can read it. I will just highlight your attention to see how true normalization looks like across markets with different trend and volatility structures. Again, natural gas, taking three completely different asset classes, equities, fixed income, and commodities, completely different volatilities, but you can see it works really, really well. We also managed to, again, normalize the histogram as well. The formula, as we know, it remains the same. The signal line is the 9. Histogram is the difference between the MACD and the signal line. So this is how it looks like now. The top part is the histogram for the S&P 500, the E-mini S&P 500, the middle panel, and this is how the MACD histogram looks like, normalized across time. While the histogram, the raw histogram, is absolute mess because it's an absolute price indicator. Now that we've got it formalized, again in the paper, I've got the overbought and oversold levels above 40 and minus 40. How much time it spends, very remarkably similar for three completely different asset classes. Again, mentioned in the paper. So send me an email I can send this to you. So the solution to the all-weather indicator problem is actually creating an unbound and normalized indicator. So instead of switching to range-bound markets to use range-bound indicators, on trending markets to use a trend-following market, because you don't know when that switch will go from one type of environment to the other, use a normalized and unbound indicator, which is the true innovation in the momentum indicator work, body of knowledge. It's the MACDV. So let's look at the third problem. The people using in an oversimplistic way indicators either overbought or oversold. And again, that's really bothered me because I thought, there are more patterns, there are more types of behavior in markets other than, overbought, oversold, and a divergence. So let's look at the rules, because I like being rules based. Actually, the training program I have is called the Smart Rules Based Trading System, which basically throws you in a very rules-based way how to combine technicals and fundamentals. So follow the rules or follow the fools. So let's try to create the MACDV ranges. The range rules is basically the combinations, the 7 combinations, 7 core patterns of the market, and we will be using the MACD for that, the signal line and the ranges. And that is try to capture types of behavior. So when the market is rallying, when is it retracing? So is it having a rundown, reversing, that is like the opposite of a rallying, or rebounding, so, or ranging. So these 7 core patterns, instead of just saying overbought and oversold and divergence, we can have these 7 core patterns. There are a lot more patterns we can use, but I'll give you the 7 core ones. So first of all, it's the what I call the risk range, what we would call overbought and oversold. And that's the MACD line being below the signal line, and MACD below minus 150. So that's your oversold, the risk range. This is how it looks like. Again, this is the S&P 500. During the crash in COVID, the MACD was below 150. It was below the signal line. It was a classic risk range type of setup. The market was oversold, indicated by the MACD, and of course, it had the advantage as the market was falling, the MACD could adjust to it. So the second pattern would be the rebounding pattern. So obviously, after being oversold, the market will start rebounding. And for easy references, all these 7 patterns begin with the letter R. So risk, rebounding, rallying, risk, retracing, and ranging. So rebounding is basically when the MACD is above the signal line, it is rising, and it's coming off of an oversold level. So it's between minus 150 and below 50. So this is how it looks like when the market is rebounding. So on the top chart, you can see the rebounding range. And at the bottom, you can see how the indicator behaves. You can program this in Metastock, although we already have that as a indicator, and also some scanners, which I will show you later on. Again, it's all free. And create the MACD above the signal line, and you also have it between 50 and minus 150. If you want to be finding rebounding markets, and you can start in a very rules-based way to look for markets that may be having some patterns you may be interested in. And then rallying. Rallying basically is when the market is continued from rebounding and it's getting really, really strong. So above 50, and the MACD is above the signal line above 50. That's the rallying range. And then you have the risk range to the upside, the overbought, which is the MACD above the signal line, above 150. So that is the risk range. Again, that was the top before COVID. MACD above 50. Again, what it shows you here is how much momentum there is in excess of its own volatility. And then you have the retracing range. So if you want to be doing pullbacks, you can say MACD below the signal line, and that is below 150 and minus 50. So that is the rule for it. Also have the reversing range. The reversing range basically is the opposite of the rally range, where if you're looking for a market that is falling very strongly, this is how you program it: MACD below the signal line and below minus 50. And this is the one that I'm really, really proud, the last pattern of the 7 core, the ranging range. The ranging range is basically an attempt to highlight a market that is in a trading range, and that was always a very, very tricky. But we managed to crack the code, if you will, with the MACD. And I did this through the following way, by saying, okay, what happens during a trading range? The market is ranging, it has doesn't oscillate too much, and that means that the 2 moving averages of the MACD, or the MACD in this particular case, will be close, so they will have a small spread. So when the MACD is near the 0 line, or the MACD, if you will, is near the 0 line, it means that the market doesn't have enough strength to pull it away above the 50 or the minus 50. But I also wanted to put a time qualifier to distinguish between the market is ranging, i.e. it stays in a tighter range, or it's just traveling from rebounding to rallying. Because when the market is, has been a fall and then starts bouncing up, rebounding, and then extending its rally, going to above 50, it will pass through the zero line. But what I want to do is to capture the behavior when it stays is in the ranging range for a prolonged period of time. So what I did is I said, so the ranging range is when the market is below 50 and above minus 50. So it hasn't enough strength to be either rallying or reversing for 20 consecutive bars. So, and this is how you capture trading ranges. It's a beautiful way to, and so what I do in this case, you can stay, okay, I won't be taking any trades up until the market starts extending the rally to upside or downside. So we saw the ranges. Now also look at the histogram. Again, the risk range is above 40 and minus 40. This is how it looks like for the S&P 500, short-term overbought and short-term oversold. So the MACD histogram, again, this is taken from the paper. Please do contact me so I can send you the details. Now, so, and this is how we solve the, the basic use of the problem. Just very simplistic use of using overbought and oversold by the MACD ranges and range rules, by using the MACD 7 core patterns. There are a lot more patterns. This is just a basic webinar. So let's look at also trend specific ranges. This is more of like a preview, if you will, of what we're seeing later on. So what I did is try to find overbought and oversold levels defined with a trend. So above the 200 or below the 200 moving average. And what I found was, again, for the S&P 500, the S&P 500 is 76% of the time above the 200 moving average. But what I found was that it is above minus 100 99.4% of the time, which means that as long as you're in an uptrend defined by the 200 bar moving average, the lowest value you can have is minus 100, and that's a 99.4% observation, 99.4% of the times. Likewise, you can see the same thing in downtrends, which was quite astounding, 99.8% of the time, which practically means from a trading point of view, if you are above the 200 more moving average and the price is just slightly above minus 100, that means you've reached the bottom, assuming that the market doesn't break below the 200 bar moving average. So as long as it keeps the 200 bar moving average, then you have a 99.4% chance that the market will set a bottom there or a top if you're below it. I tried to do the same exercise for the Bund. Remarkably, the same numbers. Again, 99.8 for bear markets and 98.9. Also did the same thing for the natural gas. Thus, I created overbought and oversold, levels for which are trend specific. Again, we'll be expanding upon this more on the second webinar. Likewise, again, for natural gas, again, almost the same numbers. It was quite remarkable how normalization we was able to achieve. So that brings us to so basically we've solved the two-pattern problem by the MACD ranges and range rules. And we also have another advantage. We created a lot of volatility normalized indicators. For example, my good friend Linda Raskis, the 310 oscillator, that was also normalized. The LBR 310 oscillator, which is basically a MACD by 310, also normalized that. Also the works of Alex Elder, fellow Greek Chuck Dukas. Again, these are the stats to prove it statistically. So a lot of other indicators. So volatility normalization of the indicators opened up a huge door to improve a large number of the momentum indicators in general, not just the MACD. So the last problem I wanted was to touch upon was the having a silver bullet mentality for the using momentum indicators, and that is a lot of people may get overexcited with the RSI, the MACD, and say, okay, I'll be using that. Well, in theory you could, but what I wanted to show you is a bigger picture of what it requires to become a trader. So this is a nice framework by Ian Notley. The market cycle model. Basically, I have what I call a multiple time frame, multiple factor approach. Multiple time frame, I look at 3 time frames, long, short, and intermediate term, which is basically monthly, weekly, and daily. And I think there is a huge interplay between these 3 time frames. But I also, more importantly, look at multiple factors, because although yes, we look at prices to determine entries and exits, there are macros determine. So technicals tells you the when, but macros and fundamentals tell you the why. So that's why hence I use a multiple time frame, multiple factor approach, where I go on the monthly chart to look at the business cycle, economic statistics, go to the weekly chart and look at macros, and then go to the daily to do the technicals. And then I try to combine this where the 4S framework, setup, signal, size, and stop. So this is my workflow for the smart rules-based trading system. As I mentioned, first the macro, which is the intermarket cycle, the commitment of trades report, sentiment, and seasonals. So on the weekly and the monthly chart, I'm an economist. On the daily, I'm a technician. Then I look at the markets themselves, the daily chart, and I look at the multiple trend model, MACTV, volatility valuation, relative ranker, and then I put this into a model, which is the 4S framework, a setup, signal, stop, and size. And this is where the MACTV relies in the whole framework of how to create strategies combining technicals and fundamentals and various time frames, 3 time frames actually. So it's good to have just a big picture as well. So again, free bonuses. I'll leave a few minutes for questions. Please do email me if you want to have the paper and the indicators on Metastock. To give you a bit of a glimpse how you can get it in Metastock, go to support, download updates, and get the Metastock update and patch files. Jeffrey can give you a lot more details than me how to get it. And this is, you can use this URL to go directly to it, tinyurl/macdv metastock. It will lead you to the file. You can also get the MACDV manual for Metastock. You can also use the MACDV indicators, Alex Spiroglou MACDV 1 free and histogram. This is called free because there is a paid version will be shortly organizing to have program, which is a lot more advanced, signals and patterns. You can also have templates with the free version. You can also have commentary. Again, if the good people at Metastock have made a wonderful work of making this very easy for us, and also highlights and scanners. All this is open code, so you can use it freely. And also, of course, explorations. You can see which markets are rallying, which are the risk range, which are retracing. Again, wonderful. You can look at the 7 patterns. I hope I haven't put you to sleep. Thank you for your attention, and I hope I'll see you very shortly. And for that, I will leave it to Jeffrey to perhaps, if there are any questions.
All right, I'm not asleep, and I don't think anybody did go to sleep. But if they did, shame. Michael says, I find the MACD-V histogram to be more useful in identifying the turning points than crossovers of the MACD and signaling, as well as reducing the settings from the standard settings. So that's just a comment, I think, mostly. Play with the Michael. Play with MACD-V. See if you like it. I think it's a really generational work on it. There's a reason it got the Charles Dow Award. And I want to point out, we did link in the chat. I point down when I talk about chat. We did link in the chat the direct link so you can grab those files. Alex, I'm really excited about the stuff we're working on. I just looked at the new build our programmer sent over to you. Looks really cool. So I'm looking forward to kind of talking about that when it's ready.
Absolutely, we'll be creating we'll finalize it and then create some kind of a course around it so people can benefit from it.
Right on. Thank you very much, Alex. Appreciate your time. Appreciate the free version too. That's really cool gift to all of the Metastock users out there. Go ahead and grab
Absolutely. Thank you all so much for the invitation. It was great to see, and I hope you enjoy the rest of the conference.
Right on. Thank you very much, Alex. I'm going to dismiss you. We've had one instance where the conference was shut down, so I'm just going to eject you to avoid
Absolutely.
that. Have a good one. Thanks for have a great weekend too.
You too.
Okay. I'm going to share my screen real quick. We're going to give away prizes, of course. All right. Before we do the prize, I want to say thank you to Stocks and Commodities Magazine for being amazing. They've supported us. They've been part of the events that we've been doing since we were doing it on the Stone Age. Like, it's gotten so much easier to put these events on. Greg and I were reminiscing about that the other day. But I do appreciate all of the stuff that Traders has done, Stocks and Commodities has done over the years to support them. They've been an invaluable partner for us, and you can find out more about them at traders.com. Thanks, guys. Greg, this slide means it's prize time. And while you're coming and jumping in here, I do want to say thank you to everybody that's picked up Metastock. There's been a lot of you. I know you're going to be happy with it. There is a reason it's been rated so highly. You still have through the end of the day to sign up for the special extended trial, where if you buy a month, we'll give you the second and third month for free. That'll give you scanning, testing, forecasting, real-time market alerts, commentary, expert advisors, all that cool stuff that we've been talking about all week long. And the starting price for that is just $75 a month. If you set up today, $75 will get you access to the highest rated software in its price category for 32 years in a row. Metastock.com/conf promo. Metastock.com/sales chat. 800-882-3040. Did you get all that in the chat, Greg?
Yeah, sure. No, I did. I'm jotting down the spot.
All right, cool.
All that going on in chat.
Let me look at the prize bag, and we'll see what's next. Ooh. Oh, this one's good. Vince Vora, Rahul Arora, they do their market updates through tradingwins.com. We're going to give a 30-day subscription around that to the next random person. Greg, and to be random, you need to join. You need to register for the event. So if you're going to GoToWebinar, you're fine. Don't worry about registering for the event. If you're watching on YouTube and you haven't registered yet, register now. I'm going to refresh the list for the rest of the day. You want to register so you can be on that list and be eligible to win a prize. There's a pinned comment up. You just click on the pinned comment, put in your name, email address, and that's all you need to do. You'll be registered to win. Greg, I need a number between 1 and 6,952, please.
Okay, that number, according to Google Random Number Generator, is 6,653.
And that would be Muhammad Y in the USA.
I don't know why he's in the USA.
Let me see. Let me go ahead and make a note of that. Thank you very much for the assist.
You're welcome.
Okay. I just don't want to lose track of them. I've lost track of a couple of them before, and then I had to go look at the video. So I'm trying to figure out who it was. I've not done that today, this event. Thank you very much, Greg. Let's go ahead and kind of move on to the next speaker. Our next speaker is Sunny Harris. Sunny is just delightful. I absolutely love having Sunny on here. Not only is she delightful, she's incredibly smart. She's a workaholic as well. She was originally a systems programmer. She'll probably talk a little bit about this for Lockheed Martin. She's retired. She's written tons of books. She's read 600 of them, but she's written quite a few of them on trading and programming trading and making easy language easier. All that kind of stuff. Sunny is somebody that I met very, very early on in my career at Metastock, and absolutely have always respected her. She always does such a great job when we have her in here. And Sunny, that's how I'm going to introduce you today. Want me to keep going? I'm going to ask you to unmute. It looks like you are muted right now, but you should be able to hit the little microphone button and you'll be unmuted. All right. I can see that your camera's turning on. All right. I can see you, but I cannot hear you. Which was funny because we heard you before. If you can hear me, right next to the mic button, there is a little bit of an up arrow. If you click on that,
Her microphone is not muted, so that's not the problem.
No, correct. Yeah, I think it might be selecting the wrong microphone. Is really kind of the issue, maybe. I'm ready to call her though if I need to. Okay, I do show her microphone is muted now. Yeah, but now it's unmuted and we still can't hear.
Can you hear me now?
Yes, I was about to call you.
You've already called me once today.
I did, yeah. So I can hear you. I can also see you.
There we go. How's that?
Very well, friend. You look great. Yeah.
Thank
Let me
you.
go ahead. I'm going to turn on the presentation. I'm going to actually make you the presenter. And it should just pop up a note and say, hey, do you want to share your screen when I do that? So we're almost there.
With this modern technology, huh?
Yeah, they had to change everything.
There we go. That one's screen 1 is that one.
Okay. I'll let you know what I can see when it comes through.
No, that's not the right one.
Okay. Do you know how to change it, or should I help you?
I'm working on it. Hang on.
Okay.
How about this one?
This is a pretty landscape, though.
Yeah. But I've got one that says Metastock, Jeffrey Gibby.
All right. I'm looking for it.
It's on, should be on screen 1. Let's see. Speakers, microphones, computer, audio, camera, session.
If you see where it says share
again
at the bottom.
Can I see what?
If you see where it says share next to the, it'll be mic camera share. If you click on that down arrow, you can select the screen again.
Okay. I'm working on that.
Okay.
We got a circle. Spinning.
Okay.
And that's not the right one. This one, screen 3.
Okay.
How's that?
Perfect. It took a minute to change over, and I'm like, wait. Okay. But I can see Metastock Jeffrey Gibby, spelled correctly, too. February 20th, 2026. Is that all there is?
That's it.
Sunny, we've got you going. I'm going to get out of the way, though.
That's phenomenal. I'm glad that's working now.
Yep.
All this modern technology for old folks like me is a challenge.
Well, you're good to go, and I'm here if you need me. So I'll be quiet.
Thank you. I had, until earlier this morning, I had Thursday, February 20th, and I'm like, Thursday? I don't think today's Thursday. I'm talking about today, I'm going to say, is that all there is? So Sunny Bands, which are that's my flagship indicator, is so easy to use that everybody says to me, it's too easy. Is that all there is? It's just that easy? And I'm like, yes, it's that easy. So we're going to talk about it today. My passion is in helping beginners, intermediates, and even the advanced people who want to learn something new. This talk's for traders who have not yet become wildly successful. Now, by wildly successful, I mean last year, no, not 2025, but in 2024, in my live trading room, which is 1 hour every morning, we made 482% in 1 hour. And 2025, we made 139% in 1 hour. And I don't know where we are yet, but we've only had one losing day, and it was $65. And the rest of them, like this week, I've made $4,000 and something. So it's a wonderful strategy. It's a wonderful opportunity to watch a real trader trade and call out what I'm thinking and why I'm doing it. And then there are also people who have not traded much, but they want to learn. I get a lot of calls from people who say, I don't know what futures are, but I'd like to know. I'd like you to teach me. So we do that. And then folks who want to improve their trading results. I had one guy call me last year who said, I'm an investment advisor and a trading advisor, but I haven't been profitable yet. Can you help me? So I'm like, okay, yep, we can help you. I do love to teach, mentor, and consult. It's not my primary living, that's in trading, but I love to help people learn to do what I do. And here's my phone number. This is not a sales number. This is my cell phone, 760-908-3070. I dare you to find another person like me who gives their cell phone out. It's not only that, it's at the bottom of every one of these slides, 908-3070, and it's at the top of my website on every page on the website. So give me a call, not during this talk, but give me a call afterwards. Now, trading is ultimately a business, and it should be approached as such. If you're doing anything less than that, it's folly. So it is a business. Approach it like a business, and you can do well. Trading is a solitary endeavor because you're the trader. You don't have any employees usually. You're the researcher, the manager, and the chief bottle washer. But one of the things you need to know is there's a risk of loss in trading stocks, futures, options, cash, and other leveraged transaction products. The risk can be substantial. I talked to a woman yesterday who said, well, the risk is too high in trading futures. It's not any higher than in anything else. You can lose all your money trading anything, stocks, options, anything. Past performance, so they say, is not a predictor of future results. That's one of those legal statements that makes things clear and lets you know what the risk is. But if your past performance is negative, it probably is a predictor of future results. I've been trading for 45 years, and in those 45 years, I've had 2 losing years. That's it, just 2 losing years. But all investing involves risk of loss, and individual investments may vary. Your capital is at risk when you invest. You can lose some or all of your money. That's just part of the game. So never risk more than you can afford to lose. I'm going to say that again. Never risk more than you can afford to lose. So if you want to see my full disclosure, it's on moneymentor.com, which is my website. And you can click on the bottom where it says Money Mentor, and you can see my full disclosures. Now, I am a professional trader. I've been trading for 45 years as a professional trader. I trade futures, gold, stocks, and crypto. I don't trade options. I've found that I was very successful at losing money trading options, and I don't like that. It's not my goal. I'm going to tell you a little bit about myself, but first let me show you some of how I trade. I call this Is That All There Is? Because there's only 3 rules to sunny bands. 1, 2, 3 rules, that's it. And so I say, is that all there is? Is that all there is to it? Yes. I have people say, that looks so easy. Is it easy? And I'm like, yes, it is. There's just 3 rules. And it's not a lot of thinking. It's just 3 simple rules. And that's all there is. And this is a Metastock chart showing sunny bands, which is, you see the green channel to the outside of there's a moving average in the middle, the gold and purple line. That's my dynamic moving average. And then there's a blue, it's actually cyan line that goes on either side of the dynamic moving average, and a green line that goes on either side of that. So we've got 6 lines, gold and purple, dynamic moving average, cyan and cyan, that's the inner bands, so lower inner band and upper inner band, and then the green one, which is the lower outer band and the upper outer band. So we've got 2 bands on the top, 2 bands on the bottom, and a moving average in the middle. Then we have yellow dots that show the ideal turning points. That's called my PHW, which stands for potential hourly wage. I wanted to know when I first started trading. I'm always very logical. I'm a mathematician, so I wanted to know how much money is possible. Because if there's only $25 possible, I don't want to bother trading this. If there's $25,000, then I do want to be bothered trading this. So I need to know how much money is on this chart. And then I divide it by hours, days, and weeks, etc., to get down to the brass tacks. I want to know how much money is in that. So that's what these yellow dots tell me. PHW, potential hourly wage. Then on the bottom, I have some colorful lines, red and gold here at the beginning. Then I have purple and green at the bottom, some just in this one place. But this is my it's my DMA histogram. I was listening to Alex's talk and I was fascinated by it, so I got lost in his terminology. So this is my DMA histogram, which measures the difference between the gold lines and the purple lines on the DMA. So if the difference is greater, like over here at the left, then we can tell that this is above the zero line, and we can tell that there's enough space there to make it volatile enough to trade. We need enough room for it to actually run somewhere. Then the gold tells me gold is on top, up here on the DMA. The gold line is on top, and it's moving up, which tells me the price is moving up. And then when it turns red, it's telling me that we're losing momentum. The DMA is getting closer together, and as it gets closer together, we're losing momentum, and we're going to go into a sideways period. Over here, just right of the middle, there's purple lines, which tells me purple is on top. When it turns green, it tells me purple's on top, but we're losing momentum. So we're going to go up. Now, one of the nice things about Sunny Bands is I teach you how to use them myself. You get them on a trial. I'll give you an hour's free time. You can have 10 days trial or 7 days trial, depending which platform you're using. But in that trial period, I will sit with you for an hour and we will go over the rules in the live market over and over until you get them. I don't know anybody else that does that either. Access to the developer in person. So we can do that. And then after you purchase the product, we can have another 2 hours for free by Zoom. I don't love the platform we're using right now. What is this called? Go to webinar. My favorite is Zoom. So we can get together on Zoom, which is like on your phone or on your computer, as long as you have Metastock on whatever platform it is you're using. And then we can go through all the ins and outs of trading with Sunny Bands. Now, why do I use blue candles? Let's go back a little bit. See the blue candles they used to be green, now they're blue in my book? That's because Sunny Bands is green. And if I put green candles on a green chart, then it's harder to see. So I like to keep things easy, and that's why I use blue bars, blue candles. Sunny Bands are green, blue contrasts for greater visibility, and that's why I use it. Now, here are the basic rules. This is level 1, and I'm still showing you how I trade. So basic level 1 is enter long when we have red candles going downward and touch the lower outer band. So right here, we had red candles coming down into this. We had a blue candle touch the lower outer band and bounce. So it became a buy signal on the second candle. So on the second candle, that's the confirmation. And now we have a buy signal. So we move downward, touch the lower outer band, and then turn blue, and then move back inside the lower outer band if price confirms. Now, by that I mean the high of the blue candle needs to be higher than the high of the one preceding it. So I like to have confirmation. I enter short when we've had blue candles going up, touch the upper outer band, and come back down on red. So the second candle confirms the first candle, and we go short. If you have any questions, be sure to put them in the chat. So let me pull the chat up here. Yeah, so anybody wants to put things in the chat, I'll be happy to answer them during the session. Basic rules number 2, level 2. If the DMA line is flat, you see how this is flat right through here? If that DMA line is flat, so sideways, I don't expect price to move very far beyond the midline. So you can see right here, it goes up to the midline, stumble, 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 and it comes back down again. It often acts as a barrier to further movement. Got that? Basic rules level 3. If gold is on top, which it goes on top right here, so if gold is on top, stay long until the DMA is penetrated. So gold stays on top, on top, on top, on top, and then here it's penetrated. So we get out. Now, I don't know if this is a weekly or daily or 5-minute chart, but it's just a chart of the candles. If purple is on top, you can see purple is on top and we're moving down, then I stay short until the DMA is penetrated. So right here it's penetrated and I get out. So 3 simple rules. That's all there is. It's said to be generally rising or falling. That's level 1. Level 2 is it's flat. And level 3 is it's trending. And we have to decide whether it's trending up or trending down. You can go to moneymentor.com/downloads if you'd like to see the Sunny Bands rules. So there's 3 rules on that page, and it's the 4th bullet down. So let's get deeper into it here with examples. Again, I'm a professional trader and have been for 45 years, since 1981 through the 41% crash of 87, 38% crash of 2000, the 52% crash of 2007 to 8, as well as the 38% COVID crash. So you could see the market moves sharply down sometimes. And the next one, when's the next crash? Well, I don't know. We've had 9 months up so far. And I have a chart that shows that. I don't have it in this presentation, but I've got a chart that's called boxes in boxes. And what this is you get daily charts in a box, and then you get weekly charts in a box around that box, and then you get monthly charts in a box around those 2 boxes. So it shows longer term movement, so you can see how the longer term looks with respect to the shorter term. I had Sam Tennis program that one for me. I'm afraid that Sam, who wrote with me, we wrote the Definitive Guide to Trade Stations, Easy Language and OOEL Programming. Took us 2.5 years to write it. I guess he was so tired after that he died. He did die, which is very, very sad. But he had cancer and he was working his way up to getting that book done with me before he died. So he programmed that for me, and I miss him terribly. I trade 5-minute and 15-minute charts, 5 minutes on the left in a yellow box, and 15 minutes on the right in a green box, and that's really about all I use. I've heard people say that the S&P is the most difficult market to trade. I don't think so. It's definitely the most liquid, but I don't think it's the most difficult to trade. But I've been trading it for 45 years, so I'm used to it. And I do have long-term stock holdings, and to me that means a week or more. So if I'm trading on a 5 or 15-minute chart, A week looks like pretty long term. And I do trade a little bit of cryptocurrencies and also gold futures. This is Stocks and Commodities Magazine's futures liquidity table. And you can see that the S&P 500 is always at the top. It has these stars all the way along here. And then it gets out to the edge of the page and it puts what I think it's plus or something, because it goes beyond the edge of this chart. It's always the most liquid. And then we come down here to about 5 of them down, and you can see the liquidity's dying off. Don't buy something you can't sell. If there's not enough liquidity there, you can get stuck in a position that you don't want to be in because you can't get rid of it. So stay with the most liquid contracts, please. Now, I'm going to post a PDF of this talk on my website for members. Membership is free. Just go to appearances.html to see where I've been, and you'll see that this will be posted later this evening. I also do a free podcast called The Sonny Harris Show, which originally was also with Sam Tennis. And so Sam and I interviewed, I think, 54 famous gurus so far. And now I'm interviewing them by myself. But it's free, and listen to the people talk. It's so fascinating to see why they trade, what they trade, and how they got into it, and what they do. And I mean, we've got some musicians who became traders. I've got some doctors who've become traders. I've got, of course, some software engineers who have become traders. And then I do a Substack called Where's the Dow Going From Here? And I publish. Now, I'm not doing it every night right now. I was doing it every night, but then I had to go to the hospital. So I'm not doing it every night just yet, but I will again. So I like to say where I think the Dow is going tomorrow and why. So it's free. Subscribe to it so I know you're there, and it'll continue to be free for some time. At the end of this session, I'm going to give you a week free in my live trading room, which is called Trade Along with Sonny. And you can see me trade every morning at 7:30 a.m. Pacific time. Somebody came in this morning on Mountain time and they missed it altogether. So Pacific time, Trade Along with Sonny. And I send you a Zoom link so that you'll know where to go. So every morning at 7:30 a.m. Pacific time. Also, you can see here that I was #1 trader twice in a row. First one was at 365%, and the second time was with 178% profit. In 2025, I had 132%. In 2024, I had 482%. And I'm right at 100% so far in 2026. I grew up dirt poor in Appalachia. We had an outhouse, a two-holer though, so we were doing well. We had an outhouse, we had an enormous garden, we had dirt floors, and I lived in Appalachia. Then I got 3 degrees in mathematics and another one in photography because I knew that education was the way out of the South. I've been programming for 58 years, 45 years trading, and I was a systems programmer for Lockheed, not Martin, not Marietta, up in the Bay Area. It was called Lockheed Missiles and Spacecraft. So that was the Lockheed I worked for 4 years, I think, or maybe 5. And then I left there and became a founder of a little company called ISCO, which became the world's leader in computer graphics software. And one of the outcomes was Harvard Graphics. And I worked there for 8 years, and then I retired. First time. I'm still retired. I think trading's retired. So when I was 30, I sold my stock in the company, and retired. I started out because I didn't know anything about investing or money management or the stock market or anything of the sort. I gave my millions to money managers. And in the first 3 weeks, they lost $75,000. Now, people have pointed out to me that's not a whole lot out of millions under management, but I don't care. $75,000 is a lot to lose in 3 weeks. So I figured I could do that poorly on my own without their help, and I taught myself to read. I taught myself to trade through reading related books. So now I've read 748 trading books. I didn't enter a single trade for the first year of watching the market. I watched the market. I learned what the rhythm was. I learned how it moves. I paper traded so I could see what I would have done or what I thought I would have done. And I found out how hard that is. But I watched the markets. I've written 9 best-selling books so far. Trading 101, How to Trade Like a Pro. Trading 102, Getting Down to Business. Electronic Day Trading 101, Getting Started in Trading. TradeStation Made Easy. Going Vegan with my friend Linda Blair, the actress. Using Easy Language 9.x with Murray Ruggiero. And then now, like I said, the definitive guide to TradeStation's Easy Language and OOL programming with Sam Tennis. And of course, articles for all the magazines in the business, at least all the ones I know of. And there they are. There's the covers of my books. Oh, and I did a magazine for 8 years called Trader's Catalog and Resource Guide. I published that so that everybody, it's just before the internet, mind you. So people couldn't find the things they needed. So I put them like a yellow pages, alphabetically by company. And then there was another section that gave all the software names and then the company. So you could look up anything, anytime, anywhere. And this is the latest 2 books. Now, I collect quips and quotes. So if you have something you'd like to say about me or about Sunny Bands or anything else, just send me an email and I'll put you in the quips and quotes section. I got one last week that said, "Thanks, Sunny." That was it. That's the whole thing. This guy had attached his performance report showing $98,000 profit for the 2025 year using Sunny Bands. Don T. He's up $4 million since he started using Sunny Bands. So you can go to Quips and Quotes on my Money Mentor site and you can see all the things that people have sent me, all the emails that I've gotten. If you go to Substack and look for Sunny Harris, you'll see the free market predictions as I make them almost nightly. I had something called, 4 weeks ago, I fell. No reason to fall, nothing to trip over. I just fell. The nerves in my legs gave up, and there I was. So they took me in the ambulance to the hospital and gave me emergency surgery on my spine. I had something called cauda, C-A-U-D-A, equina, E-Q-U-I-N-A. It's where all the muscles in the lower part of your spine are. It's worse than a slipped disc, which is millimeters. This was inches, slipped inches. So thank God for that emergency. Thank God I fell like that instead of just going lame. So here's the link, tcrgsunny.substack.com, and I'll get back to doing it daily pretty soon. TCRG Sunny. That's Trader's Catalog and Resource Guide. TCRGsunny@substack.com. It's called Where Will the Dow Go From Here? Every day or so I post the latest prediction, and it's, like I said, it's free for now. I do have customers all over the world. You can see here. Don't be afraid to call me. I answer phone calls at all times of the day and night. Now we're going to learn about how to make a six-figure income. Let me have a little coffee first. There we go. So let's say this is a six-figure income, $120,000 a year. Now, I know that almost every one of these would be really happy to make $120,000 a year trading. It's hard to do, but it's possible. So if we divide that by 12 months, we get $10,000 a month. Now, that looks a lot more possible than just saying, I'm going to make $120,000 this year. Divide it into monthly goals, and your goal is $10,000 a month. Oops, let's go back one. So $10,000 a month divided by 20 trading days in the month is just $500 a day. That looks a lot more possible, doesn't it? $500 a day becomes 120 grand a year. 5 trades each at $100 would satisfy that goal. 5 trades of $100 each is $500 a day. See, that looks a lot easier now, doesn't it? It's a matter of setting your goals and understanding how to achieve them. With the S&P, there's usually between $1,000 and $3,500 per day potential if you're going both long and short one contract. So when you know all these things, it's a better goal. Break it down. Do it for yourself like I've done. So before you start trading, determine your goals. Divide the goals into attainable daily so you know every day what you're supposed to attain that day. Develop a written plan. Now this is really, really important. You need a written plan, and you need to have it in front of you or to the left of your trading screen or something so that you know exactly what you're supposed to be doing. So plan your strategy, test your strategy. If the stats are good, keep going. If they're not, go back to step 1. You've got to plan your strategy, write it down, test it faithfully. I don't want you to say, oh, yeah, I could do that. I want you to say, this is the signal, this is what I would do. Next, this is the signal, this is what I would do. If you haven't tested it enough, it's because you're afraid to know the results. I have a little index called Cardinal Profitability Constructs, CPC. The CPC index is 1.2 or greater, then I feel confident in trading the strategy. If it's less than that, I will not trade it. So there are 3 things that go into determining the CPC index: profit factor, percent profitable, and the ratio of average win to average loss. If you take these 3 things, PF, profit factor, percent profitable, I call PP, and then ratio average win to average loss is R. So if you multiply PF times PP times R, and the outcome needs to be greater than 1.2, then you have something that you might be able to trade. Kevin Davey, who writes about algorithmic trading, tested this in, I can't remember if it was in Technical Analysis of Stocks and Commodities or on his website, but he first thought, no, this is ridiculous, this won't work at all. And then he tested it and found out it does work. So it's a valid test. Here, for instance, total net profit 3,000, profit factor 2.848, percent profitable 70.59, but you use this as 0.7059 when you're doing the multiplying. And the ratio is 1.03. So these are the 3 numbers that go into the CPC index. And there's the formula: profit factor times percent profitable times ratio equals 1.803. It's greater than 1.2. John Bollinger used to say that all 3 of these things need to be greater than 2 for a system to be tradable. And I disagree with that. I thought that it should be some kind of a rolling figure. You know, if one's greater than 2, the other doesn't have to be greater than 2. It could be something less than that. So that's what I used in my results, and it works. Now, there's only one reason to trade. What is it? Somebody tell me in the chat. One reason to trade. What is it? No questions, no chats? To make money. That's it. To make money. That's the only reason to trade. If you're doing it for any other reason, I dare say you're not profitable. So there's the excitement. That's fun. The challenge. That's fun. Making a few extra dollars. I have a lot of people come to me and say, all I want is $100 a week. That's hard to do every week, week after week. Or the thrill of the win. So any of these reasons is not a good reason to be trading. To live on is the hardest reason. It's the most difficult part of the whole scheme, is to have something to live on. You're going to lose. There are days and weeks and months that you're going to lose. And when that happens, you get afraid for your living disappearing. So that's really difficult. Let's look at almost $200 a day for 1 year. 250 trading days times $200 a day comes into this straight line right here. So you can see I added 192.46 up for 260 days. Comes to, what is that, $50,000. Okay. Now, if you can get close to this curve, this linear curve, then you can do something else. There's something called optimal F, which is Ralph Vince's equations. Let's see, what book was that in? ABCV, The Mathematics of Money Management. It's right over here somewhere, The Mathematics of Money Management. So keep your chart every day, every time you place a trade, add it or subtract it so you'll know what your curve looks like. I chart just about everything. I chart what I eat. I chart what I weigh. I chart how many days I've been taking this medication to get rid of my broken back. And if you keep the chart every single day, you'll be more likely to make the goal. The spreadsheet, I'm going to put it on moneymentor.com for you to download, those of you who are into doing spreadsheets and charts. And just become a free member. Go to Money Mentor and click on membership. Become a free member, and you have access to a lot of articles and code and spreadsheets and things like that. You also need to know your audience. If you're a lone trader, the audience is you. You're trading for your own edification. If you're doing it for others, well, it's harder to do for one thing, but your audience is them. They want to know how much money you made every single day. If you're doing it like I do, which is daily, live in front of an audience, then your audience is you and them, right? I want to see how well my trading is doing, and so does my audience want to see how well I'm doing. There will always be losses. Don't forget that there will always be losses. We all have them. In your projections, be sure to account for the losses because it will happen. For instance, if you plan to make $200 a day, then you should probably allow for making $400 and losing half of it. Keep track of the details. Be sure to account for your commissions. They used to be $50 a side on the S&P. Now mine's $1.20 a side. It's a big difference. The stock and ETF commissions are zero. Stock options are zero plus 60 cents a contract. And where I trade at my brokerage, the margin requirement is among the lowest available in the industry. Keep track of your expenses. This is a business, remember. Commissions and other brokerage expenses, you have to keep track of that. Slippage, that means you plan to get in at a certain number, you place your order and you get in at a certain number plus 50 cents. So that takes away some of your profit, so keep track of your slippage. You have to have office space. Whether you trade in your home or not, you're taking up some space and it costs you money. So keep track of your office space and your office expenses. You've got paper, you've got pens, you've got computers, etc. Keep track of your computer expenses and your software expenses. I don't know about you, but I love new software, so I'm constantly having to keep track of my software expenses. And of course, there's taxes. That's another expense for the business. A retail business is happy with 10% per year profit. New traders seem to want to make 100% per year. They come to me all the time and say, I want to make 100% per year, or I want to make 300% like you did. Well, it's next to impossible. It takes a lot of experience. One year I took my big book of managed futures, big book of managed futures CTAs, which stands for Commodity Trading Advisors. So there were 2,000 CTAs, Commodity Trading Advisors, in the big book. So, okay, I'm always the analyst. I took the top 1,000, so the 1,000 that made the most money. Their average return was 0%. The top half of those 1,000, so I've got 500 left, they made 10% per year. And the top half of that, which is 250, made just 30%. So if the top half of the top half made 30%, what are you going to make? One of the things I tell people who start trading, don't do it. It's really difficult to make the money. It's a lot harder than you expect, and it's going to take a lot longer than you expect. Hate to tell you that because you're aspiring to it, but that's the truth. It's difficult to achieve it. And if you want to achieve it, give me a call. We'll talk. I have a program called Trade Log. So if you make lots of trades like I do, then it makes sense to get Trade Log and keep track of all your trades. And it'll even do your taxes for you, which is really nice. And I think it costs $359 a year. Don't quote me on that because I don't know. I've been using it for 5 years and it seems to go up every year or two. So tradelog.com. If you make fewer trades, then a spreadsheet will do just fine, or the reports from your platform like TradeStation, MultiCharts, NinjaTrader, and Metastock should be sufficient to do your taxes. Now there's my trade log and Trade Along with Sunny, TAWS we call it, Trade Along with Sunny. This was, which year was this? 2024. So I keep track of daily and then weekly and then monthly results. So I know what I'm trading every time. I need to know what my goals are. And here's the performance report for 2025. It was pretty jerky. I call that Trump chaos. And the 482 obviously is better looking chart than that. And this is what I just said a minute ago. If you were someone new and you called me up and said you wanted to learn to trade, I would try to discourage you. 90% of all the people who try to learn to trade lose their money in the first year and wipe out their accounts. And trying to learn to trade through a prop firm is different than real life trading because they have a different set of rules. Like basically, you blow out the account if you have a few losses. And fact is, you're going to have more than a few losses. Only 10% of the people who begin trading today will be still trading in a year. It's a pretty dangerous profession. So proceed with caution, please. How much is enough? How much do you plan to make? How much is available? That's PHW. We want to know that. So let's look at this instrument. What are we looking at? The E-mini. We're going to see how much is available because PHW tells us how much is available. Potential hourly wage, PHW. And we can compare different symbols. We can compare Microsoft to Adobe. And we can look at see what the ideal versus the PHW is. So here it is on the SPY. And again, you can see sunny bands following the chart up as it goes along. The yellow dots are the PHW. And this, is this on the next chart? No. So that if you go to, what is it, Jeff? Expert Advisor. This will tell you what these values are, and you add and subtract them. You come up with the total PHW value.
Yeah, click on View Expert Advisor.
Yeah.
Or View Expert Commentary.
Expert Commentary, that's it.
Yeah.
So if you view the expert commentary, you'll get to see all these numbers so that you can calculate the PHW easily.
Okay.
And for instance, buy and hold on that chart was $1,584. The ideal, however, which is also in the expert commentary, was $749,000. That's a whole lot different than buy and hold, isn't it? And then I take 60% of the ideal because I figure I can't make 100% of the ideal, but I can leave 20% on the table getting in, leave 20% on the table getting out, and keep 60% of the ideal. So that's $450,000. Number of trades on that was 25, and the date span was September the 5th of 23 through September the 4th of 25. And there's the expert commentary. And this is what the PHW looks like on a radar screen. You can see in the yellow column, you can see the ideal and the PHW and the number of trades. So you can sort these and see who's the highest and who's the lowest and make your choices. To design your strategy, we're going to have to cut this short. To design your strategy, you examine the locally available indicators on your favorite chart. And if you don't have PHW, mark the turning points with a yellow highlighter. And then write down the values of the profit and loss and add them all up. And to do your research to designing your strategy, I ask what is true of every turning point with every indicator and test all the possibilities. One of these days, I'm going to write the next book. It's called Grading the Gurus, where I take the guru's strategy, ideal strategy, and test it and give the results. One of these days. Now, let's see, I've got 8 minutes left. Always keep a comprehensive log of your work. It's really important to have this log. It's really important to know the truth about what instead of just the hoping. My friend Adrian used to say it was into wishing. You have really good intuition. And here's just a few of the indicators that you can look through. Just tons of them. Every software package has tons of these things. And you need to ask what is true of every one of them to see whether it's really viable or not. Moving averages. You can see here on a moving average, crosses here, crosses here, crosses here, crosses here, cross, cross, cross. And then you can write down all these values and say, at this setting, does this make money? And then you need to try the next set of settings, and the next set of values after that, and the next set of values after that, and see if anything is profitable. MACD, same thing. Is it profitable? Here's a crossover, here's a crossover, here's a crossover, here's two crossovers, and another crossover, and another. At these settings, does this make money or not? You need to know that. And you can see the yellow dots. You can see where the ideal turning points are. Same is true with RSI. ADX, same exercise. Every time you have to say, All right, this is falling, so there's no trend. How does that relate to what's going on in the market? What is true? Okay, what is true? And then there's the sunny bands, and you can see how sunny bands works with respect to the market. So we're looking for price to go above the upper outer band, turn around and come down to the lower outer band, turn around and go back up to the upper outer band, come back down. Now here we've got a flat DMA, and as I said, that tells me I expect it only to go to the DMA, which it does, and then it goes back up again. Don't be afraid to give me a call and we'll go over the rules together. I'm happy to show you what I'm looking at. Okay, and you can do a scan of all stocks, for instance. This is all the stocks that are greater than 3 moving averages. So that's a scan that I ran. So remember, there are 3 simple rules: when to go long, when to go short, and when to stay out of the way. That's it. These rules are for educational purposes only. I don't give advice. Again, rules number 1, when the red candles have been moving downward and touch the lower outer band and turn blue and move back inside the lower outer band, if price confirms. I enter short when blue candles have been moving upward and touch the upper outer band and then turn red and move back inside the upper outer band, if price confirms. You can see how that looks on a chart. Rules number 2, if the DMA is flat, you've got a special set of rules right here, which is it's probably not going to go much further than the DMA. So you see it comes up, hits the DMA, and is rejected. Hits the DMA and is rejected. Be sure to sign up for a free week of my live trading room, Trade Along with Sunny. You can see these in use. You can hear me call out the trades. You can learn to do it for free. So on a flat DMA, I don't expect price to move very far beyond the midline. In fact, it often acts as a barrier to further movement. Here's rules number 3. As long as we have a trend, stay with it. Get out of the trend when it breaks the DMA. See, this is a flat DMA and it breaks it. If gold is on top, stay long until the DMA is penetrated. And likewise, if purple's on top, stay with it until purple is penetrated. You can have sunny bands for free if you want to text me. I'll give you 10 days free. And tell me what platform you use. I think on Metastock it's 7 free days. On TradeStation it's 10 free days. On NinjaTrader it's 7 free days. So just let me know. I also need your name and email address. Some people will text me and say that I want this, but they don't tell me who they are and what their email is. I can't give it to you that way. I can't reach you. So name, email, and platform. Free orientation and instruction. It's me personally, not my assistant. And we'll even do Zoom sessions in the live markets. That was 2024. I knew I had that in there somewhere. This is 2025, which was rugged. And I'll give you 2 guest passes before you subscribe. Wednesday morning, 7:30 a.m. Pacific time for 1 hour. And let's just go on real quick because I'm out of time. We're going to go forward. This is probably the most important slide in here. And I will post this in the appearances page. I will post this talk as well. Oh, let's go real fast through this one. You can compound your trading if you have a series of wins based on Ralph Vince's Optimal F, and I reprogrammed that and added features, and it's I call it Ultimate F. And here's what this looks like. If you trade one contract like we did in that one example previously, this is what that one contract trading looks like, $80,000. But if you use the Ultimate F spreadsheet, we're almost up to $600,000 by judicious selection of how many contracts to trade. If you're interested, give me a call. I answer it myself. There's no salespeople. And there's my new and upcoming website. And the products I've programmed were all developed for my own use in my own trading. So if you want to trade like I do, I make them available to you. Now, I do show you exactly how I use them. moneymentor.com. And let's see if we have my, come on, let's go. There we go. There's the phone number. Text me, Trade Along with Sunny, and I'll send you the link. All right, Jeff, thank you very much. Do we have any questions?
Thank you, Sunny. For us, just to kind of answer your question about whether we could do a 7-day or a 10-day trial, we can do a 10-day trial. Not a problem at all.
Okay, fantastic.
Kenneth wanted to know, how do I sign up for the prizes? And Ken, you are registered to win the prizes. No problem at all. If you're watching us in YouTube right now and you want to register for the prizes, just register using the link above. And that's all the questions we have, Sunny.
Fantastic.
It's good to have you on here.
We finished right on time.
Right on time. Perfect. And you did a great job too.
Thank you.
All right. Very cool.
Thank you for inviting me.
We'll have every time. Not any time, every time.
Okay.
All right. Thanks again.
Thank you.
All right. What I like about this quite a bit is you can try it out. Not only can you try it out, you can get a 10-day trial. She'll sit down with you. She'll do 2 sessions. You can do that with the Sunny Bands Toolkit and the hourly wage. She'll sit down and do 2 sessions, one to kind of show you the indicators, show you how they work, another to kind of walk you through the day during real-time live markets. And in both of those cases, like if you're just not happy with it, you don't have to pay. This isn't something that automatically gets billed to you. You can sign up, take the classes, see how useful it is for you, and then make a decision to purchase. So you can do that. With this, the way that the 10-day trial is actually structured, you need to call us. We set it up for you. We set up the full install. You need to call us at 800-882-3040, or you can also visit us at metastock.com/saleschat. So there you go. There you go. Perfect. As we move on to the next speaker, you can give us a call, or I want to say thank you to Stocks and Commodities magazine. Stocks and Commodities has been sponsoring the event forever. I've talked about how good of a job they do in ad nauseam. We really appreciate them. www.traders.com. Also, if you haven't yet, make sure to join the Traders Forum community. You can do that at www.thetradersforum.com. If you sign up, you can chat with traders, talk about the markets, all that kind of good stuff, and it's all provided as part of it. So there you go. Gregory, how are you doing?
I'm doing good, Jeffrey.
I actually have been trying to get a hold of our next speaker, and I don't know if something is going on with him or not, but we'll see if he comes. If not, I'm going to get ready to talk about the Ichimoku method.
Who is the next?
It is
Ken.
Ken Calhoun.
Ken Calhoun.
Yeah. And I've sent him a couple messages. He right now is.
I'll keep an eye out, but I don't see him.
I've sent him.
Fortunately,
Called him.
Fortunately, Jeff Gibby, the poster boy for Metastock webinars, always has a webinar in the chute, ready to roll.
Yeah, even
no problema.
Right up my sleeve. Right up my short sleeve.
Well, we need to get a big wheel, Jeff, that we can just spin with 20 things that you could possibly talk about, and when it just falls on one, you can just go.
Actually, before one of the first things that I did, not in the sales role, but I took a trip, as you know, and I spent 2 weeks talking about Metastock, training people how to use it in Saudi Arabia. There were Saudi sheiks. It was pretty cool.
Yeah.
So
I would say you've been just to probably a dozen countries teaching people how to use Metastock, or at least talking about Metastock. I know for a fact you've been to Italy because I was there with you.
Yeah. All right, let's give away a prize. Let's see.
Let's do it.
This one will be the Theta Trader membership. Theta Trader, Eric came in. He gave a discussion on the Theta Trader and kind of how helpful it could be to helping people automate some pretty dragonfly strategies, some pretty complex option strategies. We're going to give a membership away. The value on that's normally $597. So very, very cool. And the technology he was talking about is really cool as well. So Greg, what I need from you is a number between 1 and 6,952.
According to Google Random Number Generator, that is 3,374. 3374. Kind of split right down the middle, actually.
Okay. Now I'm going to go a little bit on a limb here. I'm not supposed to do this, but I'm going to say the full first name and last name that this person registered with.
Joe Trader.
I'd like to congratulate.
Jim trades a lot.
No,
Sir trades a lot.
I would like to congratulate Mr. Trader. That is Theta Trader membership. All right. Let's see. Do we have Ken is not here still.
I don't see
right.
Ken. I hope he's okay. I know.
Let me go ahead and do this.
As of late, but I'm sorry. What?
Let me do this. I'm going to open up my.
Well, so I'll just get out of your way and I'll keep an eye out for Ken.
But off for a minute while I get this.
I don't think I need to introduce you because honestly, Jeff, anybody that's been watching the conference knows who you are. You really are the man at Metastock who needs no introduction for anyone who's ever seen a Metastock presentation.
All right.
So I'll get out of your way.
Is this the right one? Okay, yeah, it is. This will work. Cool. All right.
And it's just so you know, it's Ichimoku Seijin.
You know, this is the presentation I do mostly so I can annoy Greg with my terminology and my pronunciations. My favorite part of it.
Go back to the picture of Ichimoku Seijin. I want to make sure I said it right. Yeah, Ichimoku Sanjin. Ichimoku Sanjin.
Okay.
Sanjin.
Greg spoke Japanese. He doesn't speak it much anymore.
I lived there for 5 years. I don't speak a lot of it, but when Kim and I visited there a few years back, she was impressed that I could still smash around some pretty good Japanese. But anyway,
all right, cool.
That's all beside the point. Knock yourself out and break a leg.
This will be fun. This will be exciting. This will be a little bit unplanned, but that's okay. What I want from you guys, I want you to provide me some symbols. So I'm going to say that right out of the box because I generally never come in and just say, hey, here's some really good signals where this methodology looks really good. I don't do that. I simply kind of look at what people are asking for. And I generally feel it's easy to find pretty good matching symbols fairly easily and find the perfect examples, that kind of stuff. What I need you to do is to give me some symbols. What do you want to look at? We're going to talk about a methodology. So as I get started, actually, I need to do this. Let me recite this again. I have only done this like 10 or 12 times this week. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock and its employees shall have no liability for any investment decisions based on the use of the software, trading strategies, or any information provided in connection with the company. Metastock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in the presentation today should be construed as investment advice or the solicitation to buy a security. So there we are. Today, I'm going to do a little bit of an impromptu demo on Ichimoku Sanjin. We've been talking about Metastock all week. You know, it's got the toolbox in there. It's got the scanner. We've talked about the tester. We've talked about the forecaster. I even did a session where we went in and talked about how to find gaps, how to find breakout stocks, how to find stocks that are trending. And we've covered some really, really cool stuff in Metastock. And one of the things that I've reiterated that I really like about Metastock over and over and over and over again is that there's tons of stuff you can do in there. It's a very, very well-established product. It's been around for a number of years. And today I'm just going to talk about something that we just added. And this wasn't something that we added in 20. If I have some time, I'll talk about another cool system that we added in 20. The point that I'm making, it's a huge toolbox. I don't expect any of our customers to use all of Metastock. I want you to find what works for you and use that. And that's why system testing works really, really well. This is actually the methodology that I'm going to talk about today. Well, I've talked about how it's been rated Metastock, has been rated the #1 software that's programmed for 32 years. What I want to talk about today is a methodology that was originally created by Goichi Hasada. Now, it's programmed for Metastock by a gentleman by the name of Robert Dedman. Robert Dedman used to work here. He was here when I started. He went on to kind of develop a lot of very popular systems like the Performance Systems Plus, Traders Oracle, and I'm just trying to kind of think of the ones off of the top of my head that are there. But as part of kind of the funny thing is his systems have been so good that we keep buying them and just putting them in Metastock. So this one I particularly like. I think it fits well into our ecosystem, but it's based on the work of Goichi Hasada. So, and I'm going to kind of just cheat for a minute. I've got some notes here. Just because usually I'll just have these notes off to the side printed out, but I'm doing this a little bit impromptu. So Goichi Hasada also went by, I believe it was his his pen name, if you would. He went by Ichimoku Sanjin, which roughly can be translated to what a man in the mountain sees. He was a reporter and a publisher and a little bit of an author. In 1930, Goichi Hasada developed a journalist right here, the Ichimoku Sanjin. This can be translated to what a man in the mountain sees. He spent 30 years perfecting his techniques and released it to the general public in the 1960s. Ichimoku Kinko Hui translates to one glance at an equilibrium chart or an instant look at the balance chart. It's also sometimes referred to as a one glance cloud chart based on the unique clouds. We'll talk about that. That's all I need the notes for here. The reason I like this, and we've had a lot of questions over the week about, and if Patricia, if you're here, I hope you're still here because you're talking about Ichimoku, the Ichimoku cloud for a minute. But if you're still here, Patricia, let me know. I lost my train of thought though. The Ichimoku, the reason I like this is not only is it very, very helpful in terms of a methodology that's been very, very popular. There are quite a number of kind of market trainers and market educators that charge really good money to teach you how to use Ichimoku. It's a very popular methodology, particularly now. And since it's been available in the general public since the 1960s, it stood the test of time, if you would. So I don't see any stock symbols. I'm going to need some stock symbols in just a minute. So you guys, if there's anything you want to look at today, just put them in the chat. Okay. When we start to talk about the uses of Ichimoku, there's a number of different things. There's maybe 5 or 6 indicators in there total. We'll go through each of the indicators and how they're calculated. But in terms of the way Ichimoku works, it's going to give you buy and sell indications in 2 different ways. We'll cover both of those. Most of the Ichimoku is to help you, indicators are designed to help you determine if the stock is bullish or bearish. And there's a number of different ways to determine that, and we'll cover all of them. The cloud itself, or the Kumo, is designed to show resistance now and into the future. It's also designed to give you a current expectation of the current trend and the future trend. Okay. Also, the Chiku span, which we'll talk about, shows the stability of the trend and helps you add stability or credibility to the trend. Also helps you anticipate potential reversals and stops. So there's a lot of stuff that's actually in here. There's a lot of stuff that actually comes in as part of the methodology. And we're going to go ahead and kind of go through all of it right now. Okay. All right. Let's talk about the indicators that are included with the Ichimoku method. You've got the Tenkan-sen, the Kijun-sen, Chiku span A and Chiku span B. Combine those, make up the Kumo, and then the other one is the cloud. Okay. I'm going to talk about each of these indicators individually, and then I'm also going to look to see if we're getting any stock symbols in the chat as well, in the YouTube chat. Okay. Oh, all right. No problem. Nobody. You guys are kind of quiet. Put a stock symbol in the chat. All right. Let's talk about the Tekinson and Kijinsen. I'm sure you guys want to look at something. The Tekinson and the Kijinsen are kind of the first two indicators we're going to talk about when it comes to the Ichimoku. The Tekinsen, if I wanted to tell you how to calculate the Tekinsen, I'd say find the highest value in the last 9 bars and the lowest value in the last 9 bars. Add those together and divide them by 2. Yeah, go ahead and put them in the chat, Greg. We can use some of the ones that you're looking at. So what you're getting when you get the Tekinsen is you'll get the median price for the last 9 days. That's all you're looking at, the middle price, the difference between the high and the low, or not the difference, the high plus the low divided by 2, the middle price. Okay, that's it. When you look at the Kijinsen, the calculation is exactly the same. You're looking at 26 periods back. You're getting the highest high, the highest value, lowest low value. You're adding that together. You're dividing it by 2, and you get the Kijinsen. Very, very simple. Okay. Now, when we start to talk a little bit about how you now analyze these, the way that you kind of look at them is very, very similar to moving averages, but I want to be clear. These are not moving averages. Okay. But the way you look at them can be very, very similar. So in other words, if I was looking at a shorter term versus longer term moving average system, generally if the price is going up, our shorter moving average is going to be above our longer moving average. It's the same thing when we look at a mid price. When the price is going up, as it has been in this chart, I don't remember what I used this as an example for this, but when the price is going up, generally what that indicates is your Tekinsen is going to be above your Kijinsen. Your midpoint for 9 days is going to be above your midpoint for 26 days. That's all it means. Okay. It's also a reading of bullishness. Well, as long as this is up above, as long as your Tekinsen is up above your Kijinsen, that's an indication of bullishness. And that's one of the kind of the measurements that you use when you're using the Ichimoku Master. Okay. Conversely, too, with one of the signals, not the primary, but what is called the secondary entry signal, is what happens when the Tekinsen crosses above the Kijinsen. In other words, when this purple line comes up above the red line, that would give you a secondary buy signal according to the Ichimoku method. You can see it would have happened here. If we kind of look further in the chart, it would have also happened here. And it would have also, well, actually, those are the 2 places it would have happened. Okay. So in a nutshell, and we'll look at this on a chart, the Tekinsen and the Kijinsen you'll use as to determine bullishness or bearishness. It's bullish if the Tekinsen is above the Kijinsen. It's bearish if the Tekinsen is below the Kijinsen. And there's an opportunity to either go long or short, a secondary buy or sell signal if there's a crossover that happens. Okay. All right. Iqbal, thank you for coming through with a stock symbol. Okay. Let's look at it on a chart or 2. All right, very cool. Where is my? Okay. Where is my choice? Here we go. Now, if you've got MetaStock, thank you. I appreciate that. I'll show you how to open this up and how to look at it exactly the same way I'm going to look at it. So I'm going to go ahead and open up a chart right here. What I'm going to do is I'm going to type in NOK. And then I'm going to go over to this other tab where Greg put in a few symbols. So we'll go NOK. We'll do OIS, BKR.O, VZ. And a stock I've been really fond of lately. I just closed out a position on this one, JNJ. Okay, let's go ahead and now, when I'm opening this up, I want to open up with the Ichimoku methodology. So I can come up here to where it says Apply Template. I'm going to go ahead and click on the down arrow here, and I'm just going to find the Ichimoku Master template. So we'll just scroll to the I. There is an advanced template. There's a training on YouTube on how to use that. We will not be covering the advanced template here. I'm just going to go with the Ichimoku template. Go ahead and open this up. It's going to apply all of the indicators to the charts. It's going to grab the data. It's going to give us all the buy and sell signals and all that kind of stuff. That's because as long as you have that kind of put in the first place, it'll go ahead and give it to you. Okay, we'll go ahead and start with Nokia here. And I'd say that Nokia has been kind of a little bit of a choppy chart. I think everybody would agree with that. But we can kind of talk about how these symbols or these signals fit together. So I'm going to come in right here. I'm going to zoom in on a kind of an area of the chart. We'll go ahead and zoom in here. And we'll just talk about the two first indicators. Okay, right here, this is the Tenkan-sen. Below that is the Kijun-sen. And just to remind you, they're just a midpoint. One's a 9 bar and the other's a 26 bar. Okay. So from a perspective of Nokia, if we're looking at kind of this, when our Tenkan-sen crosses above our Kijun-sen, that's an indication, one of many, of bullishness. When it crosses back down like it does right here, that's an indication of bearishness. So as long as it's trading down below the Tenkan-sen, it's going to be in a bearish phase. As long as it's up above, like it is all the way through here, it's going to be in a bullish phase. Okay. When it does happen to cross over, you see there's a little bit of a sell signal on the chart right here. That means your Tenkan-sen crossed your Kijun-sen, and that's actually right here, this one, and that's a secondary sell signal. Now we wouldn't take this sell signal, and I'll explain why as we go through the indicators. Over here we had a buy signal. We wouldn't have taken that one either. I'll go through that as in terms of the indicators, but this would have been an indication that we might be going bullish. When it crosses back down below like it does right here, an indication that we might be going bearish. And it's just one of the ways that we rank the stocks. Automatically, when those crosses happen, it'll show up on the chart. You see right here, if I hover over this, it says TK cross long. That's indicating the Tenkan-sen Kijun-sen cross. And it's a long entry opportunity. Again, we don't take it. Here we have a short entry opportunity, and for the reasons in the methodology, we won't take that one either. But for now, what we'll just kind of talk about is when this happens, it's a bullish indication. As long as it's above, it's bullish. When it crosses down below, it's bearish. Okay. If you do have questions, let me know in the chats. I've got them right here. And every time I kind of look in this direction, I'm looking to see if you had questions. So far, that should be fairly straightforward or fairly self-explanatory for you. Okay. Let's go to the next couple of indicators. And those have to do, oh, actually, let me come in here. Those have to do with the Kumo, the indicators that make up the Kumo. Kumo means cloud in Japanese. And so I've tried to train myself not to say Kumo cloud because I'm just saying cloud in that case. The Kumo is made up of two indicators. You've got a Senku span A, which is right here. It's in the top position. It doesn't have to be in the top position. You can see it's in the bottom position over here and in the bottom position over here. Okay. You've got your Senku span B, and then in that case, it's the other one. It's the other line. The distance between Senku span A and Senku span B is the Kumo. That's the cloud. Okay. Now, if I wanted to tell you how to calculate the Senku span A, what I would tell you to do is take both of the indicators we just talked about, the Tenkan-sen and the Kijun-sen, you add those together, and you divide those numbers by 2. So you're getting a midpoint of these two numbers. But you also plot that into the future 26 bars. Okay, that's why this indicator goes into the future. It's just projected into the future. Okay, that's the Senku span A. The Senku span B is a much simpler calculation. What you're going to do is you're going to take the highest high for 52 days and the lowest low for 52 days, add them together, divide it by 2, get a midpoint, put it into the future 26 bars. Very, very simple in terms of the way that the calculation works. And then you get your Senku span B. Okay, so you're still looking at midpoints now. You're not looking at moving averages and stuff like that. You're looking at midpoints. But the Ichimoku system is a system of midpoints. It's designed to kind of look at the trend. It's very much a trend following system, and the better the trend that you're in, the better it's going to work. New question. Okay, let's see. Okay, thanks, Craig. Craig's telling you where to put the symbol request. Just in where it says questions. That's all you have to do. If you're in YouTube and you're looking at YouTube chat, do it there too. Okay. All right. Now the cloud is projected into the future. There's a lot of different uses for the clouds. I'm going to try to remember all of them. And then I'm going to go to a slide where it's going to tell us all of them. And that way I can make sure that I don't forget something. Because I've taught this class a few times, but there's a lot of things to keep in mind. There's a lot of things to remember. That's why that's one of the reasons I like how well it's integrated into Metastock. Okay. A primary, we talked about the secondary buy signal. A primary buy signal for the Ichimoku method is when the stock is down below the cloud and it closes above the cloud. That's a primary buy signal. Okay. In general, with the Ichimoku method, it is not advised to go long when you're down below or within the cloud. And it's not advised to go short when you're up above the cloud. Okay. Generally speaking, when we're trading the Ichimoku method, we want to trade while price is in the direction of the cloud. Okay. So the primary buy signal is when it starts down here below the cloud and closes above the cloud. That's your primary buy signal. It didn't happen here. It came down into the cloud. It didn't close below the cloud, but that would have been a primary short signal if it had. So that's one way you look at the Kumo. Pretty much what you're looking at is, are we breaking above support or resistance? The Kumo with the Ichimoku method is you treat it as support and resistance. It acts as support and resistance. So when we come down in here into the Kumo, we expect that support and resistance to hold. In this case, I'm not sure what happened. It probably came back up above the cloud after this screenshot was taken. But as long as we're up above it, we anticipate that we're going to stay above that level. Doesn't always happen. And when it doesn't happen, when we come up and we break through resistance, it then becomes support and we get a buy signal. Same thing as if this level would have broken down, we would have gotten a sell signal. So that's some core things that I want to reiterate here. We want to trade in the direction of the cloud. The primary buy signal is where the cloud is, and we treat the cloud as support and resistance. Okay. Now, if the price of our security is above the Kumo, that's bullish. Okay. If we're down below the Kumo, that's bearish. Okay. And generally, we want to trade in that direction. Now, the other thing that we want to take a look at to determine bullishness and bearishness is what is price doing now? Okay. Also, what is the Kumo doing now? If we look at the current direction of this Kumo, it's pointed up. That's another bullish indication. See, there's a lot of things to keep track of here. A computer can help. In the future, I'd say that this is going sideways. So I'd say it's more neutral going to the future if I'm looking at the hard right edge of this. Okay, cool. Let me go ahead and we'll just let me go ahead and see if I missed anything. Let's go to the next slide. In terms of, look how good AI makes my slides look these days too. Look, this is what I provided. This is what I got back. So anyway, trend bias, the overall market direction. The relationship of the price to the Kumo is important. The Kumo acts as support and resistance. The Kumo direction is important. It tells us whether the stock is likely to go up or down. And then that also applies to where it's at now and where it is in the future. The Kumo twist also, I didn't talk about that. I did forget something. Kumo twist is when the Senkou span A comes down below the Senkou span B. You can see a bullish twist right here, the cloud where they change positions. Where if the Senkou span comes up above the Senkou span B, you have a Kumo twist. It's going to go ahead and kind of give us the thing. Okay. Let's talk about this in relationship to Nokia. Okay. Because Nokia is the first chart, both things for the stock symbol. This is the first stock that we're looking at, right? So again, we talked about how we got the Senkou span A here, or crossover here. We come up, we get into the cloud, and you'll notice that as soon as it closes up above the cloud, we get a buy signal because we're getting a primary buy signal. It kind of comes up, comes back into the cloud, and then closes above and gives us another primary buy signal. Now, we just talked about all the stuff that we can look at to determine bullishness or bearishness. What I want to show you is how the software keeps track of it, because it does a very good job of keeping track of it. I'm going to go ahead and open up the commentary. If you have Metastock, you can do this by clicking on View, Expert Commentary, and we will just open up the commentary window. Well, that does that. It's already done, but I'm going to use this as a reason to just take a sip of my water. I've been talking a lot this week. So, in any case. All right. Now, when I did that, it's going to put an arrow on the very hard right edge of the screen. And I don't really necessarily want to look at that particular spot of the chart. So what I'm going to do here is I'm going to move that arrow right here. And this triangle just indicates that we're looking at this bar when we look at this commentary. And this bar would have been on September 30th, 2025. Okay. If I'm looking at this right here, actually, let's start here. Let's start here on this bar here where we got that first buy signal. Okay. If I'm looking at that buy signal, we're just coming out of the cloud. If I look at just kind of a few of the things that we're looking at, I'd say that the current direction of the Kuma at that point is going to be down. And in the future, it's going to be down as well. But this keeps track of all of those things for us. So if we come up over here, we had a weak Tenkan-sen Kijun. I'm going to make a little bit of more room for this just so that it all fits here. We had a weak Tenkan-sen TK cross signal that occurred 14 bars ago. Our current relationship to Kumo, we're up above the Kumo. We closed above the Kumo, so that's bullish. Okay. If we look at the current Kumo direction, that's bearish. If we look at the future Kumo direction, that's also bearish. If I look at our Chiku span relationship, we haven't talked about the Chiku span, but I will in just a second. But if I look at the Chiku span relationship to Kumo, it's also bearish, but our Chiku span relationship to price is bullish. And our Kumo twist is currently bearish. We've had a bearish Kumo twist. Okay, so it kind of sums up everything. Even though we're getting a buy signal, we're more bearish than bullish when we look at this. The stock's going down. It's going down into the future. It's giving us 3 bullish things and 4 bearish things. It's not really giving us that great of a score when we look at it. Okay, it actually starts to improve here if we look at this next buy signal, because then you can see things are starting to get more bullish. And that's kind of how it works. We kind of want to look at, we don't necessarily need everything to line up, but we do want a few things to line up. Before I get too much further, because I already kind of am jumping up in front of my skis a little bit, before I get too much farther, I do want to talk about the final 2 indicators, okay? Let's go ahead and jump over here. The final 2 indicators that we'll talk about is the Chiku span and then the close price. Okay, the close price is just the close price. Very simple. We're looking at price. It's an indicator of what the stock's doing because it's literally what the stock is doing. The Chiku span is also the closing price, but it's the closing price put back in time about 26 days. Not about. It's put back in time 26 days. So your current Chiku span is always going to be 26 days behind, and it's always going to be the current close price, but 26 days ago. Okay. There's 2 things that this kind of helps you with. One, we look at the Chiku span in relationship to the Kumo. Okay. If the Chiku span is above the Kumo, that's bullish. If it's down below the Kumo or the cloud, it's bearish. Okay, we're just looking to say, hey, was it 20? Were we moving up 26 days ago? Was our price high enough to be above the Kumo 26 days ago? And if it was, that adds credence to the trend. The way that the wording that I learned, I'm not going to say that it's correct, but the wording I learned is it adds stability to the trend. Okay, and we use the same thing as we are with price. If our closing price now is above where it was 26 days ago, then the price is moving up, and that's still bullish. It's an indication that the stock has a strong trend. If it's down, then it's bearish, and it's an indication that the stock has a bearish trend. Okay, and that's all that those 2 things are used for. Okay, where are we at in relationship to price, or to where we were? Are we headed up or are we headed down? Okay. And if we're still headed up, it adds credibility to our upward bias. Okay. So I'm looking at Nokia here. Let's just go back to this Nokia example. If I'm looking at Nokia here, I'm more bearish than I am bullish. So even though we are crossing up above the cloud, I might want to wait until things start to get a little bit more bullish, right? And less bearish. And if you kind of just forward this a couple of days, it starts to get more bullish. Okay, and we can kind of keep an eye on this and just make sure that the trend is going in the direction that we want. And here where we got another buy signal, we might have ran a scan to find Nokia this day. Here, if we're looking at it, we're more bullish than bearish. There's only our current Kumo direction is bearish, and our Chico span relationship to price is bearish. But everything else that goes into the measurements based on this is bullish. Okay, and so I might be more likely to take a trade based on it at this particular point. Okay, it's pretty straightforward. The other thing I like about the way that this is integrated, the reason I like to buy wanted to buy it from Robert, is it does a really good job of kind of outlining what I just told you. Okay. Here it's going to give us our support and resistance values. I'll talk about those in a second, but let's go ahead and go down. And if I go down and just kind of talk about the commentary with you, I just kind of want to help you understand. I think the commentary in MetaStock, if you're learning different methodologies, the commentary is extremely helpful for you to understand why. And I think, we talk about all the time. I'm going to go off on a little bit of a tangent, but I won't spend too much time on it. But we talk about all the time why the discipline is important in trading. Earlier in the week, we did the little bit of a survey. What do you think is the best occupation for trading? And a lot of times the answer is pilot. But one of the biggest things about trading, I'm trying to remember the quote off the top of my head, is discipline. What is the quote? I'm not going to remember the quote, but basically it was I'm going to get there. It was the Turtle Traders. And oh my gosh, I say this all the time. I should be able to call it, but it has been a long week. It was Richard Dennis. I got there. Richard Dennis, one of the founders of the Turtle Traders. He ran a very successful group of traders, the Turtle Traders. If you've heard of them, it was a very famous group of traders. Probably the first example of a prop firm. But they brought in a bunch of people. They taught them how to trade, and they did very well with it. The quote that I'm trying to remember, and I'm going to kind of just say it as best as I can remember it without going and pulling a slide, is he said, you could publish the rules that I used to trade in the newspaper, but nobody would follow them. The key to trading successfully is using discipline. I got that quote pretty close. I'm actually kind of proud with how I was able to pull that out. I think part of the discipline is understanding and why you're trading and knowing that the system and the methodologies that you've used over the time work really, really well, and I think a big part of discipline is understanding that not only the good parts of your system, but where it can kind of run into problems as well. That's why I love this commentary, because it spells everything out for you. Okay, so in terms of the TK signal, it's going to basically give you this black part is going to tell you what I told you. The Dickinson and Kinginson is this. Here's how you look at the actual relationship of those prices. Here's what that means. Okay, the black part is going to give you this is the Cliff Notes version. The blue part is going to tell you what it's seeing on the chart, and it goes through that on every condition. So you've got one for the TK signal, you've got one for the close above, in, or below the Kumo, you've got the current Kumo direction, you've got the Chiku span relationship. They all are here. I got tired of reading them. Okay, and you can kind of go in there and kind of read through them, and it's all summed up in this nice, handy little dashboard view that you can look at. Okay. All right. Cool. That was a huge tangent, but if I was looking at the Ichimoku here and looking at all the rules here, I wouldn't be as likely to buy it as if I was looking at it right here. Okay. Now, in the Ichimoku method, there's several places where you can take stops. I want to be clear, though, that Goichi Hasada did not say you should get out when this happens, or you should get out when this happens. Those aren't currently what he was talking like. Those are. But since we use a lot of the indicators as support and resistance levels, we can identify clear exits where we get out. I like to get out when support fails. It's time to head for the hills, right? That's one. The cloud is definitely one. You can use the upper level or the lower level of the count, whether that's the Senkou span A or the Senkou span B. You could also use the Tenkan-sen or the Kijun-sen. And when we come to the very bottom of this, it says if we want to use the only stop that we could use that's available here would be a loose stop, and that would be the next period single span B, which would be 469. So we could use that. Okay. As the stock starts to kind of go up, I'm just going to kind of fast forward a few days, but as the stock starts to propel forward, we can come down here and it's going to have a 3 type stops we could use. We could use the Kijinsen, which is 641. We could use the medium stop, which is the Senku span A, and we could use the next period Senku span B. Okay. And then so if we put a tight stop on this after we'd kind of moved up, I like to kind of get a little tighter with my stops. When price moves up, one of the things that always kind of sticks in my head when I'm talking about stops losses is Steve saying, one of the things that he'd always say is, don't eat like an elephant and poop like, don't eat like a butterfly and poop like an elephant. That was the first thing. The other thing that he would always say is you can always buy this again if you're wrong, but you can't go back and sell it, okay, if you're wrong. So he was a little bit conservative about his stop losses. And once we kind of start to move parabolic, like Nokia, I would call this a fairly parabolic movement. I like to kind of look at the tighter stops in that case. And in this case, we could put a stop loss at 641. And to put that level on the chart, I just want to see where it's at. Okay, 641 would be right about here or so. And to make sure I know exactly where it is, I'll just click on that and I'll type 641. Ooh, I got it pretty close. 6.41. Okay. So even our tightest stop right here is going to be here. Okay. Oh, okay. No, it's fine. I just closed the expert advisor. Nothing too big of a deal, which would have gotten us out right here, coincidentally when this crossed. Okay. Now we could kind of keep looking at this. You got a sell signal. You're not going to sell while you're up above the cloud. So you're going to ignore that. Here you had another sell signal, right? You're still, I think, probably fairly bearish. Here you have another, or bullish. Actually, I do want to see what the scoring looks like. And I just love this because I could think about it. You could very easily go, okay, this is bullish and this is bullish and this is bullish. But I love having software make my life easier. Isn't that the whole point of software? Is to make my life easier? So here we had a close below the cloud and it was fairly bearish. So we might have taken that. But if we are, as soon as we get back into that cloud, we're going to kind of reverse and get out of it. Nokia is not a great example, and I'm actually kind of glad that you kind of brought up Nokia, because again, it's important to understand the methods that you're using in the stocks that they work on. Even though this wasn't a great example, it did give you a really good trade that took most of that trend there. So looking at just a few of these, OIS, I just have a long position on OIS right now, but right here, you had that cross signal and it's kind of taken off. It's been bullish. Everything looks good on terms of OIS right now on the thing. VKRO, we'll take a look at that one. Or maybe not. VKR. Okay, VKR. Sorry, Greg. We won't look at that one. VZ, you had a nice little bump up above the cloud. It's been moving vertically for a while. Hope this helps you. J&J. J&J's been one of those stocks I love to trade. It just keeps going up. I like Bill O'Neill when he said, a lot of people will tell you to buy stocks low and still sell them high. I like to buy stocks high and sell them higher. And if you understand kind of the methodology and the mentality behind canceling them, that makes perfect sense. Once things starts to move in the direction that you want, that's when you want to start buying them. Vince Vora came in a little bit earlier, and he'd always talk about liking to find stock that are making new all-time highs because there's not a lot of sellers above an all-time high. So there's not a lot of resistance up there. They can continue to move over and over and over again. And when you find a stock that's kind of in a nice, persistent trend, those are exactly the kind of stocks I like to trade. So let's talk a little bit. I'm going to kind of transition a little bit here, and I'm going to talk about how the scanning works, because in addition to the way that I love the way that the indicators work, the way that the expert advisor and the commentary kind of lays everything out for you. I also think it's really, really cool the way that Robert Devon put together the scanning, when he put together the scanning. Normally, if I would have known I was speaking, I would have put together a scan already, and just so that we didn't have to wait for it. But we'll go ahead and run it anyway. If I come into the explorations, if I look for Ichimoku, there's going to be a signal scan, and I'm almost on the fence here. Looking at the time, I'm going to show you the last scan I ran, which I don't remember when was, but I can look at it at the report. It wouldn't take very long to actually run a scan right now and kind of show you some results that are current, but I'm going to show you some results from the last time I ran the scan. Okay, so what I'm going to do here, I'm kind of on the fence though. I want to make sure that I show you, let's go ahead and run the scan. What could possibly, I'm going to just run it against the S&P 500 here. So we've got the Ichimoku. Again, with the scanning engine that's in Metastock, I can go ahead and start it so I can stall a little bit. With the scanning engine that's in Metastock, I can go in and I can scan for any types of signals that I want. I can run it against any lists that I want. This S&P 500 shouldn't take too long to run. But regardless of where you're at in the world or the markets that you're interested in, we get a lot of customers in India, in Australia, in Singapore, in Hong Kong, you name it, that come and use the software. And we do cover about 300 global exchanges with the coverage that we have with London Stock Exchange Group. So this is going through the S&P 500. I can actually cancel it if I want to. And of course, you can run the scan against whatever it is that you want. I like the scanning that we do in particular, because I can not only, a lot of times they'll give you, a lot of times with scanners, what you'll see is you'll get results back really fast, but it's yesterday's. Like the market's about to close. Hey, Buff, I can see you. So you might want to turn off your camera for now, but we'll be ready for you in just a second. It's good to see you, my friend. Also, your mic is on. All right. Where was I? Okay. You can run this against any market. You can also run it right now. I love to run the market scans. I mostly run them right now because it gives me enough time to look at the actual results that come back, see if there's any trades that I want to take, and then trade with those. Okay, I'm done scan. I'm going to go ahead and cancel this just so we can kind of show you what it would look like. But we did get through about half of it in about a minute. Okay, and it is now. I mean, we're not looking at yesterday's data when we look at this report. If the report populates for me, which it should. In just a second. Normally it does. And we did have results. All right, let's go ahead and do that. Let's look at the report. Yeah, I might have really messed this up a little bit here. It didn't like that. Okay. Try and get fancy and all. Okay. I'll just explain it to you a little bit just so that we're not kind of stuck in a little bit of a thing. Normally you'd let the results finish. Usually I can cancel it and just show you what the results look like. But one of the things that I really like, we're talking about that score, right? We're talking about, are we above the Kumo? Is the Kumo facing up? All those kind of things. When I run a scan, I can look for the primary or the secondary signal. So the secondary signal would have come in here where the Tenkan-Sen crosses above the Kijun-Sen. The primary signal would have come way back here where we closed above the cloud. But one of the things I love about the report is it gives you that score. So I can look at the report. Imagine, if you would, I'm going to go ahead and just view the commentary here. I can look at the report and there's a column that says, is the Kumo pointing up? Is the TK above? Do we have a TK cross? When did that happen? And with Johnson & Johnson, everything's really, really bullish now because we've been in a fairly well-established uptrend for a while on J&J. Okay, but when I run that exploration, if I would have looked for the J&J would have come up on the scan back here when the TK cross happened, I would have had a score of 5 because we had bullish, bullish, bearish, bullish, 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 bullish. So when I come in here and see that it's pretty bullish, you look into the future, this would be one of the ones I could focus my attention on. I just love it. If we had come up here, and we'll just kind of get a little bit closer to that TK cross, we could see, hey, okay, it's still very bullish. It gives us a score of 5. Okay, it basically, not only does it show us only the stocks that have the buy signals and the sell signals in that scan report, it identifies exactly what's bullish and bearish. It gives you a thing. So when we're looking at the S&P 500 and we're looking, or the optionable stocks or whatever kind of this list that you scanned against, instead of having to look at all of them, I can look at just the 4s or just and greater, or just the 5s and greater, or just the 6s and greaters. So that when I'm looking for those, I have a better idea of which ones are likely to move up higher. Does that make sense? So, in any case, that's one of the things. This is a methodology. It's just included with Metastock. It's one of the 300 different methodologies that you can come in here and do. And just like we were talking about with identifying the thing, it does have system tests. So I could say, okay, well, I want to trade Johnson & Johnson. What's the best methodology? And it could tell us exactly which ones are most profitable. And if we did like the Ichimoku method, we could come in here and learn about it. And then we could also scan for signals. It's just such a powerful toolbox. And I loved this one for a very specific, well, for a pretty specific reason. The reason I wanted to include this one, I remember when I started at Metastock, I was 28 years ago. I had more hair and it was less gray. But one of the things that I really, really thought was really cool was the expert advisor in the commentary. I remember very specifically coming in here and opening up a chart. We'll just pretend it was Johnson & Johnson. It was, and I don't remember what chart it was. But I was learning about the markets. I had a little bit of experience, but not a lot of experience. But I was learning about candlesticks. And so I'm going to, and then I remember I came in here and I attached one of the several hundred indicator experts here called candlesticks. I'm going to go ahead and do this one real quick. There's this new GACPR one is put together by Craig Morris. It's really cool too. I remember actually attaching it to the chart and being surprised about the fact that it was labeling like my engulfing bullish patterns, my engulfing bearish patterns, separating lines. Here's a rising window, an inverted hammer. And I'm like, well, wow, if only it told me what these meant, right? And so if you come into the commentary, of course, that's what it does. And that's what I mean. Okay, so here we've got the engulfing bull. I can read you the commentary. Basically says the engulfing bullish line is where you completely engulf your body in totally, the body of the candle totally engulfs the previous bar. But when I say that I don't think Metastock's ever a tool you're ever going to grow out of, I mean it. I've seen so many software programs over the years that cost way more than Metastock that don't do a fraction of what's in there. And that's why this particular expert advisor is the reason I really like the Ichimoku and the reason I wanted to include that methodology, because it does such a good job of saying, hey, this is what's going on and this is why. So here, let's kind of go back out here a little bit. I talked about all of this stuff. This is just included with Metastock. It's one of the many, many methodologies that are included in the toolbox that is Metastock. So we talked about scanning. I showed you a little bit of a scan. We kind of flubbed that a little bit. I won't tell anybody if you don't. Talked about testing. We talked about the forecaster. It's a toolbox. Literally been rated #1 in its price category for 32 years in a row. And there we go. Let's kind of go back in here. Actually, no, we can kind of stay here for a second. $74.95. I've been lying to you. I've been saying it's 75. It's actually $74.95 per month for the DC version. That's a delayed version. It can do everything I just showed you, everything we've been talking about all week, except for the new stuff. That includes all the data you need, everything you need to run it. $75 is cheap, right? You probably won't even use the Ichimoku method. The trick is to find something that works really well and get really good at it, right? We talked a little bit about how to identify gaps. Here's another methodology that could spend another hour talking about. Jake came in and talked about his expansion and contraction indicator suite, and it's awesome. The indicator itself is included in Metastock. So just to kind of reiterate what's included, if you buy Metastock, you can pay for a month. That month, if you do the DC, the delayed chart version, that'll cost you $75. That'll pay you through March. We'll give you April and May. You'll be running until May 20th for $75. That's $25 a month, according to my math in my head, which may not be too reliable right now. Okay. During that time, you'll have full access to the software that's been rated best in its price category for 32 years in a row. You have unlimited access to our support desk. Our support desk is awesome. We keep more people in support than we keep in sales and marketing put together. They get 100% a lot in terms of their user surveys and stuff like that. I had a note from one of the people that I had call support to get a little bit of help. And they're just like, they're awesome. They do such a good job. When was the last time you called a support team and were left feeling like they did awesome? If you did, it was probably our support team, just a guess. You get all the training. We'll have somebody sit down. We'll have you walk you through the software, understand everything, understand all the tools. $75. It does pair well with that and learn Metastock. So to do this, if you want to get set up for the Metastock trial, I'd recommend it. I use it every day. I use it to make trading decisions every day. I run scans every day. If you'd like to get us set up, you can go to metastock.com/conf promo. You can chat online with us at metastock.com/sales chat. You can give us a call at 800-882-3040. There is a reason that a lot of our customers have been with us. I have customers that I still talk to that I set up 30 years ago. There's a reason that we have such a good retention in terms of both, not only just our employees. I think our average employee is here like 17 years now. But not only our employees, but we've had customers that have just been working with us for decades, that have been paying for Metastock for decades. And the only logical reason I think they would be doing that for decades and decades and decades is because it does help them find better trades. I'd encourage you to try Metastock. If you're not happy with it, you can shut off your subscription, and there's no reason that you need to keep it going. If it helps you trade better, though, $75. How many better trades do you need to make? Give us a call, 800-882-3040, metastock.com/sales chat, or metastock.com/conf promo. All of the offers we've talked about all week are available there. Okay, all right, that's Ken Calhoun. As we kind of migrate to our next speaker, I want to say thank you again to Stocks and Commodities Magazine. I certainly love these guys. They've been a great partner of Metastock over the years. I appreciate them. I also want to encourage you to join the Traders Forum. You can join the Traders Forum at www.thetradersforum.com. We have a lot of fun in this group. It's not going to cost you anything, but just to join, you can chat with other traders. They've been chatting. Sorry, guys, I didn't get a market chat done, but I did talk about Ichimoku instead. I didn't get a scan done today. You can learn about the markets. You can. It's great because people come in here and they'll say, "What do you think about this stop loss?" And somebody will come back and say, "Well, I feel like this is a better stop loss because of this reason." It's really designed to be a community of traders helping traders. It's a great resource, and it gets better with every person that joins. So join us at www.thetradersforum.com. All right, that's what I do. That's what I do have, Greg. Should we give away another prize?
Yeah, hey, that was a really good job. If I didn't know better, I'd say you prepared that. You didn't just pull it out of the sky and drop it on our heads. Very good. I was impressed. And all the best to Ken Calhoun, who's never done a no-show before, so I'm hoping he's okay.
Yeah, I think there might have been a bit of a communication issue. I'll follow up with him. I'm not sure. Yeah. It's very unusual for him.
What you're saying, Jeff, is it's your fault.
No, I was trying to make it a softer. That's all. All right.
But you did really well, and you're getting much better at your Japanese pronunciation.
Oh, that's not a goal I have. I kind of like the fact that it irritates you a little.
Okay, well.
We're going to give away a Acorn Smart Surge setup. John Seville came in. He talked about his Acorn Smart Surge system. He's willing to let us give away one more of them. So we're going to do that. And what I need from you, Mr. Lewis, is just a number.
Yes.
I just need a number between 1 and 6,952.
Once again, it's skewing pretty high. According to Google Random Number Generator, the number is 6,140. 6140.
Okay. That's a Gene N. Gene, I think I've seen Gene in here. I know his last name because I've got the list right here. But I think Gene's been in the room a little bit. Gene, if you're here, let me know.
I don't see him from recent questions, but yeah, he'd totally be here. There's a lot of people in the room right now, so it's hard to say.
Yeah. Actually, it's not hard to say because I can actually look.
Oh, I see. I don't see Gene right now.
There is a Gene in the room, but there isn't. It's not Gene N. So
yeah.
Anyway. Okay. Let me. I've made a log of that price. Greg, thank you very much. Do you have a joke for me or anything?
No. I mean, just because you're Mr. Spontaneous doesn't mean I can just whip things up. Poof.
Let me think of one.
Goodbye.
Okay. You don't want a joke? Okay.
I mean, if you're handing out jokes, I'll take one.
I did the one about Chewbacca yesterday, right? And I did the cantaloupe one.
Oh my gosh, Jeff! I heard the best Star Wars dad joke the other day, and I can't.
You can never remember.
So good. It was so good. I meant to remember it to tell you, and I can't. I heard some guy on YouTube said it was very funny.
Here. What's brown and sticky?
I don't know.
A stick.
Oh, okay. I'm sure Buff Dormeier appreciates us putting off his presentation with all these important.
Hey, we're gonna offer.
I wonder if Buff has any dad jokes.
Hey, Buff.
Why did the guy get fired from the calendar factory?
I know. Can I guess?
I don't know.
Yeah, go ahead. That's why this is true.
He kept taking days off.
Yeah, that's exactly it.
Well, break a leg, Buff. I'm gonna get out of here.
Buff, we should get a tradition going where we always start introducing people by having them bring in their best dad joke. I'm gonna start that next time.
I hope that's not my best one.
Yeah, you did good. That was a good one. Buff is a good friend of Metastock. He's going to talk about the VCPI and his volume-based indicators. He is way smarter than that last presenter. Let me go ahead and get you started here.
Smarter than nobody.
Let me go ahead and put you as the presenter so you can start sharing your screen. I don't have your bio in front of me, but I will say that over the years of having you present, I've always been very, very impressed by your knowledge when it comes to volume and confirmations and the specificity which you bring to your systems. So that's how I'm going to introduce you. I think you also won a Charles Dow Award, if I'm not mistaken.
Yes. Mm-hmm.
All right, that's 2 today. You're also a chartered market technician.
Who was your other one?
Oh, it was Alex Spiroglou. He just spoke a couple of sessions ago.
Oh yeah, the MACD V or something like that. Mm-hmm.
Oh, Greg has given us his dad joke. Where does Princess Leia shop for Father's Day? At the Darth Mall. All right. With that, Buff, I'm going to get out of the way. It's your turn. Go.
All right. Well, before I get started, I just reiterate, what Jeff was saying. $75. How many trades do you need good trades you need to make or save to earn that? That's nothing. So today I'm going to talk about my favorite topic, volume. What I want you to consider is that volume is not only data, nor is volume just a leading indicator. It's actually a market factor, but not just any market factor. It is the monarch of all factors. So today we're going to start by showing you why volume could be your own edge in building a prolific offense. And then we'll show you how to actually incorporate it yourself via the Metastock platform. So let's get into it. Okay, as Jeff mentioned, I'm Buff Dormeier. I'm the Chief Technical Analyst at Kingsview Asset Management. I'm also an Index Specialist at Monarch Funds ETFs. Okay, anyone remembers this movie? I've seen this movie, City Slickers. And what did Curly say? Curly said the secret to life is just one thing. And so my question to you is, what's your one thing? If you don't know it, you better get that figured out. So let me tell you a little bit about my one thing. I was at a higher education event this spring, and it was right during that tariff tantrum. Boy, it was a critical time in the markets, and our conversations I was having with some high-profile CFAs and the educators that were at the event, and they would pull out this data, and they give it a reason why it should be bullish, and then they pull out another piece of data, and then they say why the market should be bearish, and this went on and on for a couple of days, and after a while, I just couldn't take it anymore. And finally, I told these guys, I said, all these things you're talking about, they might be important, but to me, it doesn't mean squat. I only care about one thing, and on March 9th, more money came into the market than any other day in history, and I'm going to follow the money. All I need to know. Last summer, I was at a advisor conference in Chicago speaking on a panel with CIO and CFAs, and they all had their market views, and I'm up there on stage, and then they give you this piece of data and that piece of data and explain why it's bullish or bearish, but I had to tell the audience, I only care about one thing. That's where the money's going. And the money's fleeing the greenback and it's going back home, and if the money is going that way, that's why our portfolio, my ETF, had switched to 100% international gold and mining stocks. So if you haven't figured it out yet, my one thing is following the money. You see, I wake up every morning, I thank the good Lord who's provided me with my one thing. But in honesty, I often don't. I should be more grateful. But I have the privilege today of sharing how I employ my one thing, how I follow the money. And that's what I'm going to share with you today in this presentation. I had the movie. I should have played it. So today, we're going to follow the money, and we're going to use our following the money tactics to build a prolific offense using volume momentum. So the song says you got to know when to hold them. That's price momentum. But volume analysis takes it another step further. You got to know which ones to throw away and which ones to keep. And we want to own the ones that have momentum, but also are garnering the most and strongest capital flows. So think of volume like this. You're now the pilot of an airplane. You want the plane to go higher. So what do? You pull up on the yoke, you change the trajectory, you aim it higher. But if you did this one thing and you did this one thing alone, you know which direction the plane will go? It won't go up, it's going to go down, likely straight down, because you did not also provide the plane with increased thrust when you change the trajectory higher. Okay? So the plane, without that fuel, it stalls. So let me ask you this next question. What's the fuel of the stock market? What is the fuel of the stock market? It is capital. Capital is the fuel of the market because it takes more and more people willing to participate at ever increasing prices to keep the proverbial plane ascending. And if the market's moving higher with less and less capital flows, then the market lacks the fuel of the force or the thrust to continue higher, and it may likely stall. So think about volume in this way. Volume is synonymous with force. Okay, if we look up the force in the dictionary, this is what we would find, that force is a power made operative against support and resistance. Force is a power made operative against support and resistance. What is support? Support is an area where the buyers reside. what is resistance? Resistance is an area where the sellers reside. Okay? What's an uptrend? An uptrend is a rising support line. And what's a downtrend? It's a falling resistance line. It's all about force. Now, if we were to turn our dictionary in and move it from the Webster's into the physics dictionary, and this is what it's going to tell us, that force is a vector quantity, okay, that tends to produce an acceleration. Okay, this confirms another major tenet of technical analysis going all the way back to the days of Charles Dow over a century ago. That is, that volume leads price, meaning that you see changes in volume patterns, they precede major price movements. Think about it this way. Price is the result. It's the result of trading. So volume is the effect. Price, price is the effect or the result. Volume is the underlying cause. Since volume leads price, then volume is the producer of acceleration. Okay, so wouldn't we want to look at volume when we look at momentum analysis? Okay, that I think it only makes sense, but is largely ignored. So think about it this way. You know, we heard a Star Wars metaphor earlier, or Star Wars joke. What did Yoda say before engaging in an important mission? He asks the Jedi's, or tells the Jedi's, wishes them, may the Force be with you. Volume, my friends, is the force of the exchange market. If you take just one thing, if you take one thing out of my presentation, remember, volume is the force, and you, as the investor, want to make sure you're on the right side of it. Okay, so we're gonna talk some physics now. Newtonian physics. Okay, what's Newton's first law of motion? Okay, an object at rest remains at rest. An object in motion remains in motion at a constant speed in a straight line, unless acted upon by what? An unbalanced force. Yet most all momentum analysis neglects the force or volume. So if we were to rewrite this first law of motion, it might look like this. A price trend in motion, or momentum, tends to remain in motion at a constant speed in a straight line unless acted upon by unbalanced volume. My old friend Joe Granville called this on-balance volume, but I think is better defined here when thinking of our physics analogy as unbalanced volume or force. Okay. Yet, again, most momentum analysis doesn't include it. So volume is the unbalanced force, the cause of price change. So Newton's first law of motion suggests that momentum and trends should continue until the volume changes. So what we're going to start with, we're going to study some momentum indicator that are void of volume data. And there are really two types of volume momentum. Two types of momentum. One is eternal, and that is momentum relative to itself. And then there's external momentum relative to some other securities. So what we're going to first look at here is internal relative strength. Okay, and this chart is from a book written by Richard Tortello, Quantitative Strategies to Produce Alpha. Okay, and Tortello he was in a great spot. He's a research analyst for S&P, and in his job, he had the front row seat, I think he still does, of testing strategies for the S&P. So in his book, he tested 1,200 indicators from 1992 to 2007 to see which ones produced alpha generation and which ones produced the strongest. So Most of these were all fundamentally driven. There are maybe a few economic and a few technical. Okay. Now, of those, all those indicators he tested, guess which indicator or had the highest alpha? You betcha, right here on the screen, RSI. RSI is one of the most popular internal momentum indicators. It's available on Metastock. It was developed by Wells Wilder, and it's known as the relative strength index. Okay, and so I want to show you here is that on this chart you can see that the I can see my mouse. That's awesome. Okay, shown here is the results of Richard Tortello's broken down into the top quintiles. And notice here that the stocks with the highest RSI, the most internal momentum, had showed over 6% of alpha, whereas the stocks with the least internal momentum showed the worst returns. Okay, notice the higher the RSI, the higher the relative strength internally, the stronger the results. Okay, during a study from 1992 to 2007. Now, I did my own study on RSI from going back to 2002 to 2023, and I did it on the Russell 3000 index. Okay, so here the high RSI underperformed. Okay, whereas now the low RSI actually outperformed by nearly 7%. Thus, the results were almost exactly the opposite over the next decades. So, what we can learn from this is that momentum works, but momentum analysis by itself can be fickle. Sometimes it works well, sometimes it goes out of favor, sometimes it just works differently, as we observed here. Now, just think about what if we could find a tool that revealed when momentum had fuel to continue versus when it was gassed and likely to fail. Wouldn't that be of value to you? Maybe. Next, we're going to look at external relative strength, or RS. RS compares a security's momentum to that of another security, usually an index like the S&P. RS is, how is this stock or how is this sector doing relative to the S&P 500? Okay, as investors, we shouldn't be surprised that of all those indicators tested by Tortello, that RS was in the very top 1% producers of alpha in all those studies. Okay, so again, another winning strategy is RS, and relative strength outperformed by 3%, with stocks that were out of favor, low momentum, lost 3%. So again, I did my own studies, again from 2002 to 2023, and here we find out that RS, we have confirmation, both it wins on the top decile, but we also find it also won better on the oversold side. So both the top decile and the top decile outperformed. Okay, now let's move on to the second law of motion. Okay, and this is where we can put a little bit more volume. Okay, Newton's second law of motion is momentum. And what do we learn about momentum from Newton? The acceleration of an object depends on the mass of the object and the amount of what? The amount of force applied. In other words, the more volume or force being applied to price, the stronger the expectation of momentum. Thus, our analogy is that price acceleration or momentum is powered through volume. Volume is the fuel of the market. With this in mind, what would happen if we did something crazy and added volume into the RSI? Well, there's already an indicator that does this. It's called MFI. It's actually in Metastock platform. I know it's in my volume analysis toolbox that you can get through Metastocks. But the money flow index, what it does is it volume weights RSI. And so notice what happens. What happened here? Oh, here we go. Notice what happens when we add volume to the RSI. It takes a strategy that is losing 3%, and it flips it into one that actually makes 2% when we volume weight RSI. Okay, but most people don't use volume, especially in momentum trading. But those that do, stop at that last point. Okay, so next, what I'm going to discuss is the most significant law of all, but it's the one everyone misses. Okay, it's not price momentum, it's not volume, nor is it volume momentum. Rather, it's the asymmetry between the two. Newton's third law of motion: every action has an equal and opposite reaction. It's the delta between price trend, or between price momentum, between that price trend and its volume. Demand pushes, supply pushes back. This is the delta force, or the volume factor. Newton's third law of motion. To illustrate this, what I'm showing you here is the S&P 500 in blue. And next, we're going to look at the stocks using my VPCI indicator, volume price confirmation indicator, which measures the delta force, or the difference between a price trend and a volume weighted price trend. And what we did here in the red line is we just bought the stocks in the S&P 500, the top decile, the top 50 stocks in the S&P every quarter, and owned those top 50 stocks based upon which ones had the highest volume confirmation, or volume asymmetry. And notice that we outperformed the market by nearly 3% over 2 decades annualized. Okay, Jeff said the Stocks and Commodities is a sponsor here. Okay, you can read all about this on Stocks and Commodities magazine. This was my data published in Stocks and Commodities. I don't know what the date here is, but you can look that up if you're a subscriber. You can look up the article. Lots of compliments on that. I think you'll get a lot out of it. Okay, so this is my VMI indicator that was talked about in that Stocks and Commodities article, but it's also one of the primary tools that you'll want to use in Metastocks and the Volume Analysis Toolkit. Okay, VMI is the difference, the delta between the MFI, which volume weights the RSI. So it's the difference between the MFI and the RSI. Okay, so it's showing us the strongest volume confirmation. Okay, and what we're looking here is these deciles. Okay, the ones with the strongest volume confirmation outperform by over 7% the index. Okay, this is the top decile. Okay, so this indicator here, VMI, the top decile, outperformed by 7% stocks with the strongest volume momentum confirmation. Okay, so what did we learn? Let's kind of sum it up here. Newton's first law of motion: volume is the unbalanced force causing price change. Law number 2: price acceleration or momentum is powered through volume. And Newton's third law is the difference between momentum and volume adjusted momentum exposes an asymmetry between price and momentum, and that is the delta force. Okay, so next we're going to take all three of these and put them together. We're going to look at RS, and we found 2 areas of significant alpha here: the top quintile, or top decile, and the bottom decile. Okay, and what we can do here is we can combine the top decile with the bottom decile in the one decile by changing relative strength to absolute relative strength. So we're going to look at absolute relative strength. We're going to take the delta factor in trends, which is the VPCI, and then we're going to add to it the VMI, or volume momentum confirmation, and we're going to put all these into one indicator. Okay, and when we do that, we combine them all together: absolute relative strength, the VPCI, and the VMI. We take a strategy that earns less, a little over 11%, and now it produces 24.5% annualized return. That's significant. That means that if you had a $10,000 portfolio and you invested in the Russell 3000, it would have produced 123,000. Versus if you had it in that strategy, it produced over $1 million. This is the annualized rates of return for that specific strategy. Okay. So I've been calling this the volume factor. Okay. To call something a factor, it's all about having p-values. Okay. P-value is what's the chances of this thing happening by chance. Okay. Most factors have a p-value of 0.05. The strongest ones, like momentum and quality, tend to have p-values of 0.01. The p-value on the volume factor is 0.0001. It's 100 times stronger than the next factor. That's why I can say it's unquestionably the monarch of all factors. Okay, so let's take a break here and let's look at. We got time to look at the current market. So this research comes from my volume analysis flash updates, and you can get this info every week, and you can subscribe for free at my website, buffdormeier.com. And so here we have the areas of the market I review every week. Okay, and what I've been calling for the last several months is a broadening theme, and this campaign continues to fragment along these familiar lines. Okay, so there's broadening. Divergence is remaining my dominant theme. Okay, and so consistent with this broadening theme is that the market is broadening wider, meaning it's moving from this narrow group of mega caps, which I often refer to as the Nephilim. The Nephilim are the biggest of the QQQs, or the generals. I often refer to them as, and those big stocks, those biggest groups, are also referred to as the Mag 7. Okay, so we're moving from this concentrated market, which is driven primarily by these Nephilim, or the Mag 7, and illustrated best in the Qs. Okay, and it's broadening out. Okay, it's broadening out, meaning that it's becoming a bigger group. It's moving not just to this narrow leadership, but it's moving. The money's been moving to the broader areas, such as international and all those other stocks that aren't part that are part of that Mag 7 or QQQ. Okay, so and then it's broadening deeper. Deeper, I mean, is moving out of just the large caps and the mega caps, but is moving down. It's flowing down into the mid caps and to the small caps and into the micro caps. Okay, and so we can see that with what happened just this last week. Okay, not this week. This is last week's report. You can see that the Qs were down 127. The generals were down 127. The lieutenants, the S&P was right down with it, down 1.28. But the Russell 2000 was down only about 0.75%, and the equal weight S&P was actually up 0.3, and the brass commanders, the quality dividend stocks, were up 0.44. You can see that here in the chart. Okay. Now, note, since we've been following the theme here, that the S&P is only up 4.28. I should have put the Qs on here. This would have been better, but I put the S&P. It's only up 4.28. The world stocks are up about a little less than 7. The S&P equal weight compared to the cap weight is up 10.5, and the small caps are up nearly 13.5. And the brass commanders, the quality dividend stocks, who, these two, the Russell 2000 and the brass commanders, pretty much missed the market since 2024. But now these are showing strong relative strength to the S&P. Okay, so let's look at the market in a little bit more detail. Okay, so what I'm going to point out here is what happened on last Thursday. And notice here this big red bar. That is downside volume. And this green bar right here is upside volume. On last Thursday, 96% of the volume was to the downside. This is I classify these as 90% downside days. Okay, and this isn't the only week we had it. The week before happened right here. It was actually higher than that, and then we had it right here. Okay, and so what we're seeing is now 3 clusters of these in a row, and that's concerning to me. And then if we look at Friday was, the market closed on a doji. Jeff was talking about candlesticks. It was a doji. But on the volume basis, over 80%, it was actually 82% of the volume was to the downside, even though the market was flat. So this doji may represent a temporary halt here in our selling pressure, particularly as the market is coming back. I don't have it drawn here towards support. However, it could also signal confirmation that this intermediate pause that we've been experiencing, it could be pausing further. So we could interpret that one of two ways. Okay, this is the volume on the week. Last week, that 65+% of the volume was to the downside, and the week before it was even worse. Look at that. So we've been seeing more of these. And when I look at these volume charts, just look for the standouts. If you see these big numbers, often the price moves in the direction of those standouts. Another thing I do is, as opposed to looking at the trend of the market, I look at the trend of accumulated volume, and that's what this shows you right here. And so you can see here that the market, or the accumulated trend, has been making lower and lower highs, broke out of that, and then last week broke down to support. So this is an area we're watching really closely. Okay, support is still holding, but this is an area that the bulls need to maintain control. Okay, now that's the S&P. Now what we're going to do is we're going to go beneath the surface. Okay, this is where our broadening theme persists, and what we're looking at now is not the market. It's the New York Stock Exchange advanced decline line. New York Stock Exchange advanced decline line looks at every week how many stocks went up on the New York Stock Exchange versus how many stocks went down. Okay, so this is the advanced decline line accumulated over time. And notice that unlike the market, this broader representation of stocks is consistently making new highs and breaking out. Okay, this confirms what we've been talking about in our broadening theme, that the market is broadening out. We don't have to be just in that S&P 500 anymore. We can look at more stocks to participate in. Okay, that's where our explorer function becomes really important, because we can now look at a whole lot more stocks than we could in just trying to find our own tickers. Okay, it will screen those stocks for us, a whole universe of stocks, and we can find these broader stocks that would generally go against our radar. Okay, so I mentioned the Qs. Okay, I wanted you to take you back to right here. This is early December, the first and second week of December. This formation candlestick analysis, we've got a white candle, then completely engulfed by a black candle. This is called a spinning top formation. Okay, and as the name implies, it's generally either a top or what we've been seeing here, particularly when it's found not at the very top, but more in a consolidation of the top. It becomes a consolidation, and that's what we're seeing here. So we need to hold this support here a little bit under 600, and as well as the more major support here at 575. Okay, now that we're going to look at the small caps, which I refer to as the troops. Okay, the troops are maintaining their recent relative strength against the generals, but they also are kind of pausing out right now. They're not going down, but they're kind of taking a pause, hopefully a pause to refresh. Okay, and then we can see our equal weight S&P is breaking out to new highs. And here we go, the Schwab Dividend Index. Look at this big base. I love these formations here. A big base on the this is SCHD, the Schwab U.S. Dividend Index. And boy, by that, look at that breakout here. Broke resistance here, boom, boom, and continuing to fight against the relative strength of the S&P to make its make new highs. So this right here, I love stocks or these formations, I should say, with big bases, and this has a very big base, which often leads to a powerful move. Now, I mentioned about the Metastock toolbox. Okay, so what I did last week, and I also mentioned the Explorer. So what I did last week is I ran the Metastock volume analysis toolbox on the Explorer tool, and I came up with these. And these are the stocks that passed. Now, I have to admit, I'm not giving you my very best picks because I bought those in my compliance department. I'm a professional money manager. I run my own ETFs and my own investment strategies, and so my compliance department will not allow me to show you the stocks I've already bought. But these are the ones that were close, near misses to buying. Okay, so these aren't ones that I bought, but these all passed the screen and look pretty good. Okay, now let me show you some things here on how the tool on this what is available here in the toolkit. So first of all, notice that the chart has different colors. Okay, green, you see this green arrow here that starts it. That means that we've got a buy signal. So right here, we got a buy signal, and then we got an exit. What is that exit triggered by? It's triggered by these red dots. Okay, these red dots are an indicator that you get in the toolkit called the anti-volume stop loss. Okay, so in the system, it tells you when to buy, and when it goes underneath the red dot and closes below it, that's when we sell. So buy here, sell here. This one here is a short candidate. So we shorted here and we covered here. Okay, this one here didn't work out, but we got another signal just recently, a couple weeks ago. Okay, and then it showed it on my signal here this week. So this one here looks pretty good on my system. Let me talk a little bit more about what else you're seeing on your chart. This is my proprietary trend thrust indicator. This is the MACD, but it's the MACD on steroids. Okay, what it does is looking at um, uh, moving average convergence divergence. So it's the divergence of trends that are either diverging or converging. But what we're doing is we're weighting that by volume, and not only just weighting it by volume, we're also got our own little system in here that adapts. It's an adaptive indicator, kind of like AI, but this is adaptive. It's called adaptive pieces. That if the volume is confirming, it's going to make this thing slow down, and if the volume is contradicting, it's gonna speed it up. And what that does is it gives us quicker signals in when things are happening well, and it gives us slower signals out. Okay. The other thing that and this is one of the main tools that triggers these buy signals. Okay. The next thing we're going to do is that both of these, this has to be confirmed by this, and this is the volume price confirmation indicator. Again, the volume price confirmation indicator tells you when it's going up, the volume is confirming the price move, and when it's going down, it's saying it's contradictory. So if this thing is moving up, and the stock's moving up, we like it. See here that it's moving up, curling up, broke the zero line, and now it's heading up at the same time TTI is. That's given us that signal here. Okay, we also have the VMI, which we showed earlier, that had that 7% delta, or 7% outperformance or alpha against the S&P. That's this indicator right here. And notice that we got the volume bars. Okay, stand out. These are the standouts that we look for. If it's, we look for big ones that stand out, and we generally follow the directions. You follow these, you generally these are pretty good signals in and of themselves. But these are color coded, so by volume spread analysis. And so we have it colored. If you understand or a follower of volume spread analysis, you know that these colors have different meanings, but we know that green is good, red is bad, and blue is neutral. Simplified right here. Okay, next is UNP, Union Pacific. We got the signal here. TTI breaking out, VPCI again curling upwards, and then getting some nice green bars on the bottom. Okay. ITW, International Tool Works. Look at that big move here, and it's a nice breakout. Okay, you can see it broke out here, and now it's breaking above into all-time highs. Okay, TTI is moving higher, VPCI is moving higher. Big green bar confirming this big price bar right here. That's what we want to see. Okay, this is HLT, Hilton. Notice we got a really good signal here. This short didn't work out well, but we reversed itself, and now we're back in again. Look at this really good TTI reading. VPCI is going really strong. Okay, so this is looking good. HLT. Okay, next we're going to look at I'm not sure what this is. TLPN. This one doesn't. This one I think or VIV. This is VIV, and this one here looks good, but it's extended. Look how it went from 12 to over $16, and I would wait to pull back here maybe to 14 level before I entered in there. That would be something to consider, because this is pretty extended. That's a pretty big move. So look, this one may work out as a pullback. Okay, look at this. Love this base. Look at that. This looks like it's forming a couple and handle formation and now breaking out. Okay, TTI, nice signal right here. Boom. VPCI is flattening out. It's not as I would like to see the TTI higher. That would be important to me. So I'm a little concerned about the VPCI not confirming this TTI, but it's good enough to hit the system. Okay, not all the stocks we have to be in have to be in uptrends. Okay, you can see that this is a stock that's been NTST, been in a downtrend for some time, but it's finally broken out of this bearish zone, and now it's starting to turn green. And we're getting a couple buy signals in a row. TTI is just starting to flip over. VPCI doing the same thing above the zero line, and even our VMI is starting to curl up here on that big volume chart. So this is one to keep an eye on. So what's my one thing? If you haven't figured it out, following the money is my one thing. So that said, you'll never, what's your goal? You want to find out your one thing. But you may never do that without a spirit of gratitude. So the good Lord has provided you with a spirit of wisdom or a mind of understanding. Just be thankful. And think about it like that movie City Slickers. You find yourself being a stock cowboy on your own journey. Be grateful for that path that you're on. Okay. If you'd like to receive my weekly commentary, you can go to my website. It's been all over on this presentation, buffdormeier.com. Sign up for free. If you'd like more in-depth knowledge about the volume factor, you can check out my books, The Volume Factor. Available most anywhere. Or if you want to get into more in-depth, you can look at my first book, Investing with Volume Analysis, which was 2011's Technical Analysis Book of the Year. And yep, I think yeah, and that concludes my presentation. Jeff, you got anything? Any questions that I can help that maybe coming through the chat?
Hitting the wrong button. Patricia's saying thank you.
well, thanks for your attendance, Patricia.
Yeah. Let's see. Let's take a look here. Let's. I do have. I'm gonna turn on my camera real quick. Buff, great job. I know you've worked with a lot of. Ooh, I forgot to change my camera. It's like down there. Here, I'll fix this in just a second. In any case, I know you've worked with a lot of traders over the years. What's the one advice that you'd have for a brand new trader? And while you answer that question, I'm going to fix my camera so that we get a better angle.
Okay, for a new trader, remember risk management is the most important piece. Okay, it's all about staying in the game. Okay, you want to. It's about surviving. Okay, particularly when you start off, you want to learn, you want to survive, and it's not necessarily about making money right away. It's about learning, gaining experience, and surviving. Risk management is your path to survival. Okay, if you can survive and keep your drawdowns low, then you'll be on the path to success. So it's not about how much you make. It's more important about containing losses, because if you lose 10%, you need 11% back to get back to even. If you lose half your money, you need to double your money to get back to even. Okay? So preserve that capital base is the most important piece in the investing equation. And to put that into a practical piece of that, that's why I have the anti-volume stop loss. It provides you with an objective data point that says, hey, I'm out at this level. Even if I'm taking a loss, this is how much I'm going to lose, and it's not based upon a percentage like William O'Neill may say 7%, some other guy may say 10. It's based upon what the stock's doing. So if the stock is showing volume confirmation and it's going up, we're going to reduce that anti-volume stop loss and give you more room. Okay, in case there's an area of volatility, it'll keep you in the stock. But if the stock's moving up on low volume, then that's going to adjust, and it's going to become a tighter stop, so that it so that you'll get out quicker on the reversal.
Okay, very good. Alistair wants to know, do you make any adjustments for large block trades or crosses in the volume analysis? Thanks for that question, Alistair.
Can you say that one more time?
Do you make any adjustments for large block trades or crosses in the volume analysis?
So what I'm looking at specifically is, if I'm not looking specifically at the institutional versus retail trade. What I'm looking at is the accumulation between the two. Okay, but I will say that what you want to do is you want to understand where the big money is moving. Large block trades don't tells you that, hey, there's probably an institution involved. But what institutions will do is that large block trade, you may think it's an institution, but maybe somebody with just a lot of shares, because institutions want to hide their activity. Okay, there's dark pools out there. There's lots of different mechanisms that I use, and what they're all designed around is trying to hide your activity. Okay, you can hide your by how you layer your trades, how you buying on the bid, selling on the ask. These are all strategies that hide what you're doing from the rest of the community. Okay, but you can't hide the volume. Okay, you can't hide the volume. And generally, even those big block trades, if they're too, if you're seeing, sometimes it's institutional, but often it's just somebody with a lot of shares, because institutions will generally try to also divvy out their volume and spread it out so that you don't see those big chunks. And so when you do see a big chunk, it's often a one-time thing. It's not somebody that's working a trade.
Okay, Patricia would like to know if you use volume profile and VWAP too.
I think I don't use a lot of volume profile because of what I just described.
Okay, fair enough.
But the tool that you have inside the volume analysis toolkit is generations ahead of VWAP, and that's the VPCI. So if you were to set and if you're beyond, if you're not, if you're getting beyond the daily data, inside Metastock you can get real-time data. And if you set your real-time data to tick data, you can put VPCI in there, and you're going to get or volume weighted, or my own volume weighted moving average. Okay, set your volume weighted moving average to tick data, and you're going to be way ahead of VWAP, because you can control those time sets.
All right. Very cool. Thank you, Buff. Appreciate it. I'm going to talk a little bit about the special offer you've allowed us to do on the analysis toolkit. I want to thank you for spending some time on a Friday evening with us, and appreciate it.
All right. Hey, it's good to be with you again. Y'all take care.
Right. Right on.
All right.
Thanks.
Okay.
Okay, let me go ahead and share my screen here. And we'll go ahead and do that. All right, cool. All right. Buff does have his Dow award-winning indicators and methodologies in Metastock as the Buff Dormeier's analysis toolkit. It includes his systems, his explorations, the system tests, the templates, 24 different custom indicators, and of course, it's going to include a complete integration in a Metastock. You can scan with them. You can go in and get commentaries. You can read out the commentary alerts, all that kind of stuff. Everything you'd expect in a really good award-winning add-on is going to be in the Buff Dormeier Analysis Toolkit. Normally, the price on this, the Buff Dormeier Analysis Toolkit, is $149. We're going to give you, if you sign up today at the conference, we're going to give you a permanent discount on that rate of $99. And we're going to give you 3 months for that. So for $99, you can get 3 months of access. Pairs perfectly with that extended trial for Metastock. You can do that by calling us at 800-882-3040. You can go to metastock.com/salespchat. And you can also sign up for this at metastock.com/comp promo, which I don't have on here. So, but you can go to metastock.com/comp. You can click on the link that Greg's going to put in the chat. All right. Very, very cool. As we kind of get to the last, Patricia, thank you. I do want to say thank you to Stocks and Commodities Magazine. I do want to encourage you to join the tradersforum.com. And Greg, let's go ahead and give away our final prize of the day. I'm going to do it a little bit differently because I'm feeling a little bit
Well, I should mention to you, by the way, that I've noticed there's been a real decrease in comments in GoToWebinar today. So I logged in on myself as an end user would do, and I noticed that the button that you push to submit wasn't working until I updated Chrome.
Oh, weird.
So I'm wondering if people are having issues submitting stuff today because they don't have the latest version of Chrome or something.
Maybe. Yeah, that's
so
really
yeah,
weird.
I mean, they're just really, I mean, just a fraction of what we normally get from a full day comments. So I'm wondering if there's some kind of tech issue going. And I did check the system and did some research if there's something we did wrong to prevent people from commenting, and I didn't find anything. So
okay,
there's
right.
some people are obviously getting through, but not many.
Well, I thought we'd do something a little bit different for the last prize of the day, or the last prize of the week.
Yeah.
Okay.
My ears are
all right.
I'm on the edge of my seat.
Well, first of all, let's talk about what the prize is. Now we're going to give away.
Yes.
We call it the Metastock Mega Prize, but I'm going to call it the Metastock Mega Prize because we're going to throw in a few extras with it this time because it's the last prize of the week. It's been a great week. We've had great attendance, great signups. A lot of people have started Metastock.
Very saucy right now. I'm very interested to know what you're doing.
All right. So not only are we going to give away our award-winning Metastock software program that's been rated #1 in its price category for 32 years in a row, we're going to give you that. It can help you scan, test, get Forecaster with the Forecaster, real-time commentary alerts. Great software program. I just showed another system a couple minutes ago called the Ichimoku that's part of that package. Not only are we going to give away 3 months of that, we'll give 3 months of the news information service. The news and the data that we get is supported by the London Stock Exchange Group and particularly Reuters. Reuters has about 2,000 different reporters and 200 different news bureaus. The platform that they've kind of released has been developed at the cost of over $1 billion. We're going to throw in 3 months of access to that institutional quality data feed. We're going to throw in 3 months of Learn Metastock. Kevin came in and he talked about Learn Metastock just yesterday, wasn't it? the days are blurring together for me, but it was yesterday. He talked a little. We use Learn Metastock to help you learn about Metastock. We use it to train our staff internally here in Utah. We're going to throw in 3 months of that. I'm also going to throw in 3 months of Buff Dormeier's analysis toolkit, which we just talked about, and Rahul Mohindar's ATM. So now how I'm going to, we've always done this one based on who had a comment. Today, I am going to do it based on anybody that's logged in. So if you're logged in and you're watching us at the end of the session, then you're going to be eligible to win. You don't have to say anything. You can say hi, though, if you want to. But as long as you're logged in and watching today, I want to get somebody that's really, really been here for a while.
Are you going to roll down the thing and have me tell you when to stop, or are you just going to?
That is exactly what we're going to do. So it's that kind of alphabetical. So I've got them. I've got the list of attendees actually expanded right now. And so if you'll just, I'll start, and you can tell me when to stop. I'm going to start now.
Stop.
Peter W. So you got all the way to the P's.
Oh, okay.
Okay, let me copy that email address. Peter, if you're paying attention, say hi.
Oh, I see you are able to get the email address. I was just going to ask you how you were going to do that, but I see you can get it. Okay.
Oh, did you not know?
I
That's
don't know.
I'm
What do
here.
I know? I don't know. I don't know nothing.
Patricia says, I hope I can learn all this Metastock ASAP on weekend. Would be nice if someone handing me a list of the videos. Hey, Patricia, I know you just set up, but you also set up with Learn Metastock, and so there's tons of videos up there to help you get set up. And I want to welcome you to Metastock. So thank you for subscribing. I appreciate it. All right.
Well, Iqbal also mentioned that he's had no problems submitting things, but yeah, of course, some people don't have a problem, but I think some people are having problems.
All right. I have my own problems. Greg, thank you for this.
I've got so many problems.
I got 99 problems, Greg. All right. Thank you very much. All of the offers we talked about today, including the extended trial where you buy a month, you get 3 months of Metastock. It ends up being $25 a month. All of the offers can be found at metastock.com/promo, metastock.com/saleschat. If you have questions, we would love to talk to you. Give us a call, 800-882-3040. And yes, I am laughing at my I've got 99 problems comment. Anyway, as we move on, I want to, our last speaker, Jeffrey Scott, has an awesome first name. But in addition to that, I love the approach that he goes. He comes to trading from a very, very busy professional background. This is where I should have a picture of him, by the way, but I don't. He has a very busy. Stop, Greg. He's sending messages. He comes from a very busy professional background. He trades only after hours. He has a very interesting top-down approach to really kind of identify how's the market look in general, what sectors are improving, and from that, what stock should I buy? And the reason he does that, he lays out well in the presentation he's about to go through. So without further ado, Jeffrey, let's go ahead and get you started. There you are. Cool. I'm going to go ahead and make you the presenter. How'd I do with the introduction for you?
All good. I thought that you were going to make it special and give it to your speaker. I thought you were going to do it differently. I was getting excited.
Oh, I can. Sure, you got it. No problem.
I'm talking the big prize, except I probably own all the add-ons, but and you know I do.
Yeah, I do. Yeah, I do.
I just need to maximize that screen, or does that happen?
Yeah,
I got our pictures. How do I make us big? I just figured it out. All right. Should I let her rip?
You're ready to go. I'm going to get out of the way. I'm here if you need me. Jeffrey, take us home. You're the last speaker, so I think that makes you the keynote.
I get everybody before dinner. Well, thank you so much, Jeff. And yes, I like your first name as well. The only thing I would change in what you said is I do my trading during the hours because I load up the trades before the market starts. I don't trade during the day. I'm not looking at charts, but you can't trade stocks and options and after hours, but you certainly can pull out your trading application and put them in there. And I use mostly Thinkorswim, but Thinkorswim and TradeStation and Tasty for trades, and all of them allow you to put the orders in. So I'll go ahead and talk about what I do. And the title that I think got a little bit misspoken in the agenda, but I'm going to talk about how I trade during or while working full time. And I'll tell you about me in the first couple of slides, so I won't waste your time yet. So I am a physician. I am a medical oncologist, so a cancer doc. My email is marketmripro@gmail.com. I respond by myself. I don't have a big company here for teaching people how to trade. I've just been doing it for a long time. So you'll get me if you email. I have a Google group where I communicate regularly with folks. It's called Top Down Trader. It's free. Part of my not doing this as a business from the software perspective is I don't keep a mailing list. So I use the Google group to communicate. And I have a fledgling website called marketmripro.com. Now, how do I hold on a second here? Seems like I got to figure out your application because it's not letting me doing something. I'm sharing, optimize for video. It's not letting me change slides, so I guess I can change them here probably.
Let me see.
Oh, now can you see me full screen now?
Okay, I do see the slides changing.
Okay, good. All right.
Yeah.
So just so the disclaimers, everybody says the same thing, they say it differently. This is for educational purposes only. Anything I talk about should be taken in the spirit of education, not investment advice. The intent of the video is to show you how I use the tools for top-down analysis. And trading involves risk, and you should always be consulting with your financial advisors. And I'm not going to talk options today. I love options, and I trade predominantly options, and I've been doing it for 30 years. And if you do trade options, the most important thing is to know what you're doing. And the Options Industry Council has some great information at low cost. I mentioned my Google group. As I said, it's called Top Down Trader. All the Google groups, you can control your participation, which is the best thing. You sign into Google groups, you go to all groups, then you look for it, Top Down Trader without the hyphen, and then you link your profile and tell me how you want to be contacted. And if you don't like it, you can unlink yourself. You don't have to ask for permission. So as I said, I'm a cancer doctor. I'm board certified. I've been in the market since the 90s. I actually had an interest in probably more of an entrepreneurial interest than just practicing. So I started my first startup in 1998, and I actually quit practicing, much to my mother's chagrin, in 2001. And I've had a series of healthcare startups since then. Because of my day job, I have a company where I'm a partner. We have about 3,000 employees in 3 or 4 different countries. My office overlooks down in West Palm, overlooks the water. And because we have water views, all the internal walls along that side of the building are glass. So I literally have a fishbowl for an office. So if I was to have charts up and be trading during the day, I'd set a horrible example. So I can't. So I found out how to do this without hurting my performance and without watching charts all day. And I've been teaching people how to trade for over 20 years via YouTube, live seminars, and mentoring, more done for a passion. I put this slide in for my mother, and that I'm still active in doing cancer research. My company is a big data healthcare company, and we use the data to make doctors better by finding, we call it gaps in care, opportunities to improve, just like we have gaps perhaps in our trading. Now, everybody can probably call out what their biggest influence was. And my biggest influence really was losing money when I started, and it was because I didn't really get an education. I didn't have great tools. But what I did is the dumbest thing possible is I sat at the lunch table in the doctor's lounge, and I heard from all these more mature physicians than me about how great they were doing and what their brother-in-law said to buy. And after taking a couple of their tips, I realized that that was only a guarantee to lose money. And so I decided that the best thing to do was to learn. And so I started reading. I started with William O'Neill on How to Make Money in Stocks, which to this date I probably read every year. It's just a great background. I think the investors.com community has some great teaching. But then I met this guy named Ian Woodward. And Ian's approach to education was that he wasn't a guru, but he would teach you to become your own guru. And that's kind of what I've tried to adopt. Don't rely on what anybody else tells you. Learn yourself and be the person that defines what you do. And so I've explored every educator that you can come up with. I probably own every software program I can find, although I don't use all of them. I wasn't kidding when I mentioned that I probably have all the add-ons. I certainly have all the add-ons that you could own. I get tired of renting add-ons. I like the ones I can purchase outright. And I've read tons of books and been to tons of seminars. And so I kind of use the word smush. I smushed together all these things I learned, and that gave me how I trade. And so I developed these tools and have been using these tools for years to make my life easier. And you're going to hear about top-down trading and how I use that, which means I've got to understand the market. What are the leading sectors and industry groups? And then what's the best stock? And there's top-down, which is what I just described. And then there's bottoms up, where you ignore the market, you ignore the industry group and the sectors, and you just look for the best stock right now. I can't lie, I do that too, because that's more exciting. And part of why I want to get this done quickly, not the talk, but my trading, is because there's other things in life that matter. And probably one of the most important things is sitting next to me there on the couch, which is my granddaughter. And for those of you that don't have grandkids yet, imagine what you're missing and multiply it by 10. Best thing ever. So I am a top-down trader, hence the name of the Google group. I'm a swing to position. What do I mean by that? I like to stay in positions for a long time. And you might then question, but Jeff, you said you trade options. I do trade options, but I can either take leaps, which are options that don't expire for a long time, or the best thing that I ever started doing to prevent giving my money back was to learn the technique of rolling up and out. Up refers to, as a stock goes higher, I might roll my stock price higher and higher, my strike price, and by doing that, I'm taking money out every month or every other month, depending upon the duration of the option. And so that's rolling it up, and rolling it out just moves the month of expiration out further. So I may stay in the same underlying entity for 15 months, and it may have been 4 or 5 option trades. Now, if a stock pays a big dividend, and the reason why I'm going into that stock is for the dividend, I'm obviously not taking an option, because you don't get to keep it. I don't really look at intraday charts, except, well, there's really no reason, unless I am in between jobs, like with non-competes and non-solicits, and I decide to trade futures for 2 years because I don't like dealing with the lawyers and getting out of my non-competes. But for my trading, it's daily and weekly charts. I have a lot of indicators, but they're really simple. And when I teach people who want to trade like I do, it's really about emphasizing, don't overcomplicate things. As I mentioned, mostly options, but equities and equity options. One of the educators who I had the pleasure of spending some time with in one of their seminars, who also has an add-on, is Alexander Elder. And the first time I went to one of his programs, he said, all right, now everybody's going to come up one at a time and teach us about their A-trade. How do they find them? How do they manage them? And this is my first time there. I'm going, what is an A-trade? Well, the A-trade is the trade that I do all the time. I just didn't know what it was called. I look for stocks in a longer-term uptrend that pull back to support, and then I want to buy them when they have momentum off of support. That's my basic trade. Now in yellow calls out the fact that it works in reverse. If we have a stock in a downtrend that might retrace to resistance, I want to buy it with momentum off of resistance. I won't talk much today, but I will mention some of the follow-up I do for the folks that want to follow me, whether they own my stuff or not. But I do have rules-based position sizing and stop management. Well, probably won't talk much about that today, but I certainly do when I do my free mentoring. And then I like seasonality. And right now, if you didn't know, the market's in kind of a 2 or 3 week period of historical weakness, on top of all the other craziness that we're dealing with tariffs, et cetera, although it's kind of a good day today. I get my analysis done in 30 minutes each night. In fact, I do my analysis with a camera on and with a video of my screen and a microphone, and then I load my analysis up on YouTube. So I show people exactly what I'm doing and what I'm buying. And it has to be 30 minutes. Sometimes I talk too much and it goes to 50. It's much shorter if I do it without recording. And what I've done really hasn't changed in 30 years. Just the tools have gotten better to make it easier. Now, I'm going to try and convince you why top-down makes sense. And there was a group of very smart traders. I had the pleasure of going maybe 10 or 15% of the time. They met for years every month in Palos Verdes Estate, California. And my mentor, Ian, would hold court. And at the end of every meeting, they would basically pick a handful of stocks that they wanted to trade in the coming month. And somebody would keep track and look at performance. And then they sat down and they would review. And the things that they found out, I think are important. One thing was that good stock pickers, and let's assume 20 days represents 1 month and 40 days represents 2 months, but they found that good stock pickers could double their money in a strong market. Now, you might find that hard to believe. It's not. I've done it. It's not easy, and you need that special type of market, such as one that we had last year, starting around April 8th, and I'll talk about that as we go. But the same people who are really good at stock picking, they didn't do so well in a bad market. And so you can't have the same approach every day, regardless of the market. So to me, top-down's important because it really determined the performance. It was the same people, the same leader, the same approach, very, very different outcomes. The second thing was, even in a good market, there's a reversion to the mean. So I have incorporated into my trading taking profits. That's that whole idea behind taking, rolling my option strike price higher and putting the difference into the bank. Because if not, I know that in a strong market, I'll give up some. But if that market weakens, I might give up the majority of that gain. And then unfortunately, the corollary isn't always true. And if the market's really bad, such as a bear market during a recession, don't hold on. Your first loss is your best loss, because in that market, things get worse. And this really dictates a lot of how I've approached the market. Now, I also want to have fun. And so the things important to me are my wife, grandkids, my boat, and Michigan football. Although this coach went with disgrace, I had a health problem about maybe a year and a half ago. And I was sitting and I had to do go visit one of my customers. So I flew up to New York and we used Teterboro and went into the city and spent the night. And imagine what you would do to your spouse if they had major surgery on Saturday and Wednesday night they're having a customer dinner in New York City and you live in Florida. So my wife wasn't real happy with me. But I came back to the airport, and while I was waiting for my captain to say it was okay to board, a bunch of Michigan coaches and boosters came in, and Sharon Moore, like I said, he has some issues now, but he sort of, we had a nice little conversation. I'm a Michigan grad and a booster, and talked a lot about what was going on. I told him about my health issue, and he sort of gave me a pep talk, which I think really made a difference. And so he's not going off my pictures. So if I want to distill down, and I'm going to get into Metastock in a couple moments, if I want to distill down what I've learned over 30 years of trading, market direction is the most important thing, and it's going to handle 50% of what happens. So if on Monday something good happens, we have a stand down with Iran, they sign a nuclear pact, everybody's happy, the market opens up 400 points, you're going to make money. It doesn't matter what you own for the most part, unless you're short. If on Monday something happens and they decide that we can't build any more data centers, well, that industry group, that sector, that theme is going to sell off. So that matters. and then it's finding the best stock. So I want to recognize that half comes from the market, 20 to 30% from the industry group, and then maybe 20 to 30% by finding the best stock in that group. So if I don't have the market or the industry group in my favor, I'm playing in a sandbox where I'm probably going to lose. And a lot of people like to do short-term trading and day trading and very active trading, and that's great, and I've done that, but I've made the most money by having a position I've stayed in or rolled it up and out over a period of time. And no matter what I think, if I start thinking it's different this time, everything I'm touching is going up, the world is amazing, it's time to get out because it's never different. And stops, targets, and size matter. In the beginning, when my accounts were small and I didn't know as much as I know today, I blew up my accounts a couple of times. Hasn't happened since we turned the century mark 25 years ago. But in the early 90s, I didn't have enough money in the account, and I was too aggressive, and I didn't know how to do stops. And the result is never a good thing. Ian was English and British, and apparently they have different opinions about what's okay. So where we played chutes and ladders in the US, they played snakes and ladders in England. And this is his picture, and he would talk about how he was playing with his sister and imagine 100 is enough money to retire. And you roll, you hit 28, and the ladder takes you all the way up to 84. And you're feeling really good about what you're doing. You start probably taking bigger position sizes, taking more risk, and you roll a 3, you hit the snake head, and you go right back down to 24. If you are 30s, maybe even if you're in your 40s, that might be okay. But if you're retirement age like I am, although I won't retire, I enjoy working too much, you can't afford to play chutes and ladders with your money. So money management is key. And again, I'm not going to talk much about it today, but I spend a lot of time when I do training and teach people things. Market context, I already mentioned this, but that market determines my stance, long, short, or in cash. I look for my favorite setups in the top industries. I look at bottoms up for top stocks because I can't help myself. And I use different tools to help me gauge what's working. So I want to introduce you to one indicator that you'll never find anywhere else. And then I want to show you how I use it for timing the market, finding stocks that are pulling back, my A trade. And we'll show you in the program that the internet gods of Marriott at the Tampa airport cooperate with me. Right now, they weren't cooperating before I came on. So a couple of my friends and I were giving a task by Ian about 20 years ago. And he said, go create an indicator that we can use as that would be such a good trending indicator that we could use it for market timing. So 5 of us spent months, we tested things, looked at different markets over time, and we created this thing called the bongo. I use the bongo many different ways, and I'm going to show you in charts, but it is a very simple indicator. It has an on switch and an off switch. When you turn it on, it will stay on until the off switch comes in. If it's off, it will stay off until the on switch. The switch is 2 things. It's a close, whether it's a daily or weekly bar, has to be above the 9 period, because I don't know if it's daily, weekly, monthly, hourly. It works at all of them. The close has to be above the 9 period simple moving average. And then if you look at the Wilder RSI and you plot 3 of them, an 8 period, a 14 period, and a 19 period, that defines the switch on. When you have that order and above the 9 the first time, it goes to a buy signal or it's on. To reverse it, it's not about stops or moving averages. To reverse it, both of these things have to occur. I now have to close below the 9 period simple moving average, and the RSIs reverse in order, where the 8 is above the 14, above the 19 to be long. It's below the 14, which is below the 19th to be short. Simple, simple, simple indicator. And for a long time, I used that as a timing model, but then I started paying attention to this person, Stan Weinstein, and I realized I could make it better. Now, Stan Weinstein talked a lot about stage analysis, and I'm just going to draw with my mouse. You start off flat, you can go like that for years, then you go into the move where the market, the stock's trading higher and higher, then you're consolidating, and then you come back down in a downtrend, and then you're back to where you started. And every instrument that I've ever traded has that tendency over time. And in an uptrend, you might not come all the way back, and then you'll start another turn up. So I wanted to be able to scan a group of stocks and find who are those stocks in that strong uptrend period that have broken out, and who are those stocks that are breaking down. Well, I use the bongo, because in an uptrend, the weekly bongo is going to be green. And in a uptrend, a strong uptrend, the daily bongo is going to be green. But when the market pulls back in an uptrend, the daily might turn red. And when it turns back to green is my trigger. So I can scan, and one of my scans is to look for weekly bongo is long, and the daily bongo has switched from short to long in the last, you pick how many, I usually use 9 bars. And I can do the same thing to identify stocks that are in a downtrend and pulling back. And here I'm looking for a retracement. And it's the weekly bongo says to be short, the daily bongo says you're short. And then when we start to retrace higher, the daily bongo switches to long. And when that long goes to short is when I get my trigger. So let me show you how I put this into use. Now, I wasn't kidding about the hotel internet. So I spent today making sure that I had a PowerPoint up to date with all of my timing slides. And so I'm going to go into that first. So obviously I'm in the program. I like to look at charts in the tabbed view, so because you can see a lot more. So all the charts that I'm going to show you are provided with my add-on. Some may be in the add-on, and some will require either Jeff to give me to send them to you, or if you reach out to me, I'm more than thrilled. So I'm going to start with the spider and show you how I've incorporated my timing model. And the nice thing about Metastock is we've hard-coded the signals. So from a repainting perspective, and that's always something you should ask, is it going to repaint? And if it says it's in a buy today, is it still going to show a buy on today's bar tomorrow? We only repaint until the bar closes. And you'll know the bar isn't closed because if there was a signal today, it would be a yellow bar. But once that bar turns red or green, it does not repaint. And that's important because how could you back test something that changes when it wants to change? So in the daily model, we have the bongo plotted here. So the green is when it's switch on or buy. Red is when it's in a sell. And this yellow line I got from Stan Weinstein's book. And that's a 30-period weighted moving average. And my rules are when the stock closes above the WMA and you have a green bongo, and this is from today, actually today the 20th. I can't even keep track. Yes, and the bar is closed because the market we're after it switched to green today. So the spider flipped to a buy today. Now you'll say, well, Jeff, there's way too many signals. You're right. I don't use this as my primary timing model. I'm going to show you what I use, and I'm not cheating. I'm going to pull up the weekly, and you're going to see maybe why I find it so exciting. Let's pull up the spider, and then I'm going to show you how I incorporate the daily and the weekly together. So let's do the same thing. Let's go into the tabbed, pull up the spider. If I am going to have a timing model that I can make money with, that timing model needs to stay long for a long period of time. If it's flip-flopping, like you saw in that daily chart, how do you even use it? Well, that's why my primary signal is going to come from the weekly chart. If you look closely, you could see that my timing model has been in a buy signal from November 10th of 2023 on the S&P. Does that mean I stomach pullbacks? No, it means that my dominant trend, my dominant signal is to be long. It means I'm not going short when the weekly is long. But what I may do is I may incorporate other signals, such as the daily. So when I look at the spider and I see no question I'm long, and I've been long for some time. And by the way, it's been a good time to be long, even though you had to deal with these pullbacks. If we look at where one of these pullbacks came in July of 2024, we switch back to the daily. Make sure I'm back to the daily. So if I went back to July of 24, which I think I can do that pretty quickly, I bet you there's a good chance I had a sell signal here. So how do I use those two? I look at the weight of the evidence. I look at the weekly, spider, Qs, diamonds, and Russell. I look at the daily on each of those four, and it's the weight of the evidence. If all four or three or four, the four weeklies tell me it's the right thing to do is to be long, but my dailies are turning red, that says I'm in a pullback in an uptrend. I don't know if that pullback is going to be so deep that the market starts to fall. So I filter myself. How do I filter myself? I start to raise cash. So over the last couple of weeks, we've been in a tougher market. I haven't gotten a short the market signal, but I have taken those signals, and I talk about them every night. I use them to either lighten up the number of positions, the sizes of the positions. I use puts to protect profits if I'm not ready to close out the position. And I raise cash. But when I get a buy signal, especially if I had all four, and they're not all four, that's the spider. But if all four of the dailies are long and all four of the weeklies are long, I'm probably adding margin because those are the periods of time where I make the most money. So if I flip the narrative and we're in a period of time where the weekly is short on all four, then I'm probably short the market. And every time we get a retracement, I probably add more to my shorts. So my direction is clearly defined by that weekly bond, the weekly trading system, which is the Bongo and the WMA, and the daily fine tune. So right now, as the market closed, on the daily, the spider turned long, the Russell is still in a sell. The diamonds have been holding up, but look at this. The diamonds, let's see where it ended up. It's got a yellow today. and it closed below the WMA. So the diamonds just went daily short, and the Qs have been short for days. Now, it's been okay to be short or to be out of the market. The Qs are weak. And when I look at the weekly, spiders are long. The Qs went short a couple weeks back. The diamonds have been great quite some time, since middle of 2025. And the Russell, which has been the leader, I'm not going to say it picked the bottom because it's a weekly thing. It's never going to pick the bottom. But had you gotten into the market when the weekly said go long, you would have been in the most of this run. So I always pay attention to the markets. So when I look at it, when I'm not demoing it, I'll probably look at this view, and it's very easy for me to say that when I did this in the morning with yesterday's end of day, that we were in a long in the spiders, we were in a long in the Russell, we are short the Qs, and we're long the diamonds. When I looked at the daily, you could see the last bar on all four were red, and we just turned red today on the diamond. So when I do my video this weekend and share it on my top-down trader to show people what I think, I'm going to tell them that, hey, the good news is the weeklies are still predominantly long, but the dailies tell me it's time to still be careful, and I will continue to hold a big cash position. In fact, last night, I talked about how several of my options positions would expire today, and I was just going to cash them out and let my cash grow. And there is a seasonality reason for that. As I mentioned, we're also in a tough seasonality time. And from what I remember from Desert Storm, the markets sell off on the rumor of war, and the markets went up when the rockets started firing. So maybe we pull back, we do something to Iran, and the markets will come back up. Now, this is from a different program. I just had these charts, and unfortunately, it doesn't paint the signals. But I can paint for myself. We crossed the WMA here in 2022. The bongo was green, and it kept me in a big run after a bear market. 2008 and 9, the same thing. The bongo went green right away. Took a while, but we crossed up here, and you captured much of the gain before you lost the signal. 2018, 2019, this is the one that kind of ended on Christmas Eve. And after Christmas, the market rallied. Same thing. It got me out before the market sold off, and that bongo got me back in. Now, you might say, well, you got out and got back in at the same place. It wasn't exactly, but I'm okay with that. What I don't want to do is ride the market down like it would have done here. In this, if I put the signals on, you'd find that you were out of the market, except for right here, you had a false signal. And then 2020, with COVID, the same thing happened. Sell signal, and would have gotten you out and prevented the damage. Now, what's interesting about each of these periods of time is that we had great rallies after we finished the bad markets. And the same thing happened this past year in April. Now, there are other tools that I use to fine tune. Life would be so easy if all I had to do was look at one line on 4 indexes and 2 time frames. So I like to complicate my life, not really, but Ian taught me about a lot of different signals. And the Hindenburg omen is an old wives' tale, but when it fires, I pay attention, because if you go back to the Great Depression, I'm not talking about the financial depression of 2007 and 8. I'm talking about 29. There's never been a big market correction without this signal firing. The buckets is something I teach during my mentoring of how overbought or oversold are we, looking at Bollinger Bands. I look at AD lines and divergence. There's a approach to looking at 13-week new high, new lows that is almost magic. Stocks in relationship to moving averages, and then a number of other Ian signals. Now, I've got this good friend who has his own tools. His name is Sager Nandy. And Sager has incorporated the tools that I use that I got from Ian. And so there are a number of other things. Now, I'd love to have these put into Metastock, and Jeff is looking into it. The challenge is that the way Sagar gets his is he takes the Metastock data, and then you have to run it through Fire and some specific formulas. And it works fine. And unless I can get him native signals, I use his. And these are the Hindenburg omens. And the point of part of why I raised cash here is the Hindenburg omens have been firing again. And again, in my longer mentoring periods, I'll spend a lot of time. Not only do these signals help me with tops, they help me with bottoms. And I put out a video April 7th, 2025. I put out videos almost every night. And I talked about how the bottom was in. And then I felt, boy, that's arrogant. So I put who knows if it is the bottom. And, we don't talk about our performance. I don't talk about my performance except on my own videos, because if I'm going to get in trouble for saying things, it should be my money, not Jeff's money that's at risk. But I will tell you, those numbers that I showed you from Ian's meetings, I reproduced them between April 7th. I almost hit the same numbers on a monthly basis. And for me, the best time to be long is when those markets turn. And what got me in were the bongos, the WMA, and those other names, signals that I teach that can be incorporated. I can do the same thing looking at sectors. Right now it's been easy. It's been materials, it's been industrials, it's been energy have been leading the market. Energy's up probably because of Iran. Oil's popped up. But a lot of this has been about data centers. So I will look at sectors with the same timing model. I look at Bitcoin, and I have found it a very useful tool to get me in at the right time. And I'm not going to open this up in the program, but here's industrials, obviously extremely strong. This is utilities, which weakened a little bit this week. But the big leaders here are right here is where is the name? Yeah, this is materials, this is industrials, and this is energy. And it got you in. Look at where the green line is on each of these, and would not that have not helped you in getting into the right place. I do other analysis. Let me talk a little bit about my charting tools, and then we'll jump into a little bit about the scanning and finding stocks. Let's look at market ETFs. So the timing model matters a lot to me, but I also like to look at with moving averages and other signals to help fine tune what I'm doing. So again, we'll tab it again, and I'll open up the spiders. We'll just talk about this one. So I've got a couple of indicators that I think are really cool. And in fact, this is the diamonds, and I'm going to leave it on the diamonds for a reason. Here's your bongos, your daily and the weekly. So this tells me I've been in a long-term weekly uptrend. I'm not going to argue with that. Here was a little pullback. And then right now I'm in a pullback on the daily. Okay. This is something that I learned some from Ian, and then I made it better. And this is what I call the high-low oscillator. It runs from plus 100 to minus 100. When somebody on CNBC says, this stock is extended, okay, what does that mean with math? So I put extension to math. So if we go back here to that ill-fated day here of April 7th, when I said the market had bottomed, what was my high jump? Minus 100. What that tells me is if I go back 200 bars, there has not been more extension to the downside than we saw on that day. And when I think of a rubber band, as that rubber band pulls further and further and you let go, what does that rubber band do? It snaps back. Well, that oscillator is my rubber band. I typically look at 17, 50, and 200-day moving averages. These are all simple. Now I've added a 21 EMA to some of my stocks, to my stock charts. And why have I done that? Because this guy named Mike Webster, who I think is really smart on investors.com, he uses one. It's a dumb reason, but it works for me. My dots, let me show you a little bit of my dots. I'm going to jump ahead on the charts. I wanted to make, I got a lot on my charts. I told you that before, but it's really so simple. If you, again, as I said earlier, don't overcomplicate. I told you about the trending, the high-low oscillator, my 3 moving averages, and then we get my dots. Oh, that's complicated. Why do I even have these dots? Because if I could put electrical tape and leads on your chest and your arms and your legs and tell you what's going on with your heart by looking at little wiggly things on a piece of paper, why can't I do the same thing and tell you what your stock is going to do? So this is what this strip is. It's my EKG for stocks. And it has a single candle reversal called a green candle low or red candle high, a Wilder PSAR, which I obviously did not invent. It has a squeeze, and my 3 green dots are when it comes out of the squeeze, because that to me is when it's going to move. And then I've got a number of what I call my impulses. The first one is momentum. The second one is breakout. The third one is volume. And then there's a fourth one, which is a big gap, which you can see over here, number 7. And then number 8 is called the EMS, which is an early movement signal. And how many of these are firing at a given time draws my BDIs to that chart. So if I run a scan and it shows me a pullback in an uptrend with 5 dots firing long, I want to look. Another secret weapon. I want to be buying things that are outperforming the market. I want to be selling things that are underperforming the market. I can tell you that right now, on the day that I took this picture, this is not now, it was back a while, that Credo was outperforming the market. How can I tell? Because the blue line is a ratio chart comparing whatever instrument I'm looking at versus the market, using the spider for the market. The yellow line is a moving average. So the fact that I've broken above that moving average tells me that the instrument is outperforming the spiders. This is on a daily. This here tells me on a weekly basis, it's been outperforming the spiders with a little bit of a pullback here, but still outperforming the spiders. And then the last one is on balance volume with a moving average as well. So my A trade is that pullback in an uptrend. I'll find a number of my dots firing. The high-low jump will be less than 80. I don't want to buy it if it's above 95. My relative strength is crossing over the moving average, and as is my volume. The weekly one's going to delay. And so I look at charts very quickly, and it's the right edge that tells me what's going on. And then I call these the supporting actors, but this relative strength versus the spider it's incredible how accurate it's been and how much it's worked for me. Now, I will share with Jeff the PowerPoint, or you can email me at marketmripro@gmail.com, because I describe what the other dots are and where they come from and what they mean to me. The high-low oscillator, I even give you the math if you want to create your own. And then we get to perhaps the main strength, or the special strength of Metastock, and it's the explorations. Unfortunately, I was running one when I started. My concern was that my bandwidth was so bad I cut it off. But I actually ran the scans when I was in my meeting earlier that had better internet, and I was looking for something that had momentum. And I have a signal that I call momentum in Metastock. I talk about it. I call it dual momentum signal. I have other platforms where I call it that. And when the double momentum dots fire at the same time, those are where some of my best winners have come from. So I actually scan, and this is the momentum dots. And you have in the handout, you'll see dot number 4 is momentum. So double momentum, and this also broke across a short-term trend line potential resistance, but it broke out. It bounced off of trend line support. The relative strength crossed over today. The volume crossed over. The weekly will probably cross over next week. And I actually took a position in this before the market closed. And one of the things I really love about Metastock is I can run the scan anytime I want. And so I run the scans if I'm at home or if I'm traveling like I am today at another financial meeting. I'll run the scans at 3:30 and try and front run what's going to happen on the next trading day. So just to quick review my scans, I meant the dual momentum bullish. When I ran it this on yesterday, because these are yesterday's close, there was a stock called Alumis. And here is the weekly uptrend, the daily pullback, and now it's reversing higher. So there's my pullback and uptrend. The high-low jump was 74. I can buy it. When I looked down here, I had all kinds of fun things. I had double momentum. I had breakout. I had volume. The EMS signal fired the day before. You can hardly see the blue there. Relative strength looks great. Relative strength weekly has been strong. OBV turned positive, and this was another one that I looked at today. How did I find it? I ran the momentum scan, double-clicked on up-down, and it comes right to the top. All right, if I was looking for a bearish trade and looking for a dual momentum breakdown, I ran that scan this morning, and I double-clicked on up-down. I brought up the -1, and I chose Brinker International. Now, it would have to break through the 200 for me to want to short it, but it's got the double momentum to the downside, breakdown 2 days in a row in a squeeze, and look at that, the relative strength and the volume broke down. I didn't short it because my dominant signal still says don't short. It's okay to short. I just prefer not to. And I didn't short it because it was sitting on the 200. Now you'll notice there's trend lines on the chart, something that Metastock put in for me that I don't have in any other platform like this. And I scan these trend lines. Well, before I get to that, here was the pullback and uptrend scan today. And again, it's that same, well, this is Herbalife. It's funny, I was talking about it a few days ago saying, boy, this one's setting up. I just hate the name because I have memory. And then they announced that some famous athlete just did a big investment in it and the stock took off today. But I ran the scan on data from yesterday, pulled back in an uptrend. I double clicked on dots to rank them by the number of dots. And what came to the top was Herbalife, and you could see what it ended up doing. And this one, I don't know what it did today, but that is a very, I mean, Morales and Katcher have a book. They used to work for O'Neill called The O'Neill Disciples and how they made like 5,000% return. But this is what they would have called a Bible gap up, which is a gap up that I might want to buy. And not only was it a gap, it fired all my signals, had a Wilder RSI reversal, squeeze, releasing, momentum, breakout, volume, and gaps. Now, because of time, I won't go through all of these, but I have printed out the scans and the results and the chart for every one of the ones that I looked at. A retracement and a downtrend could either bounce or break out. So this is let me make sure. All right, so this is the retracement and downtrend. I want to look at the next one. This is a long-term downtrend breakout. So here is a down-going trend line and a breakout. And this will stay for several days after it breaks out. I have a long-term downtrend bounce where instead of breaking out, it actually failed and came back down. So a number of scans, and the purpose of these scans are to help me identify instruments that are attractive. So one couple other things. So in the PowerPoint, which you're welcome to have, again, just email me and I'll be more than happy. I go through how this fits into my A-trade, what I'm looking for. And I just wanted to also point out that, again, I've been doing this for a long time. I want to go to this one. That if you purchase my tools or you don't, all right, and that's, you heard the second term. I support people. I want people to get what I got. I had a great mentor who made me better, and most of the things that Ian did for me, he didn't charge for his time. I don't charge for my time either. The only thing I charge for is the technology, because all of them have partners that have developed it for me. I'm a doc, not a programmer. And if I put on a live meeting and you're in person and eating food, I got to pay for the food. But I have the top-down trading group, which I mentioned. I have nightly videos. I offer people to attend support trainings on a monthly basis. I make market commentaries in the group and on YouTube almost every night. Quarterly, I'll do a training event for all products, whether you own them or not. 2 live seminars a year. And then I answer questions by email as much as I can. Why would I do that? Giving back is a big deal to me. I've been very fortunate in life, whether it's been in my trading, the business. When you meet a girl on a blind date, you propose 2 days later, and 41 years later, she's still the best thing that ever happened to you. That's good luck, and I'm being fortunate. So I've been fortunate in a lot of ways. So just to conclude, I found that top-down approach over the long term has worked best for me. My timing model, and again, I'll spend much more time in the mentoring sessions, is designed to capture most of a big move and keep me out of big downtrends. It's objective, it doesn't repaint, and you can go back as far as you want to review. The weekly guides my direction, the daily guides my level of commitment. With the dailies being short now, even with the weeklies long, my commitment is not very high. So I have raised cash. Of course, I still own my Micron and my SanDisk and my Seagate because right now they're hot. But I've closed a number of positions and my position sizes are smaller. The expirations are to help me find my setups. And once I've identified a list of charts, I look at them. I look at support and resistance to make sure that they're actionable trades. And then I decide what is the best approach. I love talking about options, but I'm not going to talk about it in the last 4 minutes. But email me. I'll send you my mentoring that I did in January if you want. And I did a discussion on the 4 or 5 option trades that I use. And you'll see my performance in it. And you can decide whether or not it's something you want to learn. And I don't trade against the major trend. That's a guaranteed way to lose. So I would have been happier to have done this not in lousy hotel internet land, hence why I did the charts. But it's combining a top-down approach with the market, a way to look at the sectors. One of the cool things about Metastock is when you do your exploration, I typically have a list of stocks that I've developed from some of Sager's work that I scan. But if it's during the day or night and I'm interested in a specific sector, the neat thing about Metastock and why it was so important for me, and we get this to the right place, to get my tools into this is, one, it's got outside the US, but somewhere in here, I'm going to find what I'm looking for, public online. There you go. I can go into sectors and industries, and if it looks like industrials are doing well right now, I could actually go in here and run my explorations against just the online 299 industrials. And I could run that relatively quickly and not have to scan the whole market. So I love the fact that I can drill down to the sector and that it's just a great data set. So any questions, Jeff? I covered as much as I possibly could cover. It only gave you 2 minutes. I apologize for that.
You're fine. Like I've got all weekend. We should do a bonus session.
There you go.
Patricia says, great point. Meta stock scanning for all day. Great advice for the QQQ weekly. Thank you. David says, is it possible to see your last year's mentoring?
Well, why would you want last year's when you can have last month's? Yeah, I mean, everything I have, I post on YouTube or the Top Down Trader group. So just email me with what you want. If you're trying to figure out what my performance was, it's in the January one. I will tell you that my best performances I ever get in the market are at turns. And I'm much better at turns off the bottom than turns off the top. And I spend, if you were to watch one of my YouTube videos, and to be very clear, I have 4 or 5 different platforms that my tools are in. So I don't know which one I'm using on a given day. I trade exactly the same way. So you might find Metastock, you might find one of the other tools. Each tool has its advantages and disadvantages. I spend most of my videos talking about the market and why I'm doing long or short and why I'm committed or not. And on April 7th, that was the whole video, why the bottom was in. And then I started buying Palantir and Robinhood, and I supercharged everything by buying options. And it was an amazing 4 months. It was a great year, but most of my return came between April and probably August. Still was going up some in October, but I love turns in the market. So if you want to see last year's, I got them.
Absolutely. Like, when the market's moving.
Yep.
That's all the questions we have. Jeff,
All
I
right.
want to say thank you for kind of finishing us up. Actually, one more popped in. Iqbal says, thank you, Jeff, Greg, team, all folks this whole week. Great session. Okay, let me go ahead and do this. I want to say thanks, Jeffrey. It was good to have you on today. Thanks for being with us. Thanks for finishing us up. I'm going to talk a little bit about the special you've allowed us to do on the market MRI.
All right, so you're going to kill my sharing, right?
What's that?
Did you kill my sharing?
I can do it. Yeah, watch.
All right.
It's this easy. Okay. So there we go. Thanks again, Jeff. Appreciate it.
Thank you.
What a great session. Okay, let's talk about market MRI. I'm going to go ahead and just kind of come in here. And okay. All right, for market MRI. I told you you'd like the top-down analysis that he does. Let me go ahead and kind of do here. He talked about the top-down analysis, the bongo, the framework, all of that kind of stuff. So let me just talk a little bit about, he talked about scanning. Again, I've been saying it all week long. I just love that ability to scan any market, anytime, get current results right now. It's very cool. The market MRI is normally $9.97, and it's worth twice that. We're going to give you this on a money-back guarantee, 30 days. It's an introductory price for the conference, $5.97 today. We'll throw in a Metastock trial for it as well. You can do that by going to metastock.com/marketMRI. If you have questions, you can call us 800-882-3040. You can also go to metastock.com/saleschat. Great product. I really like how it starts with a macro focus, allows you to kind of really kind of drill in to what you're doing. Appreciate Jeffrey Scott for kind of putting it together and pushing it and putting it together for us. As we've kind of finished this week, I feel like it's went really, really well. I want to thank everybody involved, the speakers especially, for coming in, sharing some time with us. Let me go ahead and send that to voicemail. The sponsors, Stocks and Commodities Magazine, and of course the Traders Forum. If you haven't joined the tradersforum.com, go ahead and do that. You for being here, and appreciate that. A big, huge thanks for being here, being part of the event. I hope it was helpful for you. I hope you learned something. And I especially want to thank all of those people that have used Metastock, have signed up for an account this week, have signed up for any of the other products. I really feel like if you sign up for Metastock, you're not going to regret it. The amount of tools that are available for just $75, it allows you to scan the markets, test ideas. It's got that patented forecaster that we showed you, system testing, the expert advisors, the commentary, the systems, all that stuff is included in one package where you can get for as low as $75 per month. So I encourage you to take advantage of the conference specials that we have. You can get started right now. Start playing with it over the weekend. If you do that, you'll be running until May 20th for $75. You can get all the specials that we talked about this week, metastock.com/conf promo. You can give us a call, 800-882-3040. You can go to metastock.com/sales chat and chat with us. Give it a go. There's a reason it's been rated #1 in its price category for 32 years in a row. So to everybody that set up an account, thank you. I appreciate it. To everybody that's been a customer, thank you. For everybody that's been here all week or parts of the week or watching the recording, thank you. And then that's all. Greg, what you doing?
I just want to say thank you, Jeff.
I knew you were going to say that. All right. In that case, with that in mind, thank you. Stay healthy. Stay well. Have a great weekend. I'll see you next time.